R. Shankar Raman, President, Whole-Time Director and CFO, Larsen & Toubro, and Mr. Sudipta Roy, Managing Director and CEO, L&T Finance, to inaugurate the RAISE event by unveiling the logo. Let's give these gentlemen a huge round of applause, please. All right, the question is, what do we do? What we do here, gentlemen, is that on the count of 3, which all of us will count together, we'll go 3, 2, 1. You are going to place your left hands on the glass in front of you. Yeah, left hand? Left hand. Yeah, so that's your right hand. All right, are you all ready? Oh my God. Do we need coffee in this room? Are you all ready? All right, let's go. 3, 2, 1. Place your left hand. Ladies and gentlemen, give it up for the logo. I think that applause needs to keep going. Come on, ladies and gentlemen, one more time. Thank you, gentlemen, for gracing the occasion, officially launching RAISE'24 event. Thank you, Mr. Raman and Mr. Roy. I would now request Mr. Subramanian to remain on the stage. Ladies and gentlemen, please put your hands together for Mr. S.N. Subramanian. Sir is going to be delivering on the topic of leveraging AI to realize India's Viksit Bharat Aspirations Vision 2047. Let's give him a big round of applause, please. Over to you, sir.
Where is it? Well, I'm supposed to speak with some paper, and that paper has disappeared. There's a lovely lady here snitched it away, swastika. Great to be here. Good morning to all of you. अरे यार उसको तो good morning ठीक से नहीं बोला, मेरे को तो बोलो. Good morning to all of you. Right, that's it. Good. Okay. Frankly, this is not my topic. I'm supposed to talk on something else much better. But then Sudipta, because I keep telling him to digital AI, decided that I'm the best guy for the topic. And therefore, here I am today. And good to be here as part of the RAISE'24, Reimagining Financial Services with AI. It's a great initiative by Sudipta that he decided to get on with this. I think the way L&T Finance has been transforming itself over the last few years brings it to a point where I'm extremely happy that it's taken the lead to be part of this process of reimagining the financial services with AI. Mr. Bansal, Mr. Nishi, Mr. Sitaraman, Mr. Thomas, Dinanath, and of course Shankar Raman, and all the other senior colleagues of mine who are here from L&T Finance, and all the other guests who have joined, lovely young boys and girls, and slightly older than boys and girls who are here. Pleasure to be standing in front of all of you. As all of you are aware, the world is changing fairly drastically. And some of it is in front of us, some of it is happening too fast that maybe we're not even aware. There's a human change which is occurring in terms of migration, movement of people from one continent to another, from one country to another. In some parts of India, migration has stopped also. People are not moving as they used to move because the economy is doing well. You get jobs where you are staying. The direct benefit transfers have played a big part. Certain other parts of the world are booming, like Middle East, especially Saudi Arabia. And therefore, you're not getting people in India for some of the works that we tend to do. There is also the sustainability factor, which is a huge change which is occurring. Some of it is visible, some of it is not. You saw the COP29 exercise yesterday. Some of it is beneficial in terms of $300 billion allocated, far below what the developing world wanted, but at least some movement forward on consensus. Everybody clapped there at least. Climate change has become an issue. EV vehicles have definitely become an issue, in the sense that it is much more prevalent than what it was earlier. And companies are competing to see who is selling more. A lot of actions on what to do about sustainability is coming into work quite slowly, with our knowledge, without our knowledge. There are many big contracts or projects coming where clauses are put on sustainability coefficients and values, and if you are not there up to it, you may not even be able to participate in it, or even may be eligible to take part in it. And these are very rapidly occurring, and norms are changing, the goalposts are shifting too fast. The third change which is occurring is the green revolution. I'm not sure how far it will go, but definitely it is happening, because the fuel is still not viable from many points of view, but who knows. Which is one, the green hydrogen, fuel cells, transportation of ammonia, lithium batteries, sodium batteries, and many of the things that we're hearing now. Wind energy was not a big, great word, but today there are gigawatts of wind energy being produced. Wind energy was predominantly onshore. Now you find huge wind energy plants coming up offshore. You find gas being used more relevantly. Suddenly you find nuclear getting revived in a very big fashion. It is a bad word after Chernobyl and 3 Mile and Fukushima. You find some burst of coal energy, but I think it's for a short while. You find gasification plants coming up. These are all massive changes very rapidly occurring. What it tells you is that if you're not in it, if you don't have the technology, you will get left behind. And these are facts of life. But the most important thing that we are assembled here today is to talk about the digital change which is occurring. And that's phenomenal, what little I have seen. I came up in the non-digital world predominantly in my life. But since about 15, 16, when I started getting involved with LTI and then LTI Mindtree and with L&T Technology Services, I was in the US for about a year. And since I didn't know much about IT at that time, and my boss at that time had told me that if at all you want to be at the apex of L&T, you better learn something about IT. I spent a lot of time understanding the subject. And since I didn't know much about it, only thing I could do was meet clients. And even during 15, 16, 16, 17, 17, 18, when I met the clients, this word digital was ever so often coming out. IoT, connected world, connected devices, all these were very often heard. And in front of my eyes, I saw the things changing, terrifically changing. And today, if you go into a meeting and if you are not having the services, ability, capability for such, and if you're not able to get into this, you're out. That's how much the world has transformed. There are IT companies and technology companies which are into it, which have gone far ahead. And there are IT and technology companies which are lost out because of this. And therefore, the world is reimagining itself too fast. And before that world got sort of moved on, you got into this world of artificial intelligence. It started small, not that it was not there before, data lake and analytical capability on that was very much there. But the way it has moved the last few years is simply unbelievable again. Really unbelievable. I think keeping all this in view, in our country also we decided to go through the digital path. And if you really get down into details, you find how advanced we are in many aspects compared even to many advanced countries. The vision shared by our Honorable Prime Minister during the Independence Day speech of 2021, where he said AI is just not artificial intelligence, but also hopefully would lead to an aspirational India, makes us think about this topic of AI in a totally different manner. The aim to promote a digital economy has really come into play. Whoever thought you go to buy a tomato or a lady's finger, you can pay through some mobile, and that person is willing to accept it. Mentally, I'm still not used to it, but that's the world today. Whoever thought you could sit in your house and press some buttons on some mobile and some tomato comes in with one gulab jamun or some packet? It's something which is inconceivable. Today, the only child in our house is our dog. And from across the world, my two sons and daughter-in-laws order something for that guy. And any package that comes, courier package that comes to the door, he rightfully thinks it is his, because most of the time it is for him. And that fellow's at the door barking, and even if it is for my wife, he demands that it be first given to him. I didn't know even the dog would get digital or artificial intelligence. That's the way the world is today. I'm still unable to come to a grasp with it, but that's the real world today, and we got to believe it and take it forward in that particular sense. Today morning, when I was coming for this, I said, beyond the notes that my EAs and others have given to me, let me ask ChatGPT for what do I talk on AI. I told it this is a topic called RAISE and Reimagining Financial Services, conducted by L&T Finance, and give me some few points. And that fellow called ChatGPT gave me some 20 points. 90% of it went like a boomerang bouncer above my head. But then, before my exercise, I tried to read it, and then while running on the treadmill, I put it on the on the tablet and tried to read it. And then after that, end of it, I asked, can you give me more sensible points? It gave me another 20 points. And so I felt all of this is above me, therefore I'm talking something which I can talk right now, because the world is totally flabbergasting from that point of view. I've been lucky that as part of L&T Finance now, Sudipta keeping in view my overheads, takes me to the villages and towns where L&T Finance is present. And it is unbelievably stunning to see the way digital has entered the society. A very low-income, normal lady has the ability to use a smartphone or a normal phone to not only digitally transact, but understand what is happening. There's no man sitting in front of her, no man sitting behind her. She's sitting with 4 or 5 other ladies, and she's able to digitally transact the loan that she wants, including intelligently understanding that what the computer does or what the network is doing is to know herself much better. She is willing to share her passbook, which is also highly digitalized. And it is simply stunning for me that this kind of transformation has taken place. When you go to sell a tractor, you put that guy's KYC inside, it goes to some bank server somewhere and comes back with all his details about his loan taking, loan giving, how many loans he has taken, blah, blah, blah. Of course, still human intelligence is used to give a loan or not, but it's getting processed, and in a short while, I think the AI capabilities will determine whether to give a loan or not. I think this is accelerating and beyond measure, the kind of the push of technology and where it can lead to. The rural-urban divide, this theory which many of us talk about, is rapidly getting bridged, because as much educated as we are, people there are equally educated, if not better, because of the use of technology. They have access to information, they have access to which finance company does what, which better, they have access to weather data, they have access to crop data, they have access to other intelligent sources of data, including how to get a better loan and such. And therefore, this is an astonishing world where if you are not ahead of the competition, or if you're not ahead of where you need to be, you tend to lose out. All this will also make people more lazy, because many things which are earlier done by some means are now going to be done by the phone or the internet. But that's the new world. Earlier days, when you tell children to go and play, at least when I was young, get out of the house and play cricket. Today, when you say go play cricket, they go to the internet and play cricket. That's the changing world. And there's now Dream 11 where you can bet, where you can through artificial intelligence, create cricketers, create different models, and be on with it. You get up in the morning, I read the newspapers, 2 fantastic newses today. I don't know how many of you read. First is that in the India index on AI is one of the largest in the world, and next to US, the maximum ecosystem of startups. And when you go deep into the paper and read, many of the names are not even pronounceable by me, but those are the kind of startups that are come into the ecosystem. The second is that NVIDIA has announced a new form of AI where they can modify voices, change voices, and make music, and so on and so forth. Of course, we sing the karaoke and modify voices without AI, but NVIDIA has found a better way of changing voices. That may be more acceptable tomorrow than our karaoke voices. The National Strategy for Artificial Intelligence and India AI program have also come into vogue. And the government has also allocated more than 10,000 crores towards AI. And I'm sure this will be towards startups and people interested in that part of it. This, what it does, it does make a remarkable shift from a traditional industrial agricultural mindset into the world of AI and digital mindset. Because that's what all this ecosystem will create. It's a game changer. And for a country like us, which massive divides of income, this is a true game changer, because what one has, somebody else will also be able to have an equal proportion, because it's all through the net and cloud. I thought I'll give you some examples of AI uses both within L&T and otherwise. Earlier today in the morning, Deborah might have told you about what fantastic use cases which is happening in L&T Finance itself. Today, when you go to give a loan, you make that person stand in front of his house, you take a photograph, and he's got AI algorithms behind him which can zoom beyond the guy back to his house to check whether he's got a microwave oven, whether he's got a refrigerator, whether he's got a TV set, he's got whatever, and to assess whether this guy is really worth giving a loan. I never thought that was possible, but a few months back he made a presentation to me, and I thought that was a really remarkable way of looking at income, disposable income, ability of a person to be aspiracious, ability of a person to buy many things, and that means he has bought those things and paid those loan backs, and that's why those things are still in his house. These are very, very innovative ways of using intelligence to look at how to propagate loan services. There are apps like Kisan AI which has come up, which is using large language models. It's not only store all kinds of farm and crop data, but also is able to talk on local languages. So one farmer can communicate to another farmer. He may speak in Hindi, another may speak in Bhojpuri or Telugu, and they're all able to communicate with it, to disseminate data, to understand data, to buy, sell, and to move forward things, including hiring of tractors, plowers, harvesters, whatever. These are remarkable things. On healthcare, many of you know that remarkable changes have occurred. Our own IT companies do fantastic things, like one of the examples is during COVID, you could put thousands of photographs of your lungs inside, and if you had at various stages of COVID, each can be bucketed in different buckets, and whenever, if you had a COVID or not, it could tell you what stage it is in, and appropriate treatment could be taken. Again, it's data lake, data analysis, and coming out with the right option for what solution. Today, for many, many things, you go to the doctor, these kind of analytics is used. In our own workshop at Hazira, the heavy engineering workshop, we do massive welding and some very critical weldings. And there's now one welder sitting in one booth and doing 6 weldings of huge overlays of huge circumferential caps, which is unimaginable. Earlier, one welder has to go and do it, and there would be two helpers to give him the flux and welds and whatever it is. Today, one welder sitting in an air-conditioned booth does 6 weldings. Frankly, he can sit in his house and do the welding. He need not even come to the office. Unimaginable. And he likes to sit in the air conditioning booth because Hazira, at the best of times in summer, is 45 degrees centigrade, and the shops are hot, whatever we do. And today, because he's sitting in an air conditioned booth, his productivity has gone up because he does not want to go home, because his office space is more air conditioned than the house space. And second, because he's using intelligence to do this welding today, he just sits and nods his head at whatever is happening. His tea comes in a trolley, his welding comes in a trolley. We are trying to make it robotic also. so frankly need not even get out of his booth. A remarkable change in a very age-old workshop. On top of it, there are small machines or bots running over the well on which data has been fed of thousands of wells and is able to go around the well, and these are diameters of 3 meters and 4 meters, to see the penetration of the well, the width of the well. It can look at the quality of the well and immediately say the well quality is good here, bad here, and immediate corrective actions can be taken. And it is able to say that because of artificial intelligence, because millions of data have been fed inside to correlate with whatever is happening, to check and come out with the right thing. Again, at least for me, it was not conceivable, though I am for technology, etc. I said do digital, but I didn't know they will do this form of digital also, and that's where it is today. So these are remarkably fantastic changes. And what's happening because of that, our weld, what you call as, they call it RTUT, the weld quality standards, is less than 0.08%, and 98% of the jobs are first time right, which is very, very difficult in welding. And that's how far technology takes you. And maybe it will improve even further over a period of time. There are other AI apps or small programs being launched where entire compliance, data analytics, rules, correlations, etc. can be done very normally. There are, as you know, retail artificial intelligence has come up, where as soon as a person enters a store, based on his background data, we call it user experience or customer experience, you can tell what he is likely to buy, what he wants to buy, and you lead him in some manner to the particular place where he has to buy it, and he buys what he has to buy. And these are in big stores in US and other places you see it, maybe in Indian stores also you see it, but these are fantastic things that are happening. I think I can go on with so much of thing out here. Another very important point which I'd like to mention is how data is also used to take care of safety and protecting the environment. You know this city called Prayagraj in UP, the confluence of 3 major rivers, the Ganga, Jamuna, and the mythical Saraswati. And every decade or so, there's a huge congregation of people. And sometimes, I think last time it was nearly 270 million people, that's the population of the United States, more or less, in just 3 months to take a dip in the holy waters. So the smart city part of L&T did a solutioning there by which you put normal cameras, through which you can, and these are edge-fed cameras, intelligent cameras, where you can know the people, of course, children getting separated from parents, pickpockets if it is happening. They even fed the photographs of the goons around that place, and they could be identified in the crowd. And one of the remarkable things they did, the entire crowd was moving towards a particular ghat for taking the dip, and that ghat was already overcrowded. And this was able to tell the police that this much amount of people going there can create a stampede, and therefore you move the crowd to the next ghat. Now this, in earlier times, through manual methods, was absolutely impossible to do. But with this kind of technology available today, both camera, edge cameras, artificial intelligence, and all that, it was possible to do this. And thereby you prevented a stampede and saved tons of life, huge amount of life. So these are crazy solutions that's possible through the use of artificial intelligence. I think this will continue to happen, and the world will propel us towards this particular direction. As I see it, and Mr. Bansal is giving a great example where the Reserve Bank of India is capturing data of citizens, their banking methods, their ability to bank well, and this is a process of democratization of such data by which good companies which are trying to improve their methods of functioning, reduce the risk, and do a better form of business, including treating the customers well, can have access to this kind of data to improve themselves from many points of view, including the risk factor that comes in dealing with such business. At some point of time, data sovereignty will come in. And one of the reasons why L&T entered the data center business is also to be part of that, because as an organization, we have believed that we need to be where the country is going, where the country is trying to grow, trying to put this emphasis on. And if data sovereignty becomes important, a national company like us being in the space makes a big difference. We also invested in a company which has got close ties with NVIDIA, got GPUs and HP 200s and Blackwells, etc., to house their GPUs in some of our cloud centers. And more than that, they also have some patented knowledge towards cloud services on the GPU. And I think that will come into work, because if tons of data has to be processed, gigabytes of data has to be processed, GPUs are the best way to go about it. And therefore, having invested in the cloud services, hopefully we have an edge in that space for some time to come. I think it is continuously thinking ahead, continuously being little ahead of times, continuously thinking of what else can you use this intelligence for, how fast can you definitely do the algorithms for it, how much can you benefit from it. The change outside is too rapid. You cannot have a wink of sleep. You cannot have a wink of satisfaction. Then you're gone in this space. Because somebody else comes out with something which is much better. And that's the world today. And therefore, if L&T Finance and companies like it has to be at the edge of technology, has to be ahead in their business, has to be relevant in their businesses, even let me put it that way, then they have to adapt to technology like human beings to air and fish to water. And they have to swim very, very fast or do the marathon extremely fast. There's no other way out of it. And if it is not there, you will fall down. As the saying goes, it is an aspirational country. It's an aspirational India. The economy is growing. There's a lot of positive feeling. There's a lot of good feeling. Things are being encouraged, not only within firms like L&T Finance, I guess, and many other firms too. And therefore, we have to take hold of this opportunity. Old people like me are trying to manage it, but with young people around us. But young people like you need to manage it with still some old people around you. That is the best. We are not very relevant for this, but some white hair matters at some time, so take it forward with that. I can only say that this is a very relevant topic today, RAISE'24 and reimagining the financial services with artificial intelligence. I'm really thankful for Sudipta and his entire team to have organized this function, which hopefully is a harbinger for many of these topics. And hopefully, as we go by year, it gets more prominent and more pedigreed people into this conference to address all of you, to make it more relevant, more important, and more sustainable. Thank you all very, very much. Good luck, the very best, great deliberations. Some lovely speakers are there after me. I'm probably the dumbest of the lot. And I think you will get to hear a lot more intelligent talk, a lot more relevant use cases, a lot more fantastic things that they have to tell you all about. Good luck, the very best. Jai Hind. God bless all of you.
Well, ladies and gentlemen, I genuinely believe that Mr. Subramanian deserves a louder and a bigger round of applause for his very interesting and inspiring words. It's initiatives like these that truly shape the future of innovation and excellence in our industry. And now, it's time for the next critical conversation of the day, making AI work for 1 billion Indians. It is my absolute honor to welcome to the stage a distinguished leader who is spearheading transformative change in India's financial landscape. Please welcome the Chief Executive Officer of Reserve Bank Innovation Hub, Mr. Rajesh Bansal. Ladies and gentlemen, let's give him a huge round of applause.
Thank you very much. Thanks, Sudipta and L&T Group for inviting me and sharing some of the thoughts of how AI can potentially change the way we transact. He gave lots of examples of the L&T group adopting AI in manufacturing. But the thing which I keep asking myself and my team keeps asking when we were set up about 3 years ago as the startup of the Reserve Bank of India, as I call it, that are we reinventing financial services for 1 billion people? And that is when Sudipta reached out to me for this talk. And I'm more than happy to share our views and my personal views on how potentially, AI can transform financial services for 1 billion Indians. So we are all aware that India has, one of the best ID rails, best payment rails, and digital rails. Have we reinvented financial services the way food delivery apps have? So I have a number of Gen Z. I think one of them, someone sitting here, she was telling me that when you order something at a hospital, what do they get? They also get a message from the delivery apps, hope you are doing well. It's a very, very small gesture, but it is happening. So it makes you feel good. It's not that they can do anything about it, but that's where we want to get to, right? So we are also aware that why AI potentially can offer much more to India, because we have such a complex country, right? The fact that we have not just the population size, but the fact that 424 indigenous languages. So even if we talk about 15 languages, the fact that am I able to access my financial services in Telugu or Tamil? Answer is largely no. There are some outlier apps which have that functionality. So if language becomes the biggest barrier, which is a complex thing in India, and obviously there is a 58% gap between urban and rural India in terms of internet penetration. There is a clear report on state of India's digital economy, and obviously 64% resides in rural India, which means their demands, their needs is very different from somebody staying in Bandra Kurla complex. But are we looking at that? That's not the topic that I am going to talk about. Let's look at some personas, 5 of them I deliberately put it up. Rural India, what are the challenges they face? Limited digital literacy and access to banking infrastructure. The brick and mortar banking infrastructure that exists is not available in 700,000 villages. But we want to serve 1 billion Indians through smarter channels using technology. So this is one big cohort. Are we serving them? I'll be very honest, not really. Because the government of India and the RBI, Pradhan Mantri Jan Dhan Yojana, some initiatives have been taking, but a lot of accounts don't even get used, forget about credit. Second is a nano enterprise. Nano enterprise basically looks at, there is no separate definition by the RBI or the government of India, but when I keep talking to Secretary MSME, he keeps saying, why do you bring up nano every time? I said, because you bring MSME as one bucket, which include a 5 crore loan and a 50,000 loan. Our focus, if you look at it, we have done a lot of study. What is a nano entrepreneur whose turnover is maybe 1 lakh a month, max? The guy, I joke with my team all the time, the guy below my office where most of my team goes for a sutta break, right? That's the person I'm talking about. Or where I buy my bhaji from. That's a nano entrepreneur, and estimates show there are about 40 million nano entrepreneurs. But they struggle access. Our studies show, and all of you know, before we came for this, I was talking to the senior leadership of L&T and also the chairman, is that microcredit is a challenge. So a loan of 20,000 or 50,000, is it easy for a nano entrepreneur? Potentially no, and most of them still borrow from family and friends at usurious interest rates, sometimes from money lenders. Women entrepreneurs. A lot of people that I speak to, in my 3 years as the founding CEO, I see, a lot of them say, why do women have different needs and wants? studies, secondary literature, secondary research, and our primary research clearly shows that a woman entrepreneur, my team was in Agra, Mathura, and Western UP doing a study. Their needs are very, very different because a lady who's selling cosmetics in rural Mathura, what does she need in terms of finance? We have not even gone to the level of understanding what she needs. Senior citizens, and you're talking about digital arrest being the norm. I was talking to the Chief Digital Officer, L&T Finance also, and he was talking about a fraud that he heard about. Mind you, my estimated that fraud happens every day at least to one person, and a huge amount. Governor RBI has been talking about what is the high percentage of mule account that got opened. And a lot of times, senior citizens get conned because they do not have the right tools to be able to understand what is the right message, what is the right call, and they struggle. And most of them, it was an OTP fraud. Now it's a different kind of fraud. They don't know where to go, and whether banking applications or financial applications might not offer. And mind you, as Mr. Zorini will agree, there was a time when 60-year-old was old, but nowadays 60 is not old. I mean, people keep working, and in my generation, from the 1990s, as we saw liberalization, incomes have gone up. So the fact is they are more susceptible. What we would do frauding my dad 20 or 30 years back, he didn't even have enough money in his account. But you hear about it, ex-RBI, serving RBI, senior people, a senior lawyer in Kerala, people are just losing money all the time. Urban youth. Coming to urban youth, which, again, we are doing a big study on Gen Z to understand what does Gen Z want in finance. And the fact is, if we do not serve the Gen Z the way they want, how they want, and when they want, then I'm sorry to say financial services, or traditionally called banking, will be history. Because they are the future. They are where we were 10, 15 years ago. They are the ones who are going to, earn, their income levels will be higher. And most of them need a financial services the way they can order a gulab jamun, as he said. Or get a customized, I'll take an example of a music app. When it's raining in Mumbai, what is the recommendation that you get on a Sunday morning on your music app? That's what Gen Z wants. I mean, I'm trying to learn, as Mr. Zorini said, that adapting to change. There's some personas I thought we'll bring it, so billion aspirations. So what can AI do potentially to solve for some of these personas is what I brought up. Voice-based interfaces in local languages. That's what rural India needs. It means I should be able to call L&T Finance in Telugu and say, through an AI-enabled bot, will give me all the answers that I need to say I want to buy a tractor, what is the interest rate, how much do I have to repay, in a simplified format which is easy for me to consume. Not what is easy for an urban Indian to consume. That is the potential. If they have a question on tractor finance after they availed it, can they just type out on their smartphone in Tamil, Telugu, Malayalam, and Bangla and Odia that, look, I have this problem. My interest rates have gone up. Or what is the total balance that I have? This is the kind of grievance that I have. It should be possible to do all of that leveraging AI. So our study, my research team did a study across banks, to be honest, not including NBFCs such as yours. It showed that 80 to 90% of banks, unfortunately, are very excited about AI, are very keen to do stuff, but they're still in the wait and watch because of a number of reasons, including the fact that, we discovered that data warehouse to data lake, that was an interesting thing we discovered about 1.5 years ago, that all the chief digital officers were keen. Then they finally, after 2 hours of discussion, came to the point, sir, unless we move to a data lake, we cannot even do this. Like, okay, so we are getting there. I suppose L&T Finance is already in data lake, as I heard from Mr. Subramaniam. Nano enterprises, automated credit processing. In fact, there are various estimates of at least about 50 million merchants who accept UPI. That data exists. Can we potentially serve them and give them a loan of 5,000 rupees or of 50,000 rupees? My favorite example is, you go to a shop, a small kirana shop, that person has a phone, and she just moves the phone around in the morning, which establishes how many toothpaste I have, how many surf I have in my shop. Next day again she does it. It will tell you what is my sales for the day using smart AI apps. That's all doable. AI can do all of that and more. So some of the examples, predictive analytics for cash flow forecasting, that is also possible. Let's look at women entrepreneurs. What do they need? This is our research which has shown they need networking and mentorship platforms. And they obviously need tailored products which can serve the needs, because they might not have regular monthly income. They might want flexible repayment options. So a study also shows, do we have flexible repayment? Not that I know of. Can I, the way I do my playlist, can I tailor my financial product, my loan, on a daily or a weekly or a monthly payment? Unfortunately, no. But AI and the India's digital rails, the premium that we have, we can do it. So senior citizens. One of the things is, if I am conned by a digital arrest, the most talked about one, is the Honorable PM also spoke about. The fact is, today AI enables financial service providers, mainly the banks who keep deposits, to be able to check frauds in near real time. A study again shows, Parul, our head of data science, is here, the fact that 90% of banking system in the country, unfortunately, uses rule-based engines, which means it will take a few weeks for you to detect whether it is actually a mule account before you can stop the transaction. But AI enables you to do much smarter, so that near instant you can do this. I want to advertise, but we have a pilot project called mulehunter.ai, where it is showing excellent results leveraging AI. Right? Urban youth, personalized financial planning tools. So you've been reading a lot about how urban youth is mostly, and not just urban, tier 2, tier 3, is into investing in a big way. It's no more my generation where FD is the first port of call. Their take is, I want to invest and make tons of money, fair enough. But our AI can enable them, enable us to provide them personalized, tailored, or rather call it hyper-personalized services which is possible. Urban youth, these are some of the examples. So what's next for AI in 2030? I'm not even looking at a 2040 scenario. We can all get this done by 2030. Hassle-free onboarding. KYC is one of the biggest challenges that the entire financial sector works on. As part of the founding team of Aadhaar, the fact is India became the leader in setting up a digital KYC. You can, through OTP or a fingerprint, instantly open any financial account, right? Using Aadhaar face match, you're doing a pilot with UIDI, can we enable, using a standard protocol of UIDI, instant account opening? And the most important thing is with no agent in the middle. So you're working on that. The phase 2 is unassisted video KYC. I just open my phone and instantly an account gets opened, video KYC. With UIDI and AI is possible to catch deep fakes and everything. Obviously, AI-powered credit dispersal. So I'll give you an example of gig workers. We launch a project where gig worker data is not unlocked. It is available only with the food delivery app or the ride-hailing apps. We have unlocked that data, and there are a couple of NBFCs who are piloting this to give an instant loan. And they tell us initial findings that out of 10 loans that they give using gig worker data from the major ride-hailing apps, they would have refused 90% of loans because they did not have any data. Fact is, they know that this fellow is driving for these 3 platforms, is earning so much money, has had these many accidents, blah, 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 about 15, 20 parameters, they are able to give a loan. Obviously, we have spoken about frauds and hyper-personalized financial ecosystem. My favorite example is a bank with a large private bank. It's funny, I've been using that app for 15 years. Invariably, they tell me, do you want a loan of 10 lakh rupees? I fail to wonder, have you checked my average balance? Not that I keep 10 lakh, but whatever. Have you checked other assets that I have with you? My demat account is also with them. They keep sending the same message. So is this what, I really wonder what these banks are doing or what a lot of financial services are doing. I wish when I log in onto the app, I straddle between, doing Gen Z and old school. So sometimes I had not put auto pay. Although I was keen, I was the one who played a key role in starting ECS and ACH. So on the first, there are 4 to 5 transactions which I do by 5 transactions. Why can't my app or financial services, when I log in, it can say you want to do these 5 things, select, and instantly it's done. What is stopping us from doing it? Because it doesn't even actually need AI. AI is too far in the future. But one more use case I want to tell you is, imagine if regulations were issued in machine-readable form. What we had coined a term MRQ, machine-readable regulations for regulated entities. We are still trying to figure out if the regulators issues guidelines in a way that you can consume automatically and you can actually check with your other policy guidelines what needs to be changed or what needs to be done. Other important case is, imagine if you were able to use Gen AI with near zero hallucination to figure out, I don't know, so how many branches do you have? 2,000. 2,000 branches. In the field, you recruit a new person and somebody comes and asks for a tractor loan, what is the process? How does that person know? You might provide good training, but using great Gen AI tools, your person can answer perfectly, near perfect. This is what we give, this is what you need to give, this is the rules of L&T Finance, and that is what is possible, right? So everything is possible. Obviously, we know that data privacy as the total, exposure of the system. If you are using a Gen AI, the total exposure of the banking system increases, the total exposure obviously increases. We'll have to guard against data privacy. Good thing is the PDP Act is done and the rules will be issued very shortly. Bias and inclusivity. I'm sure you've heard a lot about it. I wish I could have come to you with an actual pilot that we were trying to do. But imagine there's a lady who's 30 years old and a man who's 30 years old with same education, same experience, same income. Have we tried to see whether the chances of the lady's loan getting rejected are high? 100% yes. Why? Because our models are all trained on past data. So maybe 80% of people who took a loan were male. So we would presume our model would predict, no. So what if the income is same? You should not give a loan because the model predicts that this is. So can we do something in terms of transparency? Yes, at the national level, at the regulator level, the things will happen. But we should take the first step and actually bring transparency to ensure that the AI models that we use for credit underwriting are taking care of bias. Now, one of the things is job reskilling. I face a challenge every time to hire a data scientist. And again, we are an RBI company, not the RBI pay scales, but still. I'm sure L&T Finance has no issue. But the overall number of people trained within the company or retrained within the company itself. And as I see, not a lot of emphasis is placed on reskilling. So as I tell some of the banks, maybe you should have a target every year, reskill 20% of people on AI so that AI is not some rocket science and they don't go to Coursera, etc. to figure out. And the example is of EU at a country level. EU decided about 3 years back, 1% of adults will be trained on AI. So at a company level, at a national level, we need to actually train rather than usual STEM engineers. So accelerating, one of the couple of examples I have is public digital infrastructure. Why there is a need just because it's a fashionable term? No. We work with number of fintechs. The fact is, where do they get their data to train the model? The data most of them use is from Singapore or from US. Now, the consumer behavior is not the same in India as that in Singapore or US. So can we consider creating a public digital infrastructure in financial sector where sample data is available for fintechs to actually reinvent and build models? So kind of a marketplace or a Hugging Face equivalent, not a marketplace, actually it could be a marketplace, where data is available across, let's say, 100 entities, and some models also, open source models available, so that we can actually get there, otherwise, maybe it'll just remain a dream till we do something like, obviously, simplified regulations, skill I've already sold, safe testing ground. It needs to be provided, as we said, pilot in your, UAT environment. You have to actually run through multiple use cases, because India has, various socioeconomic segments, that your model should not reject a loan because of A, B, C, especially gender and other economic, social factors. So with this, I'll just come to an end. I can see that together we can make AI work for 1 billion Indians, and it's not just technological. It's the way solution for the people. Imagine if every person in India can access finance in a seamless manner, which can be possible only through AI. So AI, we have to consider it as a bridge and not create a barrier, as sometimes digital has been created as a barrier. So enabler, and by prioritizing user needs, so we can all get there, and in few years down the line, we'll see that access to finance and RAISE is a great platform to bring all of this together. With this, thank you so much. Thank you.
Mr. Bansal, I would request you to kindly remain on stage. Thank you for your enlightening words. Your insights on the delicate balance between innovation and compliance are invaluable for sustainable growth. Sir, well, Mr. Sudipta Roy is already here. Ladies and gentlemen, let's give them a big round of applause as Mr. Roy presents Mr. Bansal with a memento. You see, his picture is going to be clicked, so you're going to give him a bigger round of applause for a bigger smile. Thank you so much, gentlemen. You may now take your seats. Ladies and gentlemen, our next session promises to be both insightful and forward-thinking. We are privileged to have with us Dr. Shuki Idan, Chief Scientist at SCB Data X. Dr. Idan is a globally renowned expert in AI and data science with a career marked by groundbreaking research and practical application in the financial sector. Ladies and gentlemen, with a very, very big round of applause, let's welcome on stage Dr. Shuki Idan.
Can I have the clicker? Okay, so my name is Shuki Idan. I'm Israeli, but during the last 5 years, I've been based out of Thailand. 3 years ago, I got a call from a CEO of a bank. It's the SCB Bank, Siam Commercial Bank. It's the oldest bank of Thailand since 1905. We are a public company, but the majority owned still by the king. And the CEO told me, we want to change. We want to change from a bank to be a fintech group. And you know, I talked to many, not many, but some CEOs, bank CEOs in my life, and most of them talked about technology, about AI, about transformation, but not many of them ever did something about it, because doing such a change is a risk, and this person is and was bold, and you know, I said, okay, so what about me? Why you talk to me? He said, you know, we believe that data and AI will be the engine of this new transformation, and I want you as part of the team. And we are talking 3 years ago, a bit more in fact. So this was before Gen AI, before ChatGPT, which happened more than a year later. And I want to talk a bit about how to do it, and you know, where did I lose my hair, in fact. So we are talking about AI in a very exciting words, but I will try also to put some kind of grain of salt on challenges, on where we are going forward. Hopefully, you know, you will learn from what I learned myself. So I will talk a bit about my AI journey, which is very long, but I will do it shortly. Then talk a bit about the motivation, why a bank wants to be a fintech group in Thailand. I know that Thailand today is about 70 million persons, so it's a completely different scale of magnitude, but I think that we share a lot of, or the population shares a lot of the common of, you know, access to finance. So we'll tell about the motivation, then I will talk about the challenges and some ways we found that were effective to solve them. And then I will talk about how do I see, you know, the future and the challenges in front of us. So I'm very old, so this is my career. But I wanted to put on my career, in fact, 4 big disruptions that change the customer life. The first one is the PC, which happened with the first IBM PC going to the market. Again, computers existed since the late 40s, but when IBM came with the PC and this technology was accessible to people, it made a disruption. You know, the old people of you, you know, were working with papers, with typewriters, with people getting commands, and suddenly, you know, the computer was in our hands. The next thing that happened is, sorry. The next thing that happened is internet and mobility. So we had computers, we could store our data. The next thing that was missing was communication. So internet came, mobile phones came, but mobiles, you know, had to wait some 10 years to become smartphone. And now we are talking about AI, and in each one of these changes, we could not really imagine, you know, how it will impact our lives. So we need to be humble. We are excited, but still things to see. We can see that every 12 to 15 years there is such disruption. And the key thing is that when the thing is accessible, AI is, since the late 60s, is on the table, but until someone gave you a chat GPT that you can give a prompt and get something, it was science, it existed, it was powerful, but not there. So just in a brief about myself, I started my journey somewhere in '87. I went by mistake to listen to a seminar in Jerusalem. I was a master's degree student still in the army, and then those guys talked about neural networks. It was a combination of hallucinating people, one biologist, one physicist, one mathematics, and this thing, excited me because, I was a computer science guy, and suddenly think about, how my brain functions. So I decided to go there. It was just, in fact, before the second winter of AI, but never mind. Then my PhD was, in fact, on pattern recognition, things that are today like toy games for data scientists, because the main thing that happened, that was here, we didn't have data. And we needed all those transformation of getting Facebook and getting videos and getting photos. All those things, were necessary, but they did not exist at that time. The second thing that was necessary was compute power. So NVIDIA was born over here, and the cloud was also born around this time. So people understood that, it doesn't need to happen on your machine, it can happen somewhere else. And AWS came later. So this was the second component that was missing and came in. The third one is the open source. In my time, people, when they got a task, they had to program. Today, they go first to the internet and look for code to cut and paste, or nowadays they will use a co-pilot and ask him to write the code for them. So these key things were missing, and now we have them. And the other things that happened was on the capabilities, because over here we could not build complex model. We didn't have enough data, so we cannot build a big model. Now that we have compute and we have data, we could process a lot of things. And really the disruption happened here in 2016. There is a real competition in a conference, which is called ICPR, to analyze images. And this was the first time that a computer could analyze images better than human. And the second thing happened here after attention model, etc., but I will not go into it. So I will focus on this part of my career, which is SCB DataX. Just a remark before the AI storm, which started in 2022 with ChatGPT, in fact, all those barriers of recognizing object, understanding speech, translating, all those were achieved by a machine, and it in fact gave justification for what we call AI to be called AI. Before we were too humble to do it, because AI is something, the definition of AI is if you sit and you have a curtain and you don't know what's behind the curtain, and you exchange information and you cannot decide if there is a guy behind the curtain or machine, and if there is a machine, this machine is an AI. It can imitate a person, and this happened. So going back to the transformation of the bank to a fintech group, the first motivation was to look around and to see that there are all those fintech that coming, they are more agile, they are in some cases even avoiding part of the regulation. they're coming into your market. They're equipped with technology, with agility, and a bank is still a profitable business, and it will stay a profitable business for many years. But growth will not come if the mindset and the way we work change. The second thing was also it was the late days of COVID. The poor population was hit more than the wealthiest one, and this population required financing in the same way that you're talking here in India. Still, a bank is under regulation, has a very conservative risk appetite, and it could not do it by itself. It needed to spin off some businesses, to start new businesses in order to take more risk in a different way. And last but not least is concern about the environment, the population, the good of society, which is a business opportunity, but also something that we felt we need to invest in. So the three things that we look at is to go beyond banking, not to do just banking, to be customer focused, and also we are talking about things which are more general, not just Thailand, and there are different plans to go beyond, and some of them are executed already, so there is the financial side is behind it. The translation was to 5 strategic themes. First is to make a better bank, to make it digital more, to have better loan books, etc. The second pillar is, in fact, creating all kinds of companies that will give financial services, and many of them are doing loans. So each one has his own flavor. We are talking about auto loans in similar ways, like here, you come with a motorcycle or with your car to a branch, you get an evaluation, you get some loan offer based on this evaluation, and you have to leave your title in the shop and walk away with the money. We have companies that ask you to download the application to your mobile to get the loan and ask you for permission to look around. So they will look if you have astrology application, if you have gambling application, they can look in your contacts, and then they will decide, what is the risk with you, et cetera, et cetera, et cetera. We have even a company which is called AlphaX, which is for the rich population. You can get a loan to buy a Porsche or to buy a yacht or whatever. The third pillar is the thing which is more, let's say, innovative or forward-looking. So there is a part that is looking into commerce, marketplaces, partnership with other vendors of selling, using points, etc. There is companies that are dealing with blockchain, Bitcoin. There is a venture arm that invests money in companies. AI is one of the key investment. And there is the climate tech, and which I will not touch much on this discussion. Supporting all this, there are 2 key companies. One is TechX, which enables all those startups to grow, enables them to not to hire technological people. You need to build something, I will build it for you. You need to run something, I will run it for you. And last but not least is DataX, which is the company I started. And DataX is the data and AI company, which I will talk more later. So the envision was to really to be AI first organization, a group. And the ambition was to, in 4 years, to create 75% of our revenue AI enabled. Okay, so this was put to all those CEOs in front of them and as a KPI. So do whatever you want, but it will be part of your bonus. And there were some stages in between. Now, in order to succeed, one thing was to create a good data foundation. This is DataX. We also felt that we need some strong partners. So we are Microsoft, is a big partner of us. We are the biggest Microsoft customer in Thailand. Databricks is the same, and we have few others. Again, we needed them. We need to make a bet on those partners, to get supported and to invest in our technology. The third pillar is doing research by our own, because it was even pre the Gen AI thing, and we understood that if we don't have our own research, we need it for being localized for Thailand on one hand. On the other hand, we need to be on top of things, otherwise we will be lagging. Examples of that, we have a long partnership with Stanford University. So we are doing research with them, for example, on hallucinations and other things. The other thing I wanted to mention is Typhoon. Typhoon is, we built our own LLM. So we started by really building LLM from scratch. It was before the Gen AI explosion. But the need was because our language is different. Text in Thai doesn't have spaces. So the tokenizers of the conventional LLMs will not know how to split it and to create the tokens. And we were experimenting with the first versions of OpenAI. Normally, a token is a word in English. In our case, it was 2 tokens per letter, because you didn't know how to do it. So for sure, it was not good, but also too expensive. We cannot use it because you pay by token, so we did our own. And other things, we have an AI literacy program. Each one of us, from the teller to the CEO, needs to pass AI course, and it's a plan that over a few years, but 5% of my yearly evaluation is yes or no. You finished your courses, you have certification, and this is, you have to do it, you have to understand. If you are an expert, you can go immediately to the test. If not, you have to learn. And then we created some kinds of a champions program that are doing experiments. Each department in an organization of 30,000 people have champions, and they have to come once a week and show what they did. So this is the enforcing for things to happen. This is the mission. I will skip it for now. And maybe, let me see if I can... there is a video here. Can you click it? Never, no. There is a video, but about the company and how we created. At the end of the day, we have today a core data and AI platform. It's 6.5 petabyte. I don't know how big is it for India, but if you take the biggest library in the world of the Congress and you put it on disk, it will be 3 times bigger than what we have. And the different companies, in fact, around us, each one of them get his lake, his data warehouse, his data science environment. So each one has his own private area. But one of the things that was behind all this transformation is to be able to share data. So there is also a place where we merge this data and we share, insight on top of the data. So I will skip that because the guy before us talked about it. I will move to the challenges in doing that. First challenge is data sharing and monetization. So the companies that had a lot of data didn't want to share it, or they said, I worked very hard to obtain this data, what do I get from it? Second thing is legal and compliance. I don't know how the law in India, but 6 months after we started the company, there was a PDPA Act in Thailand by the Bank of Thailand. It's based on the GDPR. The main difference is that in Thailand, it's not just fines, it's also, you can go to jail, but hopefully we will not get there. So privacy became a big thing. And this was something that, we want to share information, but we need to hide the private information when we share it back to those that don't own it. We need to make sure that everyone that gets into contact with each one of those companies give consent to use this data. Collaboration and adoption, again, you may feel it in one organization, but we have now 20 companies. Each one has people, business owners. Many of them have data scientists because, the bank is there with data science for many years. And the question is, how to create synergy, how to make people want to really to be part of this transformation. The next one is processes. Processes cannot stay the same. When you want to launch a model in a bank, you have like an MRM process, model risk management process. You have to come with your Excels, show that you studied the model. If there is an error of this amount, this will be the impact or loss. It can take between 2 months to 6 months to pass this process, going back and forth, bringing more numbers. This, if you want to be agile, you cannot work with that, and this needed to change. Tech and innovation, we had the challenge of building a platform that can serve all kinds of companies. One is a bank with 25,000 people, another one is a startup of 10 people. So how do we do it in a scale, an economic way? Last but not least is culture. Thai people are shy. Thai people don't like to fail. Okay, so, I had cases in my previous work in Thailand that a guy resigned and we didn't understand why. And in fact, he got some task, he couldn't do it. He was too shy to go to someone superior to say, it's not working, can you help me? It's a matter of culture. There a lot of distance, a lot of relationship with the manager is telling you what to do and then blaming you if it did not work. So this, of course, cannot work with AI. AI is all about failing. You build something, it works in some way, you want to improve it, and it's a cycle, and you need to fail. If you didn't fail, probably it didn't work yesterday. So some of the things that we did is, for the data sharing, in fact, the only way we went through a lot of discussion of, what is the value of data? If I give you this data, is it the same value of this data? Some data is worth more money or less money. We couldn't come to an agreement between 20 CEOs, so at the end, the group take ownership and said, your data is my data. You give it, and that's it. So it needs to be imposed. Then people came with saying, this is my secret source. I created scores. I don't want to share it because the other guy is also giving loans. We are competing with each other. Or I have this contract with another company, and it says that the data is not to be shared. So a lot of legal complications that were brought up by those that didn't want to share data. And again, the approach was blacklist. If you don't want to share, you need to come with your claim to a committee. We created a CEO-level governance committee to solve all these problems. It became a huge problem that I think people did not think about it before the transformation. And last but not least was to create really a data governance across the group. because we are collecting the information, new information is being created. So we did a big project with the Informatica, and in fact, we deployed the same tool across the whole group. We took the ownership, and now if something happens in one company, and we know about it, and everything is documented, automated, etc. For the legal, again, the group had to take initiative and to step in, and because we started as a startup, we are now 300 people, but we started as 50, and we could not deal with the legal of the bank and credit card company, etc. So the group stepped in. We had to set up a very large risk unit. Again, it's not just privacy, it's also security, it's also model risk. So, when I was depicting to the CEO my idea how to create this company, I came from the tech industry, and I put 3 people on risk because I know that there is such thing that is called risk. Today, I think the number is more of 40 plus, so I learned something. The technology side of, we also look for doing things that can help us with the law. So on one hand, we are doing a lot of anonymization, so I can use data, anonymized data, in order to learn from data coming from different sources. And we also did a lot of innovation. We do, for example, something that is called federated learning. So let's say that 2 companies has a credit risk model. We in fact, build a third one on top of there and then share it back to them, so each one of them have a better model by itself. So we use their credit models in order to create a better credit model in using more data. Next is about collaboration and adoption. So one strong thing was that the group said, it's your KPI to show me that you use AI. So this was really enforcement. We had to identify also common pain points across companies to solve them. So for example, many of them are lending, so collection was the biggest pain point of some of them. So, we went focusing on things that can serve many of the companies. We created an innovation lab, a place where people can come with their problems and they get free service to solve them. So they get our data scientists, designers, and they can come ideate and solve their problems. We did a lot of POCs, free of charge to them, and we created the communities across the group. And also we are creating competition. We have AI battles. The companies come to this battle with their innovation, and it's being recognized. For processes, I will skip it. It's a long story. Tech, we decided to be cloud only from the first place. We are, as I said, the biggest clients of Microsoft Azure. We were able to create a modular architecture that can be scaled, but also you could select, say, I'm not interested in this component or that component. This was a big effort. Our approach was to buy, not to build. Although, the big SIs we worked were not there, but we had to stop them on many cases. We invest in AI for good. So we are looking at things which are outside our scope, like predicting floods, which is not directly to us, but we have the capability to do it. And last but not least, about culture. So I try to impose diversity by recruiting expats. It's not easy. On the other hand, in order to break this line of reporting, we created a very flat organization. We have just 3 levels. You have staff, you have manager, and you have executive, and that's it. And a lot of the things that needed tooling, in fact, because the culture is not transparent. So you don't know where things are not there. So we had really to engage, we deployed the Monday.com, which is and everyone needs to, at the end of the day, we know what happened everywhere. And of course, last but not least, is to do experimentation so people will learn that they should fail. And you come to a meeting, you should say what you experimented. If you didn't experiment, this is your failure. If you did and it didn't work, that's okay. Some of the examples of things we do, so a lot around lending, similar to what we had here. We are a big users of Microsoft Copilot. So we are doing a lot of projects with Copilots, and software development is really one of the key ones. So having a coding assistant. We have all kinds of projects around customers and employee service. You know, service is the natural things for bots, but we are doing things to support our employees. For example, if I had some questions about HR, I get it from a bot. If I'm an investment agent, I get advice from a bot about things that may be relevant to my investment client. And we are doing things also around audit. For example, the company that is giving auto loans, all the calls are being recorded and all the discussions. And the regulator came and said, you have to check each one of them that 7 things were said. This is the amount, this is the monthly return, it's revolving. There are 7 things that need to be mentioned. AI can do it. So we are taking the voice, translating it to text, and then the AI goes on those calls and say, this is compliant, this is not compliant, and the non-compliant get verified. So a few words about what next, and again, some of it is my personal view. One thing is we need to invest dearly in security. I will not go into this diagram, but there are about 10,000 AIs over there on the web. And the numbers is growing every day by hundreds, and it will keep growing. Now, we want to enable each of our employees to benefit from that, but this comes with a risk. So protecting the browser of our employees is something that we need to do, again, to secure innovation, not to block everything. You know, the basic security will say, OpenAI, don't use it because you may upload information asking for analysis, whatever. Second thing is developers. Developers are also using AIs in their copilots or using it in their application now. We need to protect them. And at the end of the day, we need to protect the application itself, you know, from jailbreak, from discussion which are not appropriate. So this is it's a big thing. There is a lot, you know, the bad guys are always in front of us. We have to chase them. So we are investing a lot in that. And what else? So the adoption, of course, we build many things, but adoption is still not as much as we want. And our plan is also to go outside the group, so provide some of our services and capabilities outside the group. Trustworthy AI, which include security, bias, and all the things that the previous person discussed about, is another area where we need to act as the one that serves a fintech group. And the other one is the agentic AI that everybody talks about. So in fact, until now, we discuss with some kind of a bot. We ask to get information, we get it back. The next thing that will happen is that these bots will go and do something, and they will be proactive. And they will meet on the other side other bots, and they need to negotiate. And they will go into different APIs. So it's something to work on, but also to be careful about it. And of course, where do I get the data that will make my thing differentiate, or what? And data is important, and data also becomes more and more hard to get because of privacy, because of all those laws that try to protect the consumer. And we had many of those collaborations when at the end we could say, no, we could not do it because of that. Before I finished, where we are with the intelligence, people say that, soon the artificial intelligence will be like us. What you see on the left is there is this website that you can go and check. They do IQ tests for the LLMs. So they take all the leading LLMs and they pass them IQ. So you can see that if the average is around 100, many of them there are hidden here, they are getting there. 01, which is the latest, is already a genius. If you go under the hood, the worry here is because these things are crunching all the information out there, and there was a risk that they also learn those questions and answer, so they are prepared for the test. So they created an offline test that is not on the internet, and the reality is that it's less than what we see here. So 01 preview is an average human, is 97. The others are less than that. Now, the other thing we can see is they are very good coders. They get in coding exams 94%, which is really an excellent score. On all the other fronts, they are very medium. Okay, so at the end of the day, what we have today is an average worker is super motivated. He never gets tired, but it's an average idiot. So from an augmentation point, I don't know how to draw. So I can ask this thing to draw, and he will go do a good artwork for me. So it's a great effort, but we are still missing the ingenuity. The ingenuity is not there. And so we are not yet at the end of the game. The other thing that we see also is that all those models are converging to the 70% level. So really to go beyond, there need to be some disruption. LLM is getting to its maximum, which is good, but still not there. So really, I want to leave you for 3 points as my last slide. First one is I was very happy to see that you are using AI here in order to create business. What I see in many places is organizations are trying to reduce cost, to replace service, to do things faster, to spend less. On the other side, we have to think that the customer is getting more empowered than us. If I want today I wanted to come, I was invited to speak, I needed health insurance for travel. So I did not go to the web, start looking. I just opened one of those AI, and I said, I'm going to India for 4 days. Important for me is health insurance, less important for me, luggage insurance, whatever, delay or whatever. Give me 3 options and explain to me the pros and cons of each one of them. And then he gave me the option, he gave me explanation, he gave me the links, and I did it. So the same thing will happen to loans. The same thing can happen for everything that the customer needs. So the customer is benefiting currently even more than us from that, and we need to be aware of that. And really the thing that the financial institution should think is, what is the killer app for us? What is the thing that will make us different? Because in some way, financial institutions are some kind of an infrastructure. But really the interesting things, when the internet was created, it was created, but the real business came when Netflix came and started to stream movies, YouTube came, social network, and they were the ones that created the business, in fact, on top of the infrastructure. So the question is, with this Gen AI, what will be the killer apps for our consumers? And the last point, I already said that we should expect some algorithmic disruption that will take us to the next stage beyond LLMs. So I used more of my time, but thank you very much. And it's an exciting moment to live in.
Thank you, Shuki. It was a wonderful talk. And great being here again. Thank you.
So I met the Barag in Agoda.
Yeah.
And I want to thank him personally to invite me to talk here. I've been to Mumbai several times before, but never stepped out of the terminal. Just doing connection. This is the first time I step out, and really I'm overwhelmed with the hosting and the kindness, and really I'm pampered, and tomorrow I'm flying back, but I always...
We are grateful for your wonderful insights.
Yeah,
Fantastic.
tomorrow I'm flying back, and I want to be back already.
Yes. All right. Thank you.
Thank you.
All right, ladies and gentlemen, let's give Dr. Dan a big, big round of applause. Thank you so much for your expertise, sir. Your practical examples have truly sparked new ideas. And now, ladies and gentlemen, up next is our first panel discussion, Charting the AI First Course. This conversation will explore key strategies for leaders and innovators in today's rapidly evolving AI landscape. To lead this discussion, we have a panel of distinguished experts. First up is Mr. Nitendra Rajput, Senior Vice President and Head of AI Garage MasterCard, who will be joining us today virtually. But he can hear all of you, so make sure that when you see him on the screen, you give him a big round of applause. Can we have Mr. Rajput on, please?
Hello, everyone, and thank you so much for making.
In the meanwhile, I would like to welcome on stage our next panelist, Dr. Debarag Banerjee, Chief AI and Data Officer, L&T Finance. Come on, give it up for him, ladies and gentlemen. And to welcome back on stage, I request Dr. Shuki Udan, Chief Scientist at SCB DataX, to join the panel. Well, you see, you have to make him feel like he's walking on a stage. Come on, give it up. Moderating this session is Mr. Ruchin Goyal, Managing Director and Senior Partner at Boston Consulting Group. Mr. Goyal, I request you to please come. Let's give this gentleman a very big round of applause, ladies and gentlemen. Over to you, Mr. Goyal.
Hi, good morning, everyone. Thank you, for having us here on the stage. So we have Nitendra also on the VC. Yeah, hi, good morning, Nitendra. Can you hear us? Great.
Yes, Ruchin, absolutely, loud and clear.
All right, so this is the first panel discussion, we're talking about one of the most disruptive forces today in both businesses and society, artificial intelligence. And as Dr. Sukhi, you very eloquently pointed out, data models are not new. We've had data models for the last 3-4 decades now, or even longer. But what's very different now are really coming together of 4 things. The amount of data that's available today, the world is producing more data in a couple of years than it did in the entire history of the world, right? So the availability of data is going up exponentially. The advanced algorithms that are available today are very different from what was there in the past. The computational power that's available today is of a different order of magnitude, and to bring it all together, we have today a user interface on the go that people can access this. So it's no longer just something that data scientists use in their research labs, but it's really available for people. But despite all that, if I bring a practitioner's perspective, as BCG, we did a research of a large number of companies asking the CEOs, right, how much are you investing on artificial intelligence more broadly, right? And what are the returns that you're getting? Only a quarter of the CEOs said they're actually seeing the results, right, in line with the expectations of the investment that they made, right? And this happens with many new technologies. There is a lot of hype in the short term, and sometimes the results take time. So let me just start from that broad theme. Is AI more hype or is it real business? So let me start with you, Nitendra. Just as a practitioner, right? Where do you see business benefits, specifically in the BFSI sector, of using AI?
Thank you, Ruchin, for that comment. And definitely, I mean, a lot of times what happens is if you are saying that there is no return on investment and so on, a lot of times what happens is that some organizations try to think of AI as a hammer and then try and find a nail for it. But the right way to it is not to be carried away by the hype of it, but try and focus on the business and try and see what is the business problem that I'm supposed to solve, which can yield revenues and profits and so on. And then ask the question, where or can AI help in that? If we go that way, then usually we are going to try and solve a problem which can generate revenue for us. So I think identifying the problem is definitely one of the most important things. Coming from BFSI, I can give you a very specific example that even in the keynote earlier, we were hearing that fraud detection is a very important aspect. I mean, the amount of fraud that happens in the digital world is significantly large. Now, if we can reduce that, that's clear business benefit to any financial organization. And how can you reduce fraud? I mean, there are like billions of transactions that flow through a network like ours at MasterCard and so on. Now, you cannot have a rule that says that any transaction more than $200 from country A to country B is supposedly fraudulent, so let me block it. Because if you do that, then the fraudster will take that transaction, move from country A to C, then to B. So the rule is gone. Obviously, an AI algorithm can automatically learn these kind of things and then identify anomalous patterns and therefore block transactions that are fraudulent. So it is a very obvious use case of applying AI, and it solves a specific business problem. And those are some of the obvious cases where we have seen AI leading into business benefits. Just the second point I wanted to mention is that, I remember this quote by Usain Bolt wherein he says that I have trained for 4 years to run for 9 seconds, which is where I think any investment in a new technology also needs some amount of patience and time and planning. The results do come, but it's not like something that you just buy or take some open source solution and then put that chatbot in and suddenly expect revenues. I think it has to be a more of a strategic and a patient decision to make, perhaps.
Thank you. So, as you rightly said, instead of, having a great tool, trying to find a problem that can solve, you start from a business problem and, then try and figure out how, the AI can solve it. I think that's a great approach. If I move on to you, Dr. Sukhi, you spoke about in your presentation that AI more broadly, but also Gen AI, can be a great tool to reduce costs, to really, have you said average human being, but, that never tires. I have two questions. One is this promise of cost reduction, has been there for a long time. But, what we see is that costs are very sticky. They don't come down, right? Costs are sticky and they don't come down, right? Most companies, the cost of technology far exceeds the benefits that, the technology promises. So I mean, we've seen that across the world, banks, the cost income ratio keeps going up because you need to spend more on regulations, on technology. So is this real that Gen AI can really replace humans and, the cost can come down? And second, you also spoke about, can we look at beyond costs to look at revenue enhancements opportunities that Gen AI can have?
So regarding the cost, I think it should be acceptable that there is a cost, and it should be looked as a technology. Today, if I want to buy a laptop for my use as an employee, nobody will look at me and say, it's a cost. It's part of my tool set. So AI needs the recognition that it's a tool set, and it may have a cost. I'm paying $20 to AIs to give me pro access and things like that, and it's a tool. The other thing that happens internally is the recognition of the manager and executive that they need it, and it's not just something for the scientists to play with and show some results, and they need to be interested, and I think being accepted as mainstream is the biggest achievement of Gen AI for me, beyond the fancy thing. It's the fact that, we have all those people that came here to listen because it's accepted. And, the bug and me were not accepted for many years. I mean, AI, we didn't say AI, we were too humble, but the technology we used made big impact on everything. Many of our things have models that have been built and are working internally, even if nobody calls them AI. So this is about the cost. So now, the next thing to be with AI, I think everything that we can describe, we can get it. The important thing is that we can describe, and then the AI, in fact, is filling the gap, is creating the story. So if we can ask for something and the information is out there, we can get it. And with that, I think sky is the limit.
All right, thank you, Dr. Suki. Just moving on to you, Dr. Banerjee, and your vast experience both in many industries, but also now BFSI. How should companies, really think about these AI, Gen AI applications to both, deliver benefits on cost, but also revenue enhancements? What has been your learnings?
Yeah. So, a way to think of that is, let me turn the stat that you mentioned around, right? 25 times the number of experiments are happening today that are actually coming out with today's successes. Now, you have to understand that the path to a new technology is not linear, it's not even exponential, it's a J-curve. So we are at the J-curve point of AI adoption. We had very similar things in the early stages of the web. There were multiple protocols being tried out until one succeeded, and it succeeded and took over the world. Same is going to happen with AI. The fact that there are so many models, there's so many approaches, there are so many use cases being tried out, is an indication that people are seeing, after all these 30, 40 years of developing AI, that this is the inflection point. Fortune favors the brave. Those who take moonshots get to the moon. The others get left behind. We do not plan to get left behind. Now, coming to cost versus revenue opportunities. So if any of you attended my 8:30 talk, we are actually showing that there are both ways we are using AI. So yes, we are using it in the traditional way of answering customer questions with a lot more considerate communication an example you can see in our demo booth of our knowledgeable AI Kai. But also, we are using GenAI to find signals that would indicate creditworthiness or otherwise of our existing or future base of customers. That is a new usage. That is unlocking this 90% dark data, unstructured data, in a way that will prove valuable and raise the bottom line in a way that we hope is going to be unlocking financial access to millions and millions of Indians who do not have the traditional digital footprint of bureau records and stuff.
Okay, so I think the takeaway is you think that we are at an inflection point, right? And the fortune favors the brave. You want to add something, Dr. Suki?
I think personally, and I think it's also meaningful for organization. For me, if I think about myself, AI saved me time. This is the biggest thing for me is time. Second thing is it augments me. I can do things that I'm not good at and do it maybe not as an expert, but do it at the same time. And the outcome is independence. I think organizations, people can be much more independent today because they can complete themselves with this AI. So I need to create a brochure, the AI can do it for me, even I'm not. I need to ideate. This guy never gets tired, so he can work on 5 ideas. I need to build a strategy. There are all kinds of combination that can be reduce the price, go to this market. This guy can analyze as many as I want and he will not complain. And then, you know, I will take decision. Maybe in the future AI will take decision, but as a kickside and to do really things which are required a lot of complexity, it's not a problem from him. And I think with that, we see that, you know, I mentioned 10,000 AIs out there. It became mainstream. If people are building on it and they can create so many in so little time, it's here to stay.
Great. So, you know, we'll move on from the first theme I spoke about is the AI, the hype. Of course, you know, we have, you know, people here who believe very passionately that, you know, AI is not just an hype. You spoke about J curve and, you know, moonshot. So it requires investments, but it can be a game changer. Let me move on. Another theme about AI is that with the advent of open source, right? And you talked about independence. Everyone has access to similar capabilities now, or at least the world is more democratic today than in the past. In this world, can AI be used by organizations as a differentiator, or would it be a level playing field that everyone, you know, has access to same models, the same LLMs? Let me start with you, Dr. Suki. What's your?
So I think yes. I think that the first thing is data. If you have more data, specific data that others had, the AI can use it and be more intelligent. The second thing is the AI can do things. Again, you need to think what is the things you want him to do in order to be different. So yes, you can.
Yes, you can.
It's the same like, you know, if you have a good team, is it a differentiator? If the people that you hired are smart, is it a differentiator? The team by itself is not a differentiator, but the thing you can create together can be a differentiator.
Any perspectives on this?
Yeah, so open source versus closed source. I mean, of course, the big break in generative AI, producing a human-like performance with a pretty good MMLU first happened in closed source, right? From a company that paradoxically is named OpenAI. So, so the clock is actually shifting the other way. So now a lot of the closed source models are actually closing that gap pretty well, right? So there are options both ways, and I think this is going to continue for quite some years, where closed source and open source are going to exist side by side. There are advantages in open source in that you can actually take that open source model and more easily fine tune it, more easily prune it, more easily change it to your specific needs, which closed source does not always offer you. The second part, which is often overlooked, is when you are using a closed source model that is not yours, then you are at the mercy of the use agreements, the use policies of that closed source provider. Um, so, some of the use cases that we have actually on demo outside, we used a closed source model from one provider. It did work reasonably well as a proof of concept, but then their end user agreements did not allow us to scale it. So in this particular case, we switched to somebody else, and it did scale. But it was a wake-up call, and I think it should be for everyone, that at some point of time, unless you own your own AI, you're not going to own your destiny. So it is good to start with closed source because it's easy to get started. It is, however, something that every organization needs to decide whether their use cases are critical enough, whether their users are different enough from what those models were trained on, and if their independence has a critical enough value, or is it just a passing value, based on which each organization have to make its own decision whether it should own its own AI or depend on a third-party API.
Thank you, Dr. Banerjee. So I'll keep moving on in the interest of time. Let me shift focus to another theme. Of course, we are in the financial services space. It's a highly regulated space, and it's important, that when we use AI more responsibly than many other industries. Of course, every industry has to use AI responsibly, but I would say that the onus on financial services is even higher than many other industries. So let me start, Nitendra, by you. What have been your learnings on how do you start thinking about responsible AI by design, right? From the word go.
Yeah, thanks, Ruchin. And I think the most important thing here is to again ask the question, what are we building our AI solutions for? Who are we building it for? In the financial services space, you said, yes, regulations are there and so on. But the reality is also the fact that we are building these solutions for our customers. End users, if they do not trust any specific financial entity, they are not going to use that system. Irrespective of the regulations, therefore, we have to think of our customers first in building the solution. And if we have to think of our customers in the financial space, we have to think of earning their trust. If we are thinking of earning their trust, then obviously the first thing that we start to think about is how do we secure their data? How do we ensure that the data is going to be used for the purposes that they have provided it for us? How do we ensure that that data will not get lost anywhere else? How do we ensure that we do not make any decisions that are supposed to be not made by using their specific personal and demographic type of information and so on? So as soon as we start thinking of customer first, automatically we start to realize that we have to have a governance mechanism within the organization so that we figure out the specific correct usage of data. We figure out if that any sensitive information is leaking into our models or not. We figure out if there are any biases in the system that are making any judgments which should not be made based on some demographic information. So automatically we start to get into these pieces which actually are frameworks of a typical AI governance model. Most organizations definitely have a very good AI governance framework, which deals with starting from the scratch, which is the data, until not only the deployment, but also end of deployment as to how it is being used and continuously monitor that. So that process is there. Now, regulations, honestly speaking, in AI are coming up. There are variations to it and there are discussions around it and so on. So we have to comply with those regulations and they'll settle in soon. But as an organization, if we put our customers first, most of the times we are going to fit in any regulation that will come in as well. So that may be a good thinking to have in mind, which automatically will bring in customer first, which means responsible first as we develop our AI solutions.
Thank you, Nitendra. Just building on this, Dr. Sukhi, you also spoke in your presentation. When you build model governance, regulations, there is a level of bureaucracy that comes in, right? Bureaucracy. So you spoke about on one side the need to be agile, that you have now AI that can actually build models, right? So you can, in the matter of few days, you can have a model out there. But if you need to have responsible AI, you need to have model governance, somebody who can explain. How do you see this, paradigm or trade-offs between innovation and being responsible, right?
So I think it has several facets, but one thing is a lot of the processes in financials requiring approvals. Before you do something, someone need to sign, okay, go to production or something. There need to be a change and things should be sent out with responsibility and be monitored, and if there is something that is going wrong, it's, there are all kinds of techniques of replacing it with something else which is challenger, but the whole concept of going to committees and looking at papers cannot work, and there are tools today that enable you to do the simulation faster before and monitor things in production after. So I think there should be a change in the trust or and again, it's not enough that you want to do it, the regulator need to agree to that. So it's also a matter of talking to the regulator, and we are doing that and trying to, I don't know if to educate them or to brainstorm with them, but we have tools today to do things in real time and fix things and monitor things and identify biases and even explainability. Many of these boxes today are black box, and then the committee will ask, if this change, what will happen, and you need to explain to them. So explainability is also about creating trust and letting people trust, but explainability also explains a lot of things. So you can learn, you can understand that in fact there is a group of customers that not behaving like the others and they need a special model. So I think this transition to trustworthy AI, which, it just became popular now, but this problem exists since always. When we ever learned from data, there were biases and all those things. Now it came to the mainstream, and it's good that it came, because we can be better and we can learn more. Much of the frustration I had during the years was that the interest of people to appreciate my models were looking at the numbers. What was your accuracy? And in fact, if you can open the model and show them why this number came out, the value is an order of magnitude larger. The business can learn something about the business itself, about the customer. So I think all this trend is positive. It's important that it's creating, and if there is motivation, the balance will be there. And I invite everyone to look at, there is so many startups today that look at fairness, drift, explainability, security. The market is responding to that already.
All right, so I think I take away the key word here is balance. You need to have balance, and that's the only way we can go ahead. So let me come to the last theme of the discussion. It's really about talent, right? Because any AI, ultimately, in the organization, you need people to be able to innovate, to be able to consume it. And I think there are two ways of looking at it, right? One is you go and hire the best data scientists who are capable, of doing, you talked about differentiation versus everybody in the organization knowing a little bit of AI. How should companies think about talent, between these two paradigms? Dr. Banerjee, to you.
Yeah, so, there are kind of two types of talent you need in order to enable a company to make it a truly AI-first company. So one is the talent that you need who are going to actually build AI, both applications as well as, I wouldn't say necessarily fundamental models, but variants and fine-tunings and other things of the models. And these need to be fairly well-talented individuals coming with the right mix of curiosity, capability, and quite frankly, a good background in math, which is not always easy to find, especially if you're trying to build it here. Now, that is your core. But the real value, I believe, in making an organization AI first comes from democratizing AI, letting every employee who would want to use AI tools to use it, and then have among them champions come up and share their feats, so to say, of, okay, I use this model in this kind of prompt for this kind of data, and I achieved this. And share them among the rest of the organization. And then from there, take those examples and then build, and then have this core team build them into more robust applications that go back into serving that use case at scale for everyone else in the organization. So it's a combination of talent that needs to have that core capability, and you can't compromise on that. But the other part is you already have the talent. You just have to get them conversant with AI. Don't hold back. Let it flow, and let them come up bottoms up.
Your perspective, Dr.
Dr. Debak talked about democratizing AI, and I want to mention that for me it's even more important is to democratize data. And in fact, the first application that we did with Gen AI was to enable people to, we called it chat with your data. So you can ask questions about, how were my sales, what is the amount of NPL, what are the 5 big accounts, by using the prompt. This was the first thing we did, in fact, with the Gen AI when we got hold of the preview of OpenAI. Let people talk with numbers and not do blah blah and high buzzwords and things like that. Come with the number, show me the number. This is critical if you want to have an effective discussion. And it cannot be that someone says, how many active customers we have, and then we call an analyst and get the number for the next board review, and the number is not right anymore. So having immediate access to data is one of the cool applications for Gen AI for us.
Excellent. So we are almost at the end of the time. If there are any questions in the audience, if anyone wants to ask any of the panel members. Or I'll just summarize. I think the timer is ticking down. So we had as I said, we had a really fascinating discussion. Just to summarize, I think this panel believes that, we are at an inflection point. AI, could be the next big disruptor. You spoke about, Dr. Banerjee, the way internet disrupted things. And it takes time. It takes time for the real business disruption to come in. But, if you are brave, if you, aim for the moon and the moonshots, then, we can get there. And I think the path towards that has to be that we have to have a balanced approach, take the entire organization together with us, right? And, the path has to be responsible AI, that we don't, let models, have biases, and have unintended consequences. But if we can take care of these challenges, the future of business could look very different for the companies that really boldly embrace the power of AI. Thank you so much. Thank you.
Thank you.
Thank you so much to our panelists and Mr. Goyal for leading such an insightful discussion. Let's give it up for them, ladies and gentlemen. I request you all to kindly remain on stage, and I invite Mr. Raju Doti, Chief Operating Officer at L&T Finance, to felicitate you all with a memento. Well, this is where you put your hands together. That's right, some of you got it right. Everybody, come on, give it up for the wonderful gentleman on stage. Thank you, gentlemen. Thank you, Mr. Doti, for joining us. You may all now take your seats. Well, ladies and gentlemen, our next session features one of the most visionary minds in financial services and technology, Mr. Kunal Shah, the founder of CRED. Mr. Shah has not only been an inspiring leader to his team, but he's also a trailblazer in the fintech space. And today he will be sharing his 10 predictions for post-AI world. Ladies and gentlemen, with a huge round of applause, I welcome on stage Mr. Kunal Shah. Over to you, sir.
Good morning, everyone. How many of you over here use CRED? Okay, that's good. 80%, decent. I'm going to talk about something that I've been thinking about. And I also wish that I'm not completely right about. But I have still taken the time to kind of put together a few predictions that I see in the post-AI world. We are technically in the post-AI world. The problem is that the AI is rapidly growing and changing almost on a daily basis. So it's very hard to say when can we call it the post-AI world. So first things first, who's the largest employer of the world? Or what is the largest employer of the world? Chinese government? Indian Railways? The answer is inefficiency. And this is something that you have to deeply think about, that a large chunk of human population is employed because there is a large amount of inefficiency that exists in the world. And this is where it gets interesting. We have to also understand that internet made information accessible over the air. Think about Wi-Fi or everything else. But AI is making intelligence accessible through air. We don't need as many human beings, or as earlier panel was talking about, it doesn't get tired. Doesn't talk about work-life balance. So let's think. I have tried to put more than 10, but they are connected topics, so I'll just try to rush through it. This is going to get over. Waiting for customer support. Your call is important to us, is something that you will probably hear for the last few years. I mean, in the next few years, and it's going to get over after that. We're going to move into a world where there is going to be 24/7 access to whatever you want from people who can actually serve better than most humans who don't need to be trained again and again. One interesting thing, I used to run a BPO before. The problem of call centers and support centers, there is almost a 50% attrition rate every year. So you're always training and always having mistakes. All of that is going to go away. Uh, this is going to be the more interesting one. Consumers will prefer to speak to AI relationship managers versus humans. So think about a hypothetical scenario. Let's say you are taking a home loan and it's a 10 crore loan. The person who usually comes to talk to you about it does not understand about there is some capital gains event and this and that, some technicalities and all of that. You're dealing with somebody who's present in your neighborhood who can serve you. I would like to prefer to talk to somebody who's absolutely the best brain when it comes to serving me the perfect loan for the perfect rate, for the perfect requirement, and also guide me on the quality of property, legal diligence, all of that. You are going to talk to somebody who's going to be an absolute expert versus a sales guy who's trying to earn his incentive. It's going to be a very fascinating time. A new interface might emerge. We move from humans, which were in branches, to apps that did not have human faces. We might bring back the human face again, because we have to understand that human face creates the highest amount of trust. And we will be able to create that back again, where we are able to converse just like a friend, just like somebody would ask in office advice about something, and we might just see a new interface emerge where we are talking to human beings again versus having to deal with apps and click on icons and deal with this navigation. We might just change the way we operate completely. We might enter a completely new world. It's not hard to imagine that not many years from now, we may be all having glasses that are powered by AI, where you can invoke human beings to talk to at any point of time. You may look like a mad person for the first year, but eventually it'll become normal. I remember the earliest days when people used to have Bluetooth earphones and walk. People thought they were mad people. Many of you remember that time. It's going to be very soon. We're going to be talking to your glasses very, very soon. This is going to be interesting. This you can already observe, by the way. There is a chief technology officer in your house already, but the person is between the age group of 8 to 18, and that person is showing you what impatience means already, right? The more interesting thing is that we always assume that the next generation is ruined. I'm sure your parents thought the same thing about you guys as well. But you have to understand one beautiful thing about humans is that we are like apps. We get better with every generation. The next generation is scarily bright. They may not even look at you for advice. They'll have their mentors in AI, and they will become brighter because 90% of questions they ask you, you can't answer well for them, but the AI can. And we are entering a world where the impatience is going to be so acute. It already is seen in the younger customers, right? They don't want to deal with anything that is slow. I still remember distinctly, I was told about this by a young college person who was asking me that where should I join in a job. And I recommended, hey, why don't you do the campus placements and all of that. And they used this line that stayed with me, and I wish I never become that company. I said, why don't you join some of these companies who are coming for placement? Oh, I don't want to join these uncle companies. It's a very powerful line if you think about it. What does it mean? What does it mean to be an uncle company, right? And I think we are going to enter a world where every single person is going to be permanently impatient and the way they want things to be done. This is something that I foresee might happen. As you will see job displacement, you have to constantly reskill every 5 years, 6 years. You might not be sure about your own careers, so you might see consumers take extreme risks when it comes to money, or the opposite. And instead of trying to take the middle path of investing, you might see consumers kind of go, and this is something that is seen in the past when there were wars in the past, or there is disruption to any society. This is something that is observed that consumers tend to be. Actually, we saw this during COVID as well. There were people who were like just holding on to their dear money, and then people who were just absolutely going nuts in the market. right? We see some of the residual impact of that even today. And this might just accelerate materially because the consumers are in a state of panic, confusion, and might want to do something about it or freeze and do nothing about it. So it's going to be an interesting time to look forward to. This is going to be an interesting one. Many of you belong to the time where we used to write in our resume, internet. Many of you are from the time where we wrote MS Excel, Word. How many of you wrote MS Word in your resume in the past? Please raise your hand. Okay, 15, 20% over here. It's going to be almost a mandatory skill. The way to think about this analogy is the following. I work out of Bangalore, and one fine day, all the autos were on ride-sharing apps, or ride-hailing apps, which required them to be learning how to use maps, right? And it almost, I saw deviation of two types of drivers. One was able to get more rides because they could use these apps and they were never wasting time randomly waiting and trying to convince customers to take a ride with them. And the second one was just not able to keep up. It almost split the drivers into like almost two different types of humans. One who could really accelerate, one who could not. AI is going to be that. So all the people who say this line to me, I overhear this line, oh, I'm not very good with tech. I'm very scared for them. Because the delta of somebody who can use these tools and somebody who cannot use these tools is going to be not a simple delta like what you saw in internet, but a multiple X on productivity, multiple X on compounding, multiple X on becoming really, really better. And therefore, many companies in the West are already making it mandatory to have AI skills. And how do they test that? They give an assignment that can only be completed in 2 hours, and you can only do it if you know how to use AI really, really well. And that's going to be the norm, because expecting 5, 10x productivity from a human being is going to be just the norm now. Moving on to this. We talked about a chief technology officer earlier. You might see the average age of employees of BFSI will drop, because to cater to that, you need somebody who can keep up to the new technology constantly, right? And that may not come from people who have the expertise. One interesting line, like a very big figure in the financial services industry had told me that, Kunal, the average IQ of the technology teams, and unfortunately the BFSI world, is directly correlated to the sales incentive of the vendors who are serving them. And it was a very scary line, but the only way to counter that is to bring native people who understand technology, not through presentations over here, but actual application. And that is what I foresee, that the average age will drop because of that. Everyone will have a personal CFO. It's not something that's going to be, earlier somebody mentioned about how they speak to AI before making a decision on which insurance to buy. You talked about it, sir. And it's going to be about everything. One request I have for you, if you get the permission to look at how the 20-year-olds use GPT, just ask them to give you a preview of the searches they make. You might be very sensitive about it, but if you can convince them, you will see that they are almost using it for everything. How many of you use GPT almost on a daily basis? Okay. How many of you use it more than 20, 30 times a day? Okay, maybe 2, 3% over here. You will start seeing that big delta emerge when people will start getting addicted to just asking and checking and verifying about almost everything. And the standard process of how people search, bot, make their consideration, make their choices will dramatically change. And this is the time that is already here. Another thing that I'm seeing as a pattern is AI companies are already selling their AI agents like human beings. They're asking you to say, you can take these people at 1/10 the cost and get 5x the output. I'm already seeing that in analysts, call centers, many, many functions where you are able to hire AI employees at fraction of cost. This is already happening, and please understand that this technology is not growing linearly, it is growing exponentially, which means in a few weeks, everything that you thought was done is irrelevant already. When I speak to AI founders, they are themselves unable to keep up. Forget about people like us who are trying to grapple with what AI can do. And a lot of us kind of build an impression of what AI is but using this ChatGPT app. That's not what AI is. It is much more than what it can be. And that is something that is scary, but exciting at the same time, because if you really make that choice, that you're going to accelerate in that direction, this is your time. This is one of those moments that is once in a lifetime that you can really accelerate with. This is going to be an interesting one. Most tech companies are valued and reviewed constantly on revenue per employee. The truth is that unless you move almost every company to behave like this, you don't really know if you're using AI. Sir earlier mentioned about having a KPI that says, are you using AI or not? I don't think that is a good metric, personally, because unless you can prove this metric is constantly moving up compared to every other competitor that you have, I don't think you can claim that you're using AI. Interestingly, I was studying this morning what is the revenue per employee in the top 5, 6 banks. Surprisingly, it was exactly the same. And I think in 2, 3, 5 years from now, there'll be a breakout of species where some BFSI companies will be significantly higher revenue per employee than others, and that will come on back of using a lot of the AI technology that exists. We'll kind of just double click on this point a little bit. At Cred, the first investor slide that we send in a monthly update to our board members and investors is revenue per employee. And this is to keep us honest that are we building a tech company or just a BFSI company? I think the lines and between what is BFSI, what is tech, what is commerce, it's already blurring. Every single company is a tech company and have to measure itself like a tech company. Loan tenures will shrink. How do you give somebody a 20-year loan when you don't know if they will have that job? And this is something that's going to be kind of becoming an interesting phenomena that will reshape the industry of how, let's say, lending works and materially change the way organizations that do lending kind of look at risk in general. This is an interesting one to think about. Imagine, let's leave this slide for a bit, but imagine what if an AI bot of the CEO of the company could interview every single applicant to your company? What if that particular bot could also screen every candidate that applies for the company, and the interview could go on for 8 hours? Then the whole idea of degree, credentialing, might be irrelevant. You might also realize that why get people interviewed by junior people when the CEO can interview? Similarly, imagine for every person who's applying for the loan is actually being interviewed by the CRO. And they are reviewing it not through policies, but on case-to-case basis. And imagine for every case that bot is not able to solve, the CRO steps in themselves, joins the call, and makes the CRO smarter, the bot smarter. This is not something that is a remote possibility. It might happen sooner than you can imagine. Already companies who are already building the interview bots, and by the way, imagine the power of the AI bot. It can detect from your facial expression if you're lying. It can detect if you are winging an answer or you really know what you're talking about. These are possibilities that are here already and might just change the shape of how things are done or people are picked. Safer cohorts to lend may become riskier cohorts to lend. Many jobs that are considered to be safe, which are coming on deep expertise of learning for many, many years, might just become very risky. To become a radiologist requires probably decades of work. But I imagine that in 5 years from now, an X-ray machine might just become like a Xerox machine. You go there, it takes a scan, it gives you a report with a radiology grade review of what's going on, and just might change this scheme of things. And it seems scary. You'll say, who will allow that? What is the thing? But look at a country like India. The number of radiologists that pass out in India cannot keep up to the population that we have. And a 50 rupees X-ray, I'm sure the government will want it. That's how UPI happened, right? We couldn't afford the current systems to pay payments. There's an acceleration that happened through UPI. Why shouldn't a 50 rupees X-ray not exist? And it might happen sooner than we can imagine. And countries that are actually lower on per capita income may accelerate AI more than the countries that are higher on per capita because there's no protection to be done over there. You are trying to serve the poor versus trying to protect the rich. And this might just change the equation of what is risky and not risky to lend to. This is going to be an interesting one. You already have noticed some interesting frauds that are emerging on AI, but it is just tip of the iceberg. It is going to be extremely scary. I've heard some crazy stories. I've seen a video sent to somebody about their kid being kidnapped in the video of the son and asked for ransom. It's not hard to imagine that you might install an AI software on your parents' phone कि पहले call AI attend करेगा, screen करके फिर parents को देगा. It might just happen. Because in the world of frauds now, the weakest link is now human beings and not technology. We can keep spending on technology and all of that stuff, but the truth is the weakest link is human, who happily gives their OTP away to everybody who calls. Anyway, so that's a few things. The last one is that we may have insurance hedge against AI disruption may emerge. You might have insurance that will protects you against AI, and companies that protects you against AI change. And it might be an interesting one. I don't know how profitable it will be, but it will emerge for sure. Anyways, thank you so much. That's all from me.
Thank you so much, Mr. Shah, for your powerful insights on AI's transformative potential. I request you to please remain on stage while I invite Ms. Sonia Krishnankutty, Chief Executive, Rural Business Finance, Customer Service and Business Operations, to felicitate you with your memento. All right, this is our lucky day. Mr. Shah is going to be answering some questions, so go ahead. Don't worry, the mic will come to you. The mics are all around in the audience, so they'll come to you.
I'm taking a couple of questions, so if anybody has anything, just raise your hand. One over there, please, at the back.
Hi, thank you for a very insightful talk. What are your views on the ethics and bias, that's always associated with AI?
Yeah. I think it's impossible to imagine humans without bias. We are our biases. The question is that how evolved are our biases to the world, and how fair do we want to be? I think, and biases get stronger. Let's say you make a perfect person with no bias and you kind of go down and train more people, the biases seep in different ways. I think it's going to be much easier to tweak the flaws that exist in biases when it comes to, let's say, underwriting, or when it comes to many of the choices of interviewing, picking, versus kind of assuming. I think if you have to take a bet, humans are much bigger or weaker link when it comes to preventing biases versus an AI that I can oversee, review, and change things constantly. So it's just going to be a matter of time. But will it start with biases? The answer is yes, because AIs are built through the collective human experience and knowledge. But it's going to be something that will evolve very quickly, and it'll be quite trainable.
Thank you.
There's one question over here. I don't know how many we're taking anymore. Sudipta, we're taking 1, 2, how many? 2 more questions. Okay. We'll just move on the other side after this.
Hi, this is Samir Darab. I want to understand how are you leveraging AI at CRED?
Yeah. I think the few things that we have kind of started thinking about is that we should be a place with the top AI talent. And it doesn't mean that we hire people who know AI, but actually make everybody good at AI. And then leverage how do we kind of accelerate the revenue per employee as a metric. So the obvious things that, we're going to make our customer support better, we're going to do a lot of the predictive stuff better, personalize better. But I think the true power will come when we can reimagine how the consumers interacts with us, and move away from the boundaries of what we call as app, or move away from the boundaries at what we call as interaction through internet. I just don't know how to think about this. But the way we have thinking about is that instead of trying to make this roadmap, make every individual really accelerate on their own personal productivity first, and then they will find solutions to make their job better, right? If you obsess about revenue per employee, right? For example, our revenue has skyrocketed in the last 3 years, but the headcount has remained flat at the company. But the idea is that what if we could actually make it multifold? It will come from each individual. What we do though, is every 3-4 months we run an AI hackathon with no structure, and we find some very interesting ideas coming through that.
Thank you.
One question from here in the center. Please go ahead.
Do you have a structure wherein, in a secured environment, you allow startups to do some stuff for you?
Nothing right now, but sounds like an interesting idea that we should think about.
Fair enough.
Something over here. Go ahead. You can just ask, I can hear you.
So, my specific question is that to the aspect of decision making, how good do you think AI compare with humans when it comes to decisions? For example, you may, I'm a banker basically, so you may talk about it from the lending perspective as well. Yeah.
On an average basis, it will be better than humans. On specific basis, it may not be better than humans. So I think that's something the exception management is going to be done through the humans. But every human exception management will train the AI, and that will be remembered forever by AI. Right. So look at the human curse. We become smarter, and then we have kids who are reset, and you have to train them for 25 years, 30 years to become employable. Right. Thankfully, with AI, you can keep making them better. It's a very scary thought, but that's exactly what the human state versus an AI state is.
And the decisions become relatable, right? Like it is relative always. Like one decision might not be the correct.
I understand, but I'm saying that over a period of time, you're going to be able to train and tweak. But I'm saying on an average basis, it might still be better than humans already.
Right. Thank you.
Thank you so much, guys.
Thank you so much, Shah. May I please welcome you back on the stage? And along with Mr. Shah, I would like to welcome on stage Ms. Sonia Krishnan Kutty, Chief Executive, Rural Business Finance, Customer Service and Business Operations, to felicitate you with your memento. Ladies and gentlemen, please give them a big round of applause. Come on, give it up, don't be shy. Thank you so much, ma'am. Thank you, sir. And now, ladies and gentlemen, we shift our focus to a pivotal moment in our event. We have an exciting announcement. And for that, I would like to call upon stage Mr. Sudipta Roy, Managing Director and CEO, L&T Finance, and Mr. Mahendra Nerukar, Vice President, Payments for Emerging Markets, Amazon, on the stage. Ladies and gentlemen, put your hands together as the gentlemen take the stage. Along with them, I would also like to welcome on stage Mr. Sanjay Garyali, Chief Executive, Urban Finance, L&T Finance, Mr. Subhranshu Mondal, Head of Strategy and Business Head, Personal Loans, L&T Finance. Gentlemen, and everybody sitting in the audience, keep that applause going. There are more minds coming up. Ms. Priya Jayarajan, Head, Strategic Partnerships and Alliances, L&T Finance. Mr. Vikas Bansal, Director, Payment and Financial Services of Amazon Pay. Mr. Mayank Jain, Director, Credit and Lending, Amazon Pay. And last but not the least, Mr. Vikas Birthire, Senior Manager, Product Management, Amazon Pay. Ladies and gentlemen, come on, give it up for these wonderful people. Can we have two handhelds on stage for the gentleman, please?
So, Mahendra, I believe you have just come back from Brazil, is it? So, how's your jet lag doing?
It was Sydney, Singapore, Sao Paulo, Mexico City, back to Bangalore via Barcelona.
Wow.
And by the way, just to be clear,
that is quite a bit of a travel.
Just to be clear, this was not a Gen AI assisted trip. So, it was all done manually. So I would look forward to the world where Gen AI can help me with my jet lag.
Good. I think we are here at it again. And I think today we are probably going to sort of introduce something very cool and something which we think will, serve Indian customers very well in the coming many years. And I do believe that the cutting edge digital experience that Amazon brings to the table and the stack that we are putting together in L&T Finance, probably together we can make magic. I'd like to have some thoughts on that.
No, thanks very much. So I think as I reflect back to the 5 or 6 years that I've been a part of this Amazon payments journey, one of the key missions that we've been on is how to make every payment trusted, convenient, and rewarding for our customers. And one key enabler of that mission has been how do we extend credit responsibly in a seamless, sustainable, and compliant manner. And the way we have gone about doing that is by partnering with various different lenders, banks, to build products, whether it is installments, buy now, pay later, co-branded cards, which customers have grown to love and they've scaled over time. So what I'm really looking forward to is, in this new partnership with L&T Finance, how can we invent the next generation of credit solutions for consumers in India? Because I think the space is ripe for digital disruption. I think Gen AI is definitely going to be one key enabler of it. And so how do we really make the consumer experience super seamless? How do we improve the quality of underwriting? How do we tailor make products for every consumer? So I think there is endless possibilities and I'm really looking forward to it.
Great. Can we get along with this?
Yes, I would now like to invite Mr. Roy and Mr. Nerukar to kindly come behind the screen to kickstart the exciting announcement. And ladies and gentlemen, you have a job to do over here. As we did in the beginning, we're going to count down to 3, and gentlemen, you're going to place your hands on the screen. 1, 2, 3. Give it up, ladies and gentlemen. my God. Well, let's give this a big, big round of applause, ladies and gentlemen.
Sanjay, would you like to say something about it?
So I think wonderful to be here. So Mayank, a direct question, okay, and don't, you can't consult ChatGPT. Okay, Kunal's session is over. How difficult was it in terms of when you chose L&T Finance as a partner?
You know, actually, I was going to say that it was very easy, but it was a very difficult decision. We spent months thinking. No, I'm pulling your legs. I think it was a very straightforward decision. I would say few things that stood out. Like I will maybe say 3 things that really made the decision very straightforward and easy. I think starting first with the vision, I think Sudipta, that you laid out when you joined as a CEO, that you really want to really transform the way credit solutions are being presented to the customers, which resonated very well with our vision of serving millions of customers who are underserved today with innovative solutions. So I think that was starting with the vision, completely aligned with how we were thinking. Second, of course, your expertise in B2C credit. I think you guys are leaders in two-wheeler financing, commercial vehicle financing. So it's a good testimony that you can handle customers at scale, and you have done that in the past, and you aspire to do that in future. And last but not the least, I think today's event is a testimony to how L&T is embracing the futuristic trends, technology, AI, which will help us invent and simplify and create new solutions, right, for our customers. So I think that made the decision very easy. However, now, Sanjay, having said that, how do you think we can bring our complementary strengths together to serve these customers well?
Okay, great.
No, I think it's the partner, the brand, the ethos, and this customer obsession that matters. And we are so proud to be part of this journey together.
I think from our side, Mayank, and for this, you just do ChatGPT on what is the strength that Amazon gets to the table, just ChatGPT. And the one thing that we figured out was customer obsession. So Sudipto, if you remember, we said we want to go live only with few partners. We have to be ethically right for the customer. We have to be able to achieve scale. And what is right for the customer has to be done. So I think Amazon, the fit was extremely simple, and hence I think the entire relationship went on very beautifully. And let me share with you, so there were very tough roadblocks in the last few months of journey. But I think together as a team, we came out of it very strongly. So for us, it was clearly customer obsession and ability to handle scale through processes.
Absolutely.
Well,
yes. So I would like to invite the leadership team. Okay, please.
Thank you so much, sir. Thank you, gentlemen, for sharing your valuable insights. The outstanding efforts of both the teams throughout this year-long project are clearly visible, and I am sure we would all like to give a big round of applause to them because it is commendable. As the saying goes, success is a habit. And as a team, we have embraced the mindset of victory. With this thought, I would like to now invite Mr. Sudipta Roy, Mr. Mahendra Nerukar, and Mr. Vikas Bansal to ring the gong as a powerful symbol of our collective achievements as we celebrate this momentous occasion.
Congratulations.
Ladies and gentlemen, this ritual not only honors our success stories, but also serves as a reminder of our journey together and the milestones that we have reached as a united team. Come on, give it up!
So we are live.
Louder, let's go!
Thank you.
Well, ladies and gentlemen, give it up for these brilliant minds on stage. Now your applause has to be really loud for them so that their smiles are wider. Thank you, ma'am. Thank you so much, gentlemen. I request you to now take your seats. Everyone else, you think that it is about time for you to take a break, but it is not. I need you all to kind of wake up and give everybody that was just here a very big round of applause, because I think we're getting a little loose on the energy here. Louder, everybody! Once again, many congratulations for the launch to both the teams. Our next segment addresses a critical topic in today's financial world: responsible credit risk assessment innovations with AI. AI's ability to assess credit risk accurately while ensuring fairness and ethics is a vital discussion point. I now invite our moderator for the upcoming panel discussion, Dr. Gautam Sanyal, advisor, L&T Finance, to the stage for his opening remarks on the panel discussion. Dr. Sanyal, can we have you on the stage, please? All right, Dr. Sanyal seems to have stepped out for a minute. In the meanwhile, I would like to invite on stage Mr. Rajesh Kumar, the Managing Director and CEO of TransUnion Sibyl, to share his thoughts. Sir is ready to go home right after this. So you came in with your bag. Give it up for him, ladies and gentlemen. Come on.
Thank you all. Thank you, first of all, L&T, for having me on this dais here today. But I must start with a caveat. I am neither a techie nor an AI expert. Having said that, I'll start off with, are we getting the slide here? Yeah. So I'll just start off with talking a little bit about our approach to AI. I think first things first, hugely excited about the transformative potential of AI, but I must also say that when it comes to credit risk, most certainly it's peppered with a lot of caution. We are very excited about the usage, but before we get into the discussion, I'm just supposed to kind of introduce our approach to AI. I think from our perspective, very clearly what we are seeing is the ability now to use very large data sets versus the traditional models, then the ability to create many more new variables than we used to in the past with the traditional models or traditional data sets, and most importantly, the speed to do all of this. So the way we are looking at AI really is to enhance what we do already today. It is not some overly revolutionary theme of a complete overhaul. And last but not the least, I think it is super important to understand, first of all, where the lending industry fits in this world. The starting point is where we are today. So if you look at where we are today, when you talk about regular data science and analytics, you will see a huge spectrum across the board in terms of evolution, in terms of stages of adoption of analytics itself. If you look at the lending world, look at the kind of scorecards being used today or number of scorecards being used today, I think we are still at a very beginning stage, which also makes me kind of make a point that it's an interesting transition from this world into AI. It's a bit of a leapfrog, I would say. And that's why over the next few minutes, as we have our discussions, I'm going to be talking about what kind of caution and an iterative approach as we go through this transition. I think I'll stop there and wait for the other panelists. Thanks.
Thank you so much, Mr. Kumar, for your insightful remarks. I would request you to please take your seat for now. We'll have you back on the stage for the panel discussion shortly. Now, ladies and gentlemen, I would like to call upon Mr. Sachin Seth, Regional Managing Director, CRIF India and South Asia, to share his thoughts. Let's give him a big round of applause, everybody.
Hi, everyone. Good afternoon. Sachin here. Thank you, L&T, for inviting us for this August gathering. As you know, this panel, which is supposed to be immediately after our sort of initial pitch, is all about how to make credit underwriting better and use of AI, right? So I'll probably just give a point of view from CRIF perspective, that how we are looking at use of AI in better risk management, better underwriting, use of data, etc. And then obviously there'll be more questions in the panel discussion. So can we move the slide, please? Yeah. So just some introduction. Many of you are working with CRIF already. So CRIF basically provides the full stack of decision sciences, or you can say the credit underwriting and insights. So we do have basically the CRIF High Mark as a brand, which is the bureau, the MFI bureau, consumer bureau, and the commercial bureau. Then we have CRIF Connect, which is the account aggregator, along with bank account score or statement analyzer kind of model, or open banking kind of model. And then we use basically a lot of data science to see that how we integrate both of them using all the technology, right? Now, so I'll just talk about specifics of that, what is our point of view on use of AI, ML, and such kind of stuff in the credit underwriting space. Next slide, please. Yeah. If you could give me the pointer, that would be better. But yeah, so what I'm going to talk about, see, I think in one of the so I think I was listening to some of the speakers earlier, and I think one of the word was used that, you know, if you have a hammer, you don't need to really look for a nail, right? I mean, you know, so AI does not mean that you have to fit AI everywhere, right? If there's a nail, you need to find a hammer, right? So same thing, even I am going to put it in a way that when you do credit underwriting or credit decisioning, while we have technologies like AI, ML, and we have a lot more coming up, whether it's a ChatGPT, Gen AI, etc., does not mean that, you know, we have to use all of it. I think it's all about making right decisions. So just a perspective I want to share that, you know, if you look at two areas of which are the core of underwriting, one is credit bureau score, and second is basically the banking analytics, which is using the account aggregator model. This is where you are able to, if you look at credit bureau score, by using certain models of ML, you are able to improve Gini by, let's say, about a 5% or so. We have seen that, and we can get into more discussion about it. If you talk about banking analytics side of it, that's also become very powerful because the segmentation and the categorization of basically income and expense side of it has also become a very good input for the integrating into credit underwriting and analytics part of it, right? And I'll just give you a little bit more dope on that. So in this case, what happens is that, you know, the sharpness can be brought in the underwriting, whether you are using a custom scores or whether you are looking at a standard scoring model. And with more than 50 crore Indians data, starting from microfinance till, let's say, commercial side of it is already existing with the bureaus, we are able to actually refine it further and bring that 5% upside on the Gini, right? And that's a significant sort of improvement in the underwriting with so much of data already being available. If you look at it on the banking analytics side also, basically you can get early warning signals, you can do better capital management, you can do better collections, and even, you know, that's an open banking value-added service which integrates with the bureau, and that is where even Forrester has recognized it as one of the differentiating factor. So how does it work? So if you look at it in the banking categorization model, which I'm talking about in the open banking perspective, basically we look at that the ML models are used to look at different set of categorizations, different set of spends which are there, and I think it brings a lot more sharpness in terms of that, you know, how your customers, you know, financials are behaving, right? How the income, and the more you are able to categorize it better using ML, the better you are able to basically predict that what would be the sort of behavior of the customer. And the same is basically used to see that how the AI models can be created on top of it And that's where basically we can then institutionalize it. So that's how the integration is working between the both. And I've just put down that, food and drink, entertainment, travel, education, every kind of basically expense can be categorized using a sort of banking score model and integrated with the bureau score as well. In the bureau side of it, so basically bureau size is that we do have basically a lot of products wherein indexes have been already built, whether it's a two-wheeler score, whether it's a custom score for, affordable housing and things like that. And that is where what we are doing is that looking at the holistic data of the bureau, you are able to get insights that, how your potential customer can behave. And that's the journey I was talking about for the 5% improvement, right? So in this case, again, but the regular validation and the governance is very important. And that's where we work with clients like you to do that. And this basically also uses machine learning models to be able to provide that kind of a journey, right? So this is a short presentation I wanted to share. I'll be with my sort of eminent panelists together with here and would basically look forward to answering any questions here. Thank you so much. Thank you.
Thank you so much, Mr. Sej. I request you to kindly take your seat for now. We'll have you back shortly for the panel discussion. Up next, ladies and gentlemen, is Mr. Kedar Kulkarni, co-founder and CEO of Hyperverge. Sir, may we please have you on stage. Ladies and gentlemen, please welcome him with a big round of applause.
Check. Yes, thanks everyone. Thanks for being here. Hyperverge is an AI company. We started in 2014. We started as a group of research students out of IIT Madras. And over the period, I think we used to represent IIT Madras and India in robotics. After some time, it became very clear that we have been kids in a toy store working on very academic problems. And in 2014, we decided to work on a lot of real-world problems. And that's what brought us to BFSI. And if you can go to the next slide, please. That's what brought us to BFSI. We are one of those unique companies that is bootstrapped. We had raised $1 million in funding, but never raised anything after that, and have been doubling in revenue initially every year and then every 2 years. One of the few companies that is profitable. Hyperverge has done 1 billion KYC checks. So all of us, when we need to open a bank account or a brokerage account or a credit card, or if we need to engage in any financial product, I think KYC is a process that we all do. Have you all gone through this process? And you remember how this process used to be a few years back? We would always submit an attested Aadhaar or an attested PAN, and it would take like a couple of days or a day to get those things activated. Today, in fact, if you walk into a telco like a Jio or a Vodafone, there is a 80% probability that by the time you walk out of the store, your SIM card is already activated. Or if you use any of the new age lending apps, or if you use any of the new age brokerages, you will mostly have your loan approved or the account open within few minutes, if not within few hours. So I think that's a process that Hyperverge powers. When we talk about 1 billion, it's about 1/8 of the world's population that has gone through this. It means that the technology has to work not just with 5G, 4G networks, it has to work with 3G and 2G networks for a country like India. It also means it's not enough if it works on very nice devices like iPhones and high-end Android phones. It should work on a phone that costs $5,000. So these are the places where Hyperverge has had to really, really push to make sure that this kind of a number happens. From a technology perspective, I think we all love digital, but the moment you go digital, we also are exposed to a lot of fraud. So there are so many different type of fraud attacks that happen. Today at 5 p.m., in fact, we have a demo which we are going to do on deep fakes and how deep fake based fraud happens. But as we evolve, so do the fraudsters, and there is a lot of work that needs to be done to prevent them. So Hyperverge, be it the face recognition tech which NIST certifies, or the anti-fraud tech that organizations like IBETA certify, Hyperverge has been a leader, one of the only people from India who regularly participates and regularly brings back good ranks for our country. In terms of enterprises that work with Hyperverge, we have 100+ banks and NBFCs that work with Hyperverge. L&T Financial Services has been an amazing partner in this journey. So obviously, starts with them. We have 7 out of the top 10 brokerages in the country that work with Hyperverge. Almost 50% of all general and health insurance is on Hyperverge. And very simple applications that we don't think about on a day-to-day basis. If someone is delivering a Swiggy order to you or an Instamart order to you, how do you know that it's the same person who was onboarded on the platform and not a friend of theirs? So lakhs of drivers that drive for Swiggy, Zepto, etc., they go through a random identity check at some point in the day to ensure that we as customers are safe. So without us knowing, there are a lot of places where this technology gets applied to ensure that we all can have safe transactions. Looking forward to the panel. Thank you.
Thank you so much, sir. I now invite, ladies and gentlemen, our moderator for the upcoming panel discussion, Dr. Gautam Sanyal, advisor, L&T Finance, to the stage for his remarks on the panel discussion. Sir, can we have you on stage, please? Ladies and gentlemen, give it up for Dr. Sanyal.
Good afternoon. So, I have some questions that naturally occurs to, I think, most of the people when people look at credit assessment, credit risk assessment, and AI. And if we can go to the next slide. So, first question is that will AI replace all the human underwriters? I think this same question came about when first credit risk models were introduced about 3 decades back. But except few segments, we still are not in a position where credit underwriters, human credit underwriters have been eliminated altogether. They're still there. With the new wave of AI, the same question has come back, that will AI make the human credit underwriters redundant? Second question that comes to mind is, does it have the potential to surpass the human expert level of performance? Now, even 20, 30 years, since last 20, 30 years, there has been few studies to see whether models can match the expert human level. Limited experiment with credit managers underwriting the same cases and models underwriting the same cases. From the few studies and experiments that we have seen, the broad understanding is the model beats about 95% of credit managers, at 5% of credit managers possibly, at times 2-3% credit managers do beat the models consistently. The problem is that all human credit underwriters, they believe that I am that 2-3 underwriters. So on an average, credit models do beat, but not all credit managers. Now, if you look at the current wave of AI, it's all about Gen AI, particularly with the advent of ChatGPT, right? But if you look at it, and if you deeply look into the subject of credit risk assessment and credit scoring models, this historically has been about predictive modeling. So the question that comes to my mind, that the recent wave is all about Gen AI, and historically credit risk assessment is about predicting the default, predictive AI. So how do they marry? How do they gel? And when I look at literature, except certain limited studies, maybe there are studies happening within the industry, but I'm referring mostly to the published researches. There is limited study on the efficacy of AI, the modern AI on credit underwriting, and the results are mostly inconclusive. So it's an interesting area to look at. But however, having said that, there can be very important use cases, which is not trying to probably holistically trying to predict a default, or credit risk assessment, but in the whole credit process, there could be very important use cases that can be tackled by AI. And last but not the least, explainability and bias has always been issues for AI models. And we know that being in a regulated industry, the explainability and the bias is one of the most important aspects looked at by regulators and other stakeholders in general. So we will hear some answers to some of them and the views from our expert panel in the next few minutes. Thank you.
Thank you so much, Dr. Sanyal. I request you to kindly remain on stage as we welcome our panelists back on the stage. Mr. Rajesh Kumar, Mr. Sachin Sheth, and Mr. Kulkarni, please come and join us on stage so that we can begin the panel discussion.
No, I think we need to come.
Welcome back on stage. Over to you, Dr. Sanyal.
No, there's no one. So, my first question is to Rajesh. Rajesh, how CIBIL is using or planning to use AI in the entire process of credit assessment? I know CIBIL has got a score and many other areas of modeling and analytics. So how is CIBIL using AI or plans to use AI in the coming days?
Hanji. Thank you. I think, first of all, for me, I start with when you have a new technology on hand, I think you start with an assessment of what is the change that's required. None of us change anything in our lives for the heck of change, right? What are we really trying to solve? What are we trying to achieve with AI? Right? I don't want to change for the heck of change, right? But having said that, you can't, the power of AI is so much. So first is the thought process. So my thought process really starts with what's the new problem on hand when it comes to our market, our economy. I think the real problem is that, I don't mean problem, it's the problem statement, so to say, is that today we have a huge change today versus when Gautamji and I were actively managing large portfolios in our prior stints. If I look at 10, 20 years back versus today, what's the difference in the marketplace? I think the first real difference is obviously Indian demography, right? The young population is much bigger in number, much higher in terms of percentage. Then if you look at the loan books today, in the past I remember our 6 metros used to be 60-70% of the book. That's very different today, right? The tier 3, tier 4 books are much bigger than they used to be. Then the socio-cultural habits, right? We all used to start with first we want that home loan, and then the next 10 years we paid most of our salary paying off the home loan. But with the young population today, there's a lot of change. It's more lifestyle-based than wealth creation-based habits, right? No, these are tectonic shifts. Now, why am I talking about this in this forum? I'm talking about it in this forum because there starts the first question. The data, before we go to AI as a tool, the data that we have today as lenders or as credit bureau, does the data reflect these changes in the first place? If we were to go to 10 banks or NBFCs and look at their dashboards and MIS decks, would the data there reflect these changes in the first place? If it's not, we got a problem on hand. Then that's about the new variables. You can talk about AI and you can talk about creation of a whole lot of new variables. If it wasn't captured in the first place, what are we going to really build on, right? So I'll go at it sequentially. So first is the availability of the right data that reflects these market real changes that are here to stay. It's not a 6-month fad, all that we spoke about earlier. That's the first thing. Then the second thing is, when you look at what really has changed, and you look at underserved segments that we talk about, because in India, credit penetration is very low. For our economy to keep this growth rate, credit has to grow. They say that between credit growth and economy, there is a 2 to 3 times as a ratio, right? Typically, the credit market grows at 2 to 3 times the GDP growth rate, and I suspect it's a causative factor both ways. Right? It's not a one-way causative factor there. So coming back again, if that's the kind of growth rate that we need, then the low credit penetration is a problem to solve. Which means if you have to increase the credit penetration, you have to go deeper into underserved. Now we'll go back to my first point about, is the data ready? Are there the right variables available? And then let's come to the second point and link the two. If you want to go deeper into underserved, then that necessarily means we go deeper into bank statement, because established credit information by definition is not available, which means you're talking about bank statement information, UPI information, GST information. By definition, all three are hugely voluminous. We don't know how much is noise, how much has value, right? From a lending perspective, it doesn't matter if you went to Starbucks twice a week or twice a day. Is it relevant from a credit risk perspective, right? So whole lot of text mining, which means your classification of data, the categorization of data, and then taking out the meaningful sets of data and linking it to the right customer segments, right? And to do all of this, absolutely, I think AI is going to be hugely useful, because we can handle much larger data sets. We can work with 2 to 3x the kind of variables that we used to work with. But obviously, that brings me to the last point, that through all of this, right, it is when you talk about underserved, etc., it's a whole new segment. We all worry about biases, etc. From our perspective at TransUnion CIBIL, I think our real focus is to ensure we serve the objectives that I've stated so far. How do we use the new technology, get the right data to solve for higher penetration? And in that, the one point to add before I hand over back to Gautamji is, I think the very customer segmentation. When we talk about underserved, I worry about the age-old customer segments. It's the same for the last 10, 15, 20 years, right from the loan systems of the bank. Today, a good example is when we talk about MSMEs. Lots of work to be done on credit penetration into MSMEs. We talk the same micro, medium, which is based on turnover. I keep thinking that with AI, with this kind of data available and the new tools, segmentation is something that we have to annihilate, the existing customer segmentation. We don't need to term them based on turnover, based on your income groups or your SEC classical classifications that have been existing since my college days. It can be A1, A2, A3, it can be B1, B2, B3. It's just a whole lot of mix of a new set of information that has relevance, absolutely notwithstanding any possibility of a bias. I think I'll stop here and wait for the next.
Thank you, Rajesh, and nice to hear from you about the new way of looking at segmentation from the classical ones. I'll come to Sachin now. Sachin, digital lending is the order of the day. And now we have this wave of AI. How is CRIF looking at this, and what are the opportunities that you are exploring?
Sure, thank you, Gautam. So first of all, Rajesh has already stolen the thunder. So whatever is left, I have to now add to that. So thank you. So Rajesh did cover entire spectrum of things, but I'll probably try to take it to next level of sort of deep dive. So what we see at CRIF is that first of all, obviously any kind of digital lending, what we are doing comes with a higher set of risk, okay? Because your decision making is quick. When you are making a quick decision, you need to have enough amount of data in the system with various sort of parameters to be able to make a decision which is going to stand for the logic on which it is made, right? Now, having said that, I'll classify this into 3 parts. So first and foremost, when we talk about AI and use of that, and I did cover briefly in my presentation, see, if you look at it, products like, say, two-wheelers, CD, if you look at products which are very standard credit cards, any kind of such products which are combination of secured, unsecured, typically what happens is that when you're making a decision, if you bank on a bureau data, which is obviously stands the test of the time, but by using certain amount of machine learning, what we are able to do is that probably 5 to 10% improvements we can bring by doing certain kind of indexing. Okay, so what I mean by indexing is that, let's say, if you are using a score, you have built a model on top of it, but if you are already also working with bureau to basically see that how can I get certain attributes which are of a certain cohort. Let's say Karnataka is having a certain amount of delinquency, or let's say UP has certain amount of delinquency in certain categories. Now these are the things you have to collate the data yourself and you have to keep refining your models. But if you are looking at bureau to provide, there are ways to do it that you can actually build scores on top of it, and wherein that index scores will be able to help you refine that part, which is 5 to 10% of, let's say, reduction in the bad rate, or let's say uplift, depending on which side we are looking at, right? So that's first. Second, also, I did talk about open banking. So very powerful tool today in the underwriting is available is use of account statement analyzer with open banking through account aggregators. In CRIF, because we are one of the unique player wherein we have account aggregator, open banking platform as well as bureau, and within the boundaries of the regulatory framework, we do work with the clients to see that how we are able to look at categorization. And that's what I mentioned, that looking at categorization through machine learning is very important. We have seen that in use of account statement analyzer also, many times players are not able to look at even whether the salary, which is a recurring payment, or a pension, or some kind of a rent, if it is not having a unstructured classification, you are not able to do it. But that's where we have built the models of ML, and we are able to basically classify. Once you classify that, you are able to actually put the risk in the right category, right? And that is also able to help you significantly in terms of your underwriting along with the bureau data, right? So that's the second part. Third part, Rajesh covered very, very, very well. Again, what happens is that if you look at MSME segment, the income streams are not consistent. Today, when Zepto becomes popular in Powai, which means that 30% business of Kirana stores in Powai has gone down. Now, which clearly states that a Kirana store having taken a loan is basically will have a certain amount of difficulty in fulfilling that, right? Possibly. But if you are using an account statement analyzer along with the bureau as a cross tab, you will be able to see decline in the income, and you will not wait for delinquency to come, right? And you will be able to do early sort of collections, or you will be able to decide that whether you do upsell or cross sale of the loan or not, right? So I just wanted to go a little bit deeper into it and say that use of ML specifically along with the AI models, we are able to do this kind of sort of innovation, and that is what basically will be able to make underwriting more sharper.
Thank you, Sachin. Kedar, how do you see the use of alternate data in credit assessment and also during onboarding KYC aspects? And at Hyperverge, you must have seen various lenders and across different geographies, right? So would you share some experience in the space of this use of alternate data and maybe an overlap with AI to the extent it is happening today?
So when we think about alternate data, the most important thing that all of us are thinking is how can I have more information when I underwrite, or how can I create better underwriting decisions, how can I have a better portfolio, how can I have lower NPAs. There is a completely different aspect to alternate data that I wanted to bring out. In the course of onboarding so many customers, right, we regularly go and ask customers, hey, what is it that you want? In this room, if I ask all of you, right, we all deal with financial products, what is it that we look for? I think the first thing that I get from everyone is, I want to do minimum number of inputs, minimum number of steps. I don't want to keep putting data 1, data 2, data 3, data 4, data 5, right? Minimum number of things you can ask me, that's great. The second thing that we consistently hear is, I want the decision to be faster. I don't want the decision which takes 2 days, 3 days, and I'm waiting on it. Because then I don't know, should I apply with some other company? Should I wait on this? So I just want the decision to be faster. Third, I think we are at an age where we want the decision to be logical, where if, for some reason I'm rejected or my interest rate is high or whatever, I get to know what is the reason, right? So I get to improve that parameter over a period of time. And I think the fourth thing that we want is, I don't want upsell and cross-sell calls coming to me, right? If I am using one product, I don't want 10 upsell, cross-sell calls coming to me all the time about every product you have, right? Maybe when I have a need for a product, I would want to reach out to you. Or if you intelligently understand what product I should now use, you reaching out in a personalized way is okay, but not a generic way. So one of the uses of alternate data, if we go by this pattern, is to really, really personalize the experience for the customer, right? If we know that, hey, so many things I can get about this customer, I can reduce those inputs, then we prevent customer drop-off. Every step where we are asking the customer to give one more piece of information and one more piece of information, it's a drop-off point, right? We actually see it on our dashboard. Every time you ask customer for some information, it's 5% gone. So these are hard-earned customers, money spent in marketing, downloaded the app, and you lose the customers. Similarly, when I look at alternate data, if I can use that to personalize the upsell and cross-sell experience, it's hugely valuable. So I would just point out that alternate data, like it powers better decisions from a credit underwriting perspective, if we can use it to personalize the experience so that it's not a one-size-fits-all, I think that's going to be very powerful.
Thank you, Kedar. It was extremely useful. I'll come back to Rajesh. We need to be also mindful about the time left. Rajesh, you have handled the largest retail portfolio ever in the country. And so I want to know from you, from very practical standpoint, particularly in case of AI, when we hear about inclusivity, fairness, these issues, from a very practical banker's point of view, what would be your experience and what would be a couple of suggestions that you would like to make?
I think I'll go back to what you said in your initial presentation, right? 15, 20 years back, the same questions that we were trying to answer when we first got into scorecards. And then we went on to implement some 200-300 scorecards in the organizations we were working for. The questions remain the same. In the interest of time, I'll be rapid. I think first things first, it is super important to understand what is sitting in our development set before we build models, be it AI or the regular traditional models. What is sitting in the data set, in the development set, versus what are your business objectives. Simple example, if you do 60% of your business to existing customers in metros, you built a model, but then 3 months later, you're trying to grow your business in deep geo with open market customers, there's a mismatch. We keep using the word bias on extremes in terms of diversity or whatever, discrimination, but I think there are lots of biases as these that I'm giving an example to that we don't pay enough attention to. And then moving on quickly, the overall governance. To build any model, I would spend maximum time on the assumptions and definitions. I don't care much about the statistics, etc. There are people much better qualified than I am, but I would spend a lot of time on every single assumption and definition in the scorecard building process. Moving on quickly then, in the implementation, I think the early and quick feedback, the feedback loop, every case that goes bad subsequently, where was the decay from the probability of default of a 2%? When it happens, it's 100%, right? Where was the decay? Which variables went? So that quick monitoring and feedback loop. And I think lastly, the deployment too. We talk a lot about models. Over my 3 decades today, I know that probably the right deployment is as important, if not more important, than the sheer models. I think I'll stop there.
Thank you. Sachin, I'm going to change the question a bit here from what we've been discussing. You have shared what Griff is doing, and so what are some open use cases, may not be live, but possible using AI in the credit space that comes to your mind?
So thanks, Gautam. So I think, yeah, obviously this is a space everybody is evolving, working with the clients. So it's nothing that CRIF has done is full and final. It's a journey. But one of the things we wanted to share, I want to share is that we have done about 70, 80 POCs, wherein we have worked with the clients to see that if you are using, again, I will go back to the same point that, bureau versus other sources of data, which is bank score, etc., etc. And how do you basically use these models to basically expand the sort of risk bucket? So let's say if you are saying that 2% bad rate, now can that 2% be multiplied by 3 and say 1 to 6%? And then as an underwriter, I can make a choice that whether I want to pick up that 1% or 2%, because that 2% is a accumulation of 1 to 6%, right? So using open banking and account statement analyzer, we are able to do that. And I think Mr. Rajesh Bansal also talked about it in the opening keynote, that there is a certain amount of bias already there versus male versus female, right? Even with the same salaries, underwriting is being looked at in a different way. So what we can do is that to counter that bias, basically, if you look at account statement analysis and to expand that 2% into 1 to 6%, then you are able to make decision better. Same happens on, medium level of risk. Again, you can expand to basically 5 to 6 times, right? So this is the way you can use the technology to basically have that bias pinpointed and basically looked at very, very sharply, compared to putting it in a bucket and saying that, okay, this is what the customer I don't want to deal with or I want to deal with, yeah.
Thank you, Sachin. Kedar, same question to you, but you are seeing multiple organizations across multiple geographies. May not be live right now, but what are the kind of exciting use cases that you are seeing in the industry?
Yeah, I think the industry is going to explode with AI, because when I think about it, finally, for everyone, we were discussing backstage what's the differentiation, right? And I think the differentiation axes are 3 key axes. One axis is about price. Can we provide the customer with a better price? Can we provide the customer with a better performance? And can we provide the customer with better service? Now, the power of AI is that, one, it impacts all these 3 axes. If you think about it, I'm able to significantly lower the cost of personalization or providing a personalized experience. We are able to bring out performance that couldn't be matched by most human teams, right? How do you make a decision on, say, someone's identity in a matter of few seconds, real time, right? If someone has not clicked a photo as the RBI would like it, how would you ask the user real time to say, hey, this photo won't be accepted by RBI? Why don't you follow these guidelines and take a better photo? So this kind of performance, it's impossible with any kind of a human system. And then the third part I mentioned was about service, right? So if I think about it, think about account verification, right? Which is a very basic process in every lending journey. If you ask me to do it using UPI, I'll be very happy. But my mom would not be able to figure it out at all. If you ask my mom to do using a checkbook or a passbook, she would be able to do it really well, but I have no clue where my checkbook or passbook is. I have never used it in the last maybe 1 or 2 years. So when I say service, if we know what the user is about and if we are able to dynamically personalize the experience basis the user, right? So the UI breaks, right? It's not like I'm going from one screen to the next screen to the next screen to the next screen, and that is a static, be it you or me, going through the experience, right? If there is a capability that the UI dynamically changes basis who is going through that experience, I think that's going to be a phenomenal opportunity. And then we don't have to remember where to click, where to press, which we all find so difficult getting trained on, because the UI is fluid and it is going to keep changing as per who the user is. So I think that's a brilliant opportunity if I have to talk about one.
So what I get to hear from you, actually, any use case which will help in the customer experience, hyper-personalization, making segment n is equal to 1 to give the unique experience to the particular customer, such use cases would be the most important use cases for AI to tackle. Thank you so much. So being mindful about the time, very quickly, we will touch upon, Rajesh, with you. Explainability has always been an issue, right? With the new wave of AI, the explainability is even a bigger issue. It's a technical challenge, right? And we know regulators in one form or another wants explainability. So your comments on explainability.
I think it's true for every new technology, but from a practitioner's perspective, I think we must understand that innovation and regulation, there will always be a lag. There is nothing to regulate till there is innovation and put to practice. But by the time it's put to practice, regulators come in and then suddenly all the practitioners are in a bit of a shock. I keep thinking about this cycle and I wonder why. What is so sacrosanct? We're talking about protection of personal information, usage of PII, etc. I think it's for the industry to be much more proactive as we introduce new technologies than to wait for regulation. I think that's my broad message, really.
Thank you, Rajesh. Sachin, a quick comment on this?
Well, yeah, I mean, just to quickly add on top of it, I mean, see, first of all, we are in the regulated industry and from bureau perspective, and then obviously when we use AI or ML, I mean, there are certain guidelines by RBI to have, which are similar in nature in terms of validation of models, empirical data, you have to prove that how did you really build it, or let's say, what are the steps involved, periodic checks, model validation. So I think from that perspective, regulatory framework is also going hand in hand. Obviously, it is not that anybody wants a surprise because it's a serious business. So from that point of view, I think as of today, whatever regulators are providing as a framework, within that we are able to work. But as the technology improves, I'm sure regulators will also open up and see that how we work together on that. Yeah.
Thank you, Sachin. Kedar, very quickly, how much of regulation you are seeing, governance from regulators and their concern globally in different markets? Very quickly.
I think all regulators are concerned, and as Rajesh sir mentioned, I think as innovation happens, then the edge cases happen, then the problems come, and the regulators have to work towards solving them. I think the only two things that all of us look for in the ecosystem is that the regulator is willing to understand or listen on why something is happening, and they're willing to give some time to make the necessary corrections. I think as long as that is there, all of us understand that with any new experiences, there are going to be some edge cases, there are going to be some bad experiences that happen with any innovation.
So what you were saying, that regulators are open to looking at this new technology, if I may say, and maybe take a step forward in understanding it better, whether new governance rules which are amenable, keeping the customer convenience in mind, can be taken forward.
And we are in a country which has the most entrepreneurial people. So I think regulators don't have a choice, right? I think this is a country that is producing amazing innovation. And I think in the next 20 years, we are going to see a lot more than what we have seen in the last 20.
Possibly, yes.
So I think the regulator will have to also buckle up.
Possibly, yes, of course, taking care of the systemic risk that always lurks in the dark in financial services industry. I am sure that regulator will take the necessary steps.
Yeah. As a practitioner, the only thing that we follow, right, it's a very naive way of looking at it. Don't do anything that if it's on the front page of a Times of India or a Hindu, you will not like it.
Absolutely.
So just don't do anything like that, be it small or big. If it's on the front page, if we don't like seeing it, let's not do it.
Absolutely. Thank you. Thank you, Kedar. So I'll not take further time to really summarize. We have already overshot time. So if there are time for a couple of questions, we'd invite a couple of questions from the audience. Yeah.
Yeah, so I have a question for both the credit bureau chiefs here, right? So, if you look at the actual experience, I'm trying to play the devil's advocate here. If you actually see the data, the fintechs and the NBFCs, which heavily have dependent on AI and ML, surprisingly in similar product categories compared to banks who use very traditional scoring models, they'll end up having much higher NPAs. Today, everybody knows fintechs in various segments have a much larger NPA. What is going wrong here? I mean, despite all the usage of AI, ML, better technology, they tend to have got this wrong, and perhaps the traditional banks And especially your alma mater does a much better job, right, Rajesh? So any color on that?
Uh, I probably wouldn't want to comment on an industry segment per se, but still to try and address some of your questions, Suresh. Uh, I think models are just tools. You can give me a Ferrari tomorrow. If I drive badly, I'm going to go crash, right? So, to very simply answer your question, I think the credit philosophy at work, to my mind, that requires introspection. It's not just the models. After all, the models do what we make them do. I hope I've somewhat answered your question.
No, exactly same. I mean, there are safest cars in the world, the most sophisticated, but it all depends on the driver, how you drive. So all the models, everything is there as a tool. At the end of the day, it's a risk appetite of a organization, the people who are working, their perception, their ability to and that's where banks are traditionally known to have a more conventional approach on risk, whereas the younger companies have a bigger risk appetite, and sometimes, it does backfire, yeah. So there's no specific answer for any specific company. That's a typically possibility. Yeah.
Yes, sir.
Chandrakant Salunke, President SME Chamber of India. Since both of you mentioned about SME, most of the financial institutions not providing the data on instantly or immediately, and a lot of entrepreneurs and particularly SME enterprises are facing problem when they approach for any financial assistance or support from the bank. So what is it now the technology has developed? Instant data is receiving by you, or how much time they are taking, and why the entrepreneurs are facing problem, end of the proposal, the bankers or financial institutions are taking report. What is your thoughts on this, both of you, Sachin and you?
I think very simply, this is an ecosystem issue. It's not to do with the bureaus, but in a more generic sense, to still take a minute on your question. The ecosystem is getting ready. GST data, I think, is very important. When you talk about SMEs, right, you talk about GST, it's hardcore trade information, right? And then smaller MSMEs, the EPFO data, how many employees, electricity bill is supposed to be a good surrogate to how the business is doing, right? In the absence of very reliable financials. Now, all this information is about the digital ecosystem of the country. All of this system is available, I think, with the account aggregator framework and the whole lot of other initiatives of the government. The effort really is to make consented data available more easily. Not all of this is going to come into the bureau or any one place. It's really about how we easen up the ecosystem for a customer to say, I am okay, I'm giving my consent to using my EPFO information or my GST trade data for the lender to take a better decision. Now, this process of providing consent, getting that information, processing that information for usage, all that we spoke earlier, I think that's where the current focus and the effort is. We have a very progressive government and regulators, and hopefully it's already available, maybe a little more fragmented, maybe still a little cumbersome as of now. I'm sure it's a matter of time before all of that is more easily and quickly available. That should solve a lot of the problems that we just mentioned.
So just to add, your point is very valid, and obviously people want banks. I mean, if you look at it, the whole focus is that they want to provide loan to someone wherein they are sure of what the data is telling them, right? So just to add here, traditionally what used to happen is that, see, if you see MSME, how they grow. I mean, they become like first a proprietorship company, then they become partnership, then they have private limited. Now there is a journey which they take over 10-year period. Now, traditionally, what has happened is that even a bank or NBFC, when they are doing underwriting, they typically, when they look at a bureau score or they look at peripheral data, and till they come to the GST layer, there is a lot has happened in their life, right? Now, today we have a facility that banks and NBFCs can pull personal and commercial bureau together. So today, I mean, if I was basically a proprietorship company for 5 years, and then I moved to and I set up a business with my brother or my family members, or I did something else. Today, banks and NBFCs do have that facility, which we can provide. So it is improving, and traditionally it was purely on a personal or on commercial, and that it used to give a half the picture, right? But yes, there is a lot of work to be done by everybody in the ecosystem, as Rajesh mentioned, and everybody needs to contribute to that sort of ecosystem data, and that's where MSMEs will get benefit of that.
Thanks, Rajesh, Sachin, and Kedar for your insights. Thank you.
Thank you, Gautam.
Thank you so much to our panelists and Dr. Sanyal for the thought-provoking discussion. Ladies and gentlemen, please give it up to them. I request you to kindly remain on stage as I invite Mr. Sachin Joshi, Chief Financial Officer, L&T Finance, to hand over the memento to our panel members. Sir, please stay on stage. Dr. Sanyal, could you stay on stage, please? Come on, ladies and gentlemen, give it up. Thank you so much, Mr. Joshi, for joining us. Thank you so much, gentlemen. You may now take your seats. Underwriting is a key aspect for any lending organization. With the growth of digital India, there are a lot more data points available to improve the underwriting. To delve deeper in this arena, I would like to invite on stage Mr. Raju Doti, Chief Operating Officer, L&T Finance, along with Mr. Debarag Banerjee, Chief AI and Data Officer, L&T Finance, Ms. Usha Datta, Chief Credit Officer, L&T Finance, Mr. Biswadev Banerjee, Business Head, Two-Wheeler Finance, L&T Finance, Mr. Rohit Bhargava, Business Head, Farm Equipment Finance, L&T Finance, Mr. Siddharth Kumar, Head, Rural Digital and Application Engineering, Digitization, L&T Finance, and Mr. Dhananjay Singh, Head of Digital and Application Engineering, L&T Finance, to unveil the project Cyclops for L&T Finance, Two-Wheeler and Farm Equipment Finance businesses. Over to you, Mr. Doti. Ladies and gentlemen, before this begins, give it up for the wonderful team on stage.
Good afternoon, ladies and gentlemen. We had some script to be spoken about. Then I realized that this is a time when people are virtually having their one foot across the street to go have that food. And then there are two videos we want to unveil about something called Cyclops. So what is Cyclops? I will let Debarag talk about it in a bit. I was just thinking around that there are ingredients and then there are recipes. And then there are chefs who come and they make certain dishes. And we like some dishes of some people, and then we do not find some to be that appealing to us. So what is this Cyclops and what is this credit engine that we have crafted, we have curated, and if I have to use that word because we are talking about food cooked internally with these master chefs in line that we are going to unveil to you. This is the credit engine, one of its kind, without feeling and rather with a tinge of arrogance, I can say, this is first of its kind in the country. We have a very good confidence with what we have built for what purpose. Two things went into it. Everyone spoke about AI. the first thing that is gone into it is the customer primacy. We want to keep customer in focus at all point in time. And last but not the least, we do not want to have our sight moving away from margins. At the end of the day, this is a company which wants to deliver the best-in-class return to its equity shareholders. With these two key primacy of objectives, Cyclops has been curated. This particular credit engine has gone with a tremendous amount of effort in last 1 year, but the genesis of it lies in 30 years of existence of L&T Finance. There has been a rich data, and then there came a lot of richer insights into it. I would request our Chief AI and Data Officer, Debra, to speak about his views about this engine.
Hello. So a lot of you might have heard about Cyclops from yesterday's and today. You know, Cyclops, the word Cyclops perhaps conjures up this image of the Greek one-eyed giant that can see everything. In a way, that is a good metaphor, because this engine that we created, it not only looks at this narrow angle of just credit reports, but looks at all sorts of data and tries to understand from them this one-eye focus on how well a customer is going to do, and then what is the right credit offering for them. We looked all across to various sources of alternative data, banking, payments, geolocation information, and so on and so forth. And that was Cyclops 1 for two-wheelers. Today, we are also here to talk about how it will do things for the farm segment, which is its next exciting journey, where we are not just looking for data from the ground, but how it looks from from a satellite. In brief, you see some keywords here. All of them are kind of summarized, and we are very proud to bring Cyclops as this next generation, transparent to the user, sharp underwriting engine that not only depends on this alternate data, but it actually delivers it at a lightning speed.
Yeah, Usha, briefly, if you can give some credit insights.
Thanks, Raju, for this. Of course, I think we have been speaking about Cyclops for the last 2 days, and there are multiple benefits. Some of it that comes to my mind, on top of my mind, is when a customer applies for a loan, what is it that he requires? It cannot be a one-fit-all offer. So Cyclops enables us to better our offers to the best of customers, and it also eliminates the worst customers out of our ambit. That's the first. And in our endeavor to kind of bring customers who have never been served in bureau, the ability to underwrite without too many documents is currently not available, which is possible through Cyclops Trust Signals, which helps us to bring customers more to the financial domain. Last but not the least, we use multiple ML score models, which are pretty advanced in compared to what we were doing about 2-3 traditional models, which gives the best offer to the customers.
Thank you, thank you. So when it comes to two-wheeler, I recall my own experience of buying a two-wheeler. It was almost 30 years ago. I was a young lad at that point in time, wanted to buy a scooter because that fitted in the budget. And it took exactly 9 days to get that loan from one of the reputed NBFCs at that point in time. And now here we are talking about Bibi, you as a business head of two-wheeler. You mentioned the other day to me that we have had cases where we have sanctioned loan in less than 1 minute. Would you want to talk about it?
Yeah, I would like also you to experience it in 9 seconds, because that time it takes 9 years. You are still young. You will get from the Cyclops. In fact, we are pleasantly delighted with the 3-dimensional approach and the substantial benefit it is giving on the customer assessment. Because of this, we are also getting 3-dimensional benefit. One, from the customer point of view, when we look at, customers are getting enhanced LTVs because of their credit assessment. That is giving us benefit to the dealers because on the conversion rate. And for us, the benefit is also coming because of the better credit quality of the customer. So we are very excited about it. We have seen the early results now. So I think it will go a long way.
Without much ado, let's have AV for two-wheeler Cyclops. The hallmark of a good organization is to replicate the success and the innovation which you see as something that is going to make the change in the future that is foreseeable, is to replicate that in other products, which is where we thought if we have got the great credentials and the success from this side, why not have that for other product of ours, which is farmer finance. And that's how we decided to replicate it. I will request Siddharth to speak about it as to what led to this.
Sure. Thank you, Raju. So couple of things which we thought about implementing it for farm finance. So the business that we are in and the customer segment that we cater to, it's extremely important for us to go beyond the traditional sources of information, add as much of various non-conventional data sources, assimilate that, make meaning out of that for better credit decisioning. And Cyclops does exactly that for farm finance product. I'll give you an example. We are using satellite data. And as part of that satellite data, we are trying to capture and analyze what kind of water reservoir levels are there, what is the rainfall level, what kind of soil conditions are there, what kind of cropping patterns are there. And based on all of this, we have a fairly good understanding of farm health. And when I toss in, say, geographical data and economic data, for example, link it to MSPs and village-specific details, then we have a next leg where we have an understanding of income potential of customer and risk associated with it. So better credit worthiness assessment. And like that, we have many other alternative data sources. And what Cyclops does in the end is that it blends all of it, takes it with the bureau data and the banking data, and gives us a complete profile of the customer. And that's what makes it extremely unique. And we can say is that it's like extremely powerful next-gen credit decisioning engine. Dhananjay, would you like to add something to this from tech perspective?
So thanks, Siddharth. I think talking about Cyclops tech itself is going to be a very, very deep topic. But I would like to touch base, Raju, if you permit me quickly. Sure. Everyone has been talking about Cyclops from business perspective, right? We talked about Cyclops two-wheeler, which has its own data sources, all kinds of data that we talk about. Cyclops Finance brings in data that Siddharth talked about, satellite data and the rest of the other data. Now imagine all this we are talking about, and each one is inviting all kinds of technology in the mix of it. From technology perspective, when we started building this about 6-7 months back, one of the things that we had is how can we productize it? And that was the most difficult part of Cyclops journey. is that how do we make sure that no, we go and product. It is not at all a project for us. Productizing meaning that once we build it, we should be able to build other things very, very quickly. With the most, what we call it is velocity side of product, which we have two-wheeler, the most complex side of product, which we have farmers in terms of data that we collected. The aspect of technology has been covered in these two products. And as a result, we have been able to assimilate all kinds of technology that exist at this point in the world today to make this a real product. So it is, as we look at some of the other products that we have in lined up, whether it's SME, personal loan, or some other loans and other LOBs that we're talking about, I think building them is going to be a probably, just a quick journey, assimilation, and then bring it back and stitching it. So rolling out other business and of course running it like a factory model is going to be what we are looking at Cyclops in terms of our journey. I think that's a quick one.
Yeah, that's great insights, Siddharth and Dhananjay both. Thank you so much. Rohit, you are a business head of farmer finance. I am a farmer, so I like you more because of that as well. So what exactly led for you to find insights and the benefits of Cyclops for the farmer finance?
It's very simple, sir. I put it very simply. With the entire ability that this system has been built in to compile the data, which they just spoke about, so many things all together, and give insights, meaningful insights, I think this will take L&T Finance way ahead of others on the credit risk parameters. Now for me, this is epitome of excellence and our promise of innovation that is going to be delivered through Cyclops.
Great. Very well summed up. Why not we all have a look at then the AV? I will not lie to you. I had not seen this AV myself. Actually, I wanted to have a look at it at the same time as you all will look at it together. When that farmer, with that stressed look at his face, touched that blue color bonnet of the tractor, believe you me, That touching of those fingers or that bonnet literally touched the core of my heart. That is what we want to make a difference in the lives of our customers. With that, ladies and gentlemen, thank you so much. There is a booth over there. Please do visit our Cyclops booth. Thank you so much.
Come on, ladies and gentlemen, let's give it up for these amazing minds on stage. Thank you so much, everyone, for joining us on stage. And now, ladies and gentlemen, thank you for your enthusiastic participation so far. We will now take a break for lunch, and we will reconvene at 2:30 p.m. to continue our exploration of AI in financial services. See you all soon, and bon appetit.
PGSC, and I didn't think I'd say that, but boy, I make a whole lot less mistakes using this one.
और पेपर एक और एक और पेपर एक और साइन
में फंस गया रे फंस गया रे
होम लोन के पेपर वर्क में बीत गई जिंदगी, इसीलिए L&T फाइनेंस कंप्लीट होम लोन का प्रोसेस है फुली डिजिटल, ताकि लोन मिले कम से कम टाइम में। L&T फाइनेंस कंप्लीट होम लोन, कम नहीं कंप्लीट।
इसके लोन में तो टाइम लगेगा ना?
जितनी स्पीड में बुमराह की बॉल जाएगी, उतनी स्पीड में L&T फाइनेंस का 2 व्हीलर लोन भी आ जाएगा।
मतलब मेरा रनअप कंप्लीट करते करते
डिजिटाइज प्रोसेस कंप्लीट हो जाएगा।
मेरे स्पीड पकड़ते पकड़ते
हाई स्पीड से अप्रूवल मिल जाएगा
और बैट्समैन के बूम होते होते
आप बाइक लेकर जूम हो जाओगे।
क्या बात है, ये तो मेरे जितना फास्ट है। L&T फाइनेंस, जस्ट जूम 2 व्हीलर लोन्स। मैदान पे गेम चेंजर मैं, पर बिजनेस का गेम चेंजर L&T फाइनेंस बिजनेस लोन्स। नहीं समझे? क्योंकि सिंपल सा प्रोसेस दिलाए जीत, मैदान कोई भी हो। क्विक लोन डिस्पर्सल यानी चैलेंज का डिसमिसल। फ्लेक्सिबल लोन बना दे आपको मैन ऑफ द सीजन। तो हुआ ना L&T फाइनेंस बिजनेस लोन गेम चेंजर।
L&T फाइनेंस बिजनेस लोन, आपके बिजनेस का गेम चेंजर।
खाली 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 रे खाली खाली रे कमरा खाली रे देखो जीवन खाली रे देखो ऊपर खाली नीचे खाली 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 रे।
होम लोन के बाद डेकोर के लिए पैसे नहीं बचे, इसीलिए L&T फाइनेंस कंप्लीट होम लोन के साथ मिले होम डेकोर लोन भी, जो आपके नए घर को बनाए कंप्लीट। L&T फाइनेंस कंप्लीट होम लोन, कम नहीं कंप्लीट।
बीवी को कॉल कर। शॉपिंग पे गई होगी तो पापा को लगा। दोपहर है ना, सो रहे होंगे। बॉस को लगा
वो तो काम खेलने गया होगा।
कोई तो होगा जो तेरा फोन उठाए। एक है। कौन? डेडिकेटेड रिलेशनशिप मैनेजर।
जब आप L&T फाइनेंस कंप्लीट होम लोन लेते हैं, आपको मिलेगा एक डेडिकेटेड रिलेशनशिप मैनेजर जो हमेशा आप ही के लिए अवेलेबल होगा। L&T फाइनेंस कंप्लीट होम लोन, कम नहीं कंप्लीट।
एक और पेपर एक और पेपर एक और साइन
में फंस गया रे फंस गया रे।
होम लोन के पेपर वर्क में बीत गई जिंदगी, इसीलिए L&T फाइनेंस कंप्लीट होम लोन का प्रोसेस है फुली डिजिटल, ताकि लोन मिले कम से कम टाइम में। L&T फाइनेंस कंप्लीट होम लोन, कम नहीं कंप्लीट।
इसके लोन में तो टाइम लगेगा ना?
जितनी स्पीड में बुमराह की बॉल जाएगी, उतनी स्पीड में L&T फाइनेंस का 2 व्हीलर लोन भी आ जाएगा।
मतलब मेरा रनअप कंप्लीट करते करते
डिजिटाइज प्रोसेस कंप्लीट हो जाएगा।
मेरे स्पीड पकड़ते पकड़ते
हाई स्पीड से अप्रूवल मिल जाएगा
और बैट्समैन के बूम होते होते
आप बाइक लेकर जूम हो जाओगे।
क्या बात है, ये तो मेरे जितना फास्ट है। L&T फाइनेंस, जस्ट जूम 2 व्हीलर लोन्स। मैदान पे गेम चेंजर मैं, पर बिजनेस का गेम चेंजर L&T फाइनेंस बिजनेस लोन्स। नहीं समझे? क्योंकि सिंपल सा प्रोसेस दिलाए जीत, मैदान कोई भी हो। क्विक लोन डिस्पर्सल यानी चैलेंज का डिसमिसल। फ्लेक्सिबल लोन बना दे आपको मैन ऑफ द सीजन। तो हुआ ना L&T फाइनेंस बिजनेस लोन गेम चेंजर।
L&T फाइनेंस बिजनेस लोन, आपके बिजनेस का गेम चेंजर।
खाली 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 रे खाली खाली रे।
A very good afternoon, ladies and gentlemen, and a very warm welcome back to L&T Finance's RAISE'24, India's premier AI event in the BFSI sector, where we are reimagining financial services with AI. Now, I hope you all had a refreshing lunch, because I, for one, really enjoyed mine. But I need to know whether you're with me or no. So, are you with me? Oh my God, someone really enjoyed their lunch. Rest of you, I don't know, what's up? Are you with me? So there is this left side. I know you're sitting a little further away, but you can be a little louder. Yeah? One more time, everybody, are you with me? All right, now we see and we feel that there is energy in the room. Ladies and gentlemen, our next session is a crucial one on the role of AI in economic development. We all agree that AI is now a crucial driver of growth, innovation, and transformation across industries. To delve deeper into the same, it is my privilege to introduce Mr. Neelkant Mishra, Chief Economist at Axis Bank. Sir, can we please have you on stage, please? Give him a big round of applause, ladies and gentlemen. He will be sharing his insights on how AI is reshaping economic landscapes. Over to you, sir.
Yeah, thank you. Good afternoon. I know this is a post-lunch session, so I'll keep it crisp so that people don't start nodding off. I would like to start with this framework, and I think it's very important when we assess the impact of any technology, not just AI, on the economy. The first step is invention. So, and we'll focus on where the invention style is going. This tends to be the most, I would say, romantic session, a part of this, right? That you are doing cutting-edge AI models, you are increasing the number of flops, the floating point operations per second that you use by millions or billions. But this by itself has very limited impact on the economy. The second step is innovation. So you develop a very core fundamental technology, and then you need to find solutions which make sense, which start to solve economic problems. And the third, and a very critical phase, is diffusion. How deeply is this penetrating? So take an example. Development of the transistor happened sometime in the 1940s. And for the next, even till the next 10, 15 years, most of the computers were still using vacuum tubes. It was only starting in the late 60s that integrated chips started becoming really powerful and the Moore's law compounding started. So invention and innovation were separated by almost a decade and a half, 2 decades. And it is only now with, like these smartphones being way more powerful than the first super minis that I worked on in the early 90s, that really the impact of the transistor is starting to get felt. So same with chemicals. So you do a lot of chemical R&D, and what you see is that eventually glue or coating is developed, and then you see the Fevicol 5 rupee pack, and it starts to affect large technologies. In fact, you will see the economic impact of that can be quite significant. There are several types of innovations. So there are what you call leading sector innovations. So these are very narrow innovations, and there are general purpose technologies. So GPT, so AI is a GPT. What you can see is that the impact time frame for general purpose technologies is actually quite prolonged. So say, for example, the development of crude oil, or not development, the discovery of crude oil and the various uses of that, you will see that in the 1850s and 60s, people started to find that it could be used for kerosene. Then its cycle was kind of waning off, and then automobiles came, and then new uses for crude oil started to get developed. So when you think about really broad-based general-purpose technologies, their economic impact is actually felt with a significant gap. And the breadth of impact is, of course, very wide. So you will see a very wide range of sectors that get affected or disrupted because of this. This is, for those of you who work in the tech sector, this is normal. For those of you who are not, this is the Gartner hype cycle. Over time, every single product goes through this curve. So you have the initial phase where what you see is, you have what you call the innovation trigger. Then you have expectations start rising very rapidly. This is when venture capitalists raise a lot of capital, they deploy a lot of capital, all kinds of pie in the sky ventures get funded, and then you see there is a peak of expectations, and then you see the trough of disillusionment. That then people say, oh, you know what? Like what is being discussed now, right? That if you're already investing $150 billion into AI, it should be generating at least $600 billion of revenue. Now, where is the $600 billion of revenue? So one very famous VC has already put out those questions. So we are going to see, and frankly, my own BTech project many decades back was in artificial intelligence, and so we have seen periodic troughs and peaks, and so you're likely to see this happen again for many of these products. And then you see the slope of enlightenment. Then you eventually see progress coming through. Now, the way to read this is one, I don't have to read all the fine print there. There are many technologies in AI. It is not just one technology. Some, as you can see from the empty circles, are very mature. So computer vision is very mature. So I believe this morning that anecdote of welders or in welding using AI tools to figure out welding is proper or not is based on computer vision. Believe it or not, I worked on computer vision nearly 30 years back. And so this is a very mature technology. So it is like 2 years from reaching peak productivity. But then you see the triangles. These are on the other extreme, the orange triangles. So AGI, artificial general intelligence, Elon Musk would have us believe it's happening in 5 years. Some people think it is 25 to 30 years away. Gartner, whose hype cycle I've used, is kind of the consensus. In financial markets, we use Bloomberg consensus. It's somewhat like the technology consensus, and what you see is that they think it is more than 10 years away. So there are various parts of this AI, which are the solution development, the innovation part, which is at very different phases of development. But it is reasonable to think that some of these solutions are going to start impacting us right now. The next phase is diffusion. So how widely, how quickly can we start using it? So what you see on the left is so this is a study done by the Federal Reserve Bank of St. Louis. They looked at job openings and requirements. So one way of finding out how a certain technology is diffusing is how many job openings demand knowledge of those. So what you see is that the diffusion of smart devices in job openings was very rapid. So from 0% in 2007, it was nearly at 100% in 2017. So within a decade, having knowledge of smart devices or familiarity with them was a necessary condition. On the other hand, if you see the right-hand side chart, that is on cloud computing. So what you see is that from 2007 to 2019, the movement is only about 50%. Despite all the productivity growth promises that AI brings, and I'm not trying to dish them, the fact is that most surveys suggest that companies are exploring ideas. So when I think about my own research team in Axis Capital, we are starting to use. So we have a text-to-voice product that will start using AI, generative AI, but it's a very small part of our distribution process. So companies are only just about starting to explore how well you can use AI. So the Copilot is easy to get. For those of you who haven't used it, it's actually quite powerful if you're writing reports or summarizing them. The Teams note summaries are very powerful. But in terms of actual productivity drivers, these are still very, very minor. So the adoption of some of these tools, I think, is more likely to be more like what happened with the PC. So the PC, as you can see, started in the 1980s. By 1985, we had about 10 to 30% penetration, more in offices than at home. And then we saw, over the next 3 decades, a slow increase. So when you think about the productivity growth that any technology brings about, so like for AI, there will be improvements in the productivity of individuals. So when I think about myself as a research analyst, I can retrieve information faster. I can write much better, much faster. I can show a chart to Copilot, and it will generate text for me. I mean, I don't want to use that text. Very often it's wrong, but that's a good starting point. And then I can distribute much faster. But there is also the pace of diffusion. I mean, how many of the research analysts on the street are going to be using that? So all of this will determine how well AI is, how much of an impact AI will have on economic productivity. So there's a very famous paper. Many people think it's wrong, but at this stage, I think it's perfectly fine to have open debates. The gentleman who got the Nobel Prize, Daron Acemoglu, so he says that the impact on the economy will come through automation, where AI replaces labor. There is task complementarity, so AI will help segments. There is deeper automation, so some of the automated tasks will become really more efficient. And of course, there will be new tasks, and we'll explore some of this. But again, to summarize it, using my own example, there are certain types of reports which AI can generate. So for example, if we cover 300 stocks in Axis Capital, writing a summary which is required for a certain type of client who's only interested in certain sectors, currently one person is doing it, it can get done by AI. It is, as I said, helping me and my team work faster, generate charts faster, find information faster. So all of those things are starting to happen very well. Some of this is generational. My daughter is much faster, 8-year-old is much faster with ChatGPT when she's doing her homework. At this stage, I'm not discouraging her from plagiarism because it's a skill to learn ChatGPT, but she is much more natural with it than I am. And I think as she grows older, as with most kids in her generation, I think she will be much more natural. And that's another important lever to keep in mind, that I can see most of us here are not really young. So a lot of habit change, how we engage with technology is something that is also a generational shift. So that is another reason why diffusion tends to be quite slow. So let's see where the trends are. And so on the innovation side, meaning how fast computing is changing, so what we've done here is we've plotted, this is of course from Epoch, on the y-axis is the training compute, the floating point operations per second, the flops. On the x-axis is of course the years, the publication date. What we have taken is the frontier models. So we have not taken a line of best fit on all the dots. We've only taken the dots for the top of the class in any given year. And what you can see is that the slope is already slowing. Now it is slowing very gradually. So in the first decade, it was at about 6.7 times a year. It is now slowed to 4.2 times a year. I mean, it's quite incredible that the number of operations that required to train a model are growing at 4.2 times a year. But this is already starting to slow. And some of the new models that are coming up in terms of feature richness are already starting to disappoint. So this is not the end of the world, meaning that we are kind of at the peak of expectations. We will see a period where digestion happens, where new innovation, new technologies, business adoption, diffusion picks up. But it is important to observe that this is starting to slow down. There are harder constraints, which I think we may not hit. So there are constraints on power, right? So if you think about most of, or a large part of what we count today as AI is convolutional neural networks. Neural networks are trying to ape the human brain. So just like the nice rubbery I just have, and which is firing my brain right now, the same neural network will be powered by nuclear power in a data center. We are starting to now, so you will see that Microsoft recently bought a defunct nuclear power plant. Companies are realizing that you need to have power plants very close to data centers, and that power itself could become a constraint. And the cost, because the cost of compute will then get dependent on what is the cost of the electricity you are using. So there are thresholds which you can see, to the power 29, to e to the power 29, or 10 to the power 29 flops. That is where the threshold in 2030 could be. in terms of just the power availability. You need a lot of chip production. Now, these are all very, I would say, reasonable projections, though, of course, the margin of possibility is much wider in the sense that today, a lot of the chip design can be done using AI. So as over a period of time, what we have seen is that the cost of designing a chip has been rising very rapidly because every transistor that you put requires a human to kind of place it. And therefore, chips today cost several $100 million to design. AI is now starting to help write that code which designs the chip. So the process of chip design itself is becoming more efficient. But the process of chip manufacturing may not become that efficient. So will there be a constraint on how many transistors we can produce? And then, of course, there is a data scarcity because all of these engines require a lot of data. The constraint very often can be, how much of data is available which can be used for training. Now, this, as things get digitized, is rising exponentially. But in terms of the impact it can have on a training model is, of course, also constrained. So these are, and then there is a latency, which, of course, is the highest. But so it's not that AI has unlimited power. So unless we can use the floating point operations per second very efficiently, the impact on the economy may not be that good. So that's on the hard innovation side. Invention side. On the innovation side, you can see GitHub. For those of you who don't know, this is the repository for code. So all programmers keep their code here. They collaborate. Some of the code is made public. So what you see is that the number of AI models, the code segments that are using AI has risen by 98% in the last year. So clearly, more and more solutions are being developed. What is very important to see is that some of these are, I would say, enablers. Instead of solving problems, they're enabling more code to be written. So the impact is actually almost exponential. And therefore, the process of finding solutions, business solutions, software solutions that solve economic problems is just about taking off. So there is, so while on the invention side, we may be starting to hit or at least conceive limits which we need to start addressing, like power and chip production and all of that, on the innovation side, in trying to solve business problems, things are actually just about starting to take off. In terms of the impact, so there's a whole range of estimates at this stage. I think we have to be aware that this range exists. So you can see Korinek and Su, when they say if AGI is achieved in 5 years, the impact on overall productivity and economic impact could be 10% a year, which I think is really, really the upper end. I don't think that is very likely. You can see the Nobel laureate Akemoglu thinks that it should be 0.07% to 0.06 to 0.07%. So that's the range of gains that he's talking about. He is perhaps the most pessimistic of the lot in terms of the impact. So maybe the real impact, as we all see in economics, could be somewhere in the middle. So we will see 1.5%. So that is the kind of range that when the PC was introduced, it has had over the last 15, 20 years. So 1.5% a year impact on economic growth is a reasonable one to look for. Now let me focus on the importance of diffusion. This is a chart, which is a very old one, 2019 from iSpirit. You can see on the x-axis is GDP per capita. On the y-axis is the percentage of adults with a bank account. And every dot is a country. So you can see how much of an outlier India is. So we did not do any of the inventions here. We did not invent the smartphone, or we didn't invent the transistor. We did do Aadhaar, but Aadhaar, which I have the privilege of heading now, but even Aadhaar basic technologies were all developed outside. But we did drive diffusion. So we shortened the time frame by nearly 46 years. So if you had just done a line of best fit, and if we had depended on GDP grow or per capita GDP to grow for financial inclusion to reach a certain level, it would have taken us more than 40 years more than it did. And I think this is where the role or the importance of diffusion. So we used publicly available technology. We just created smart solutions and then using government machinery, pushed it really hard and really deep. And I think that's where the impact can be felt. We have some very hard problems to solve, like on healthcare and education. Just like in financial inclusion, there is a very, very vexed problem of unit costs, because it costs so much to do branch banking, you could only provide it to a small number of people. And because a very large number of people could not afford that, their productivity didn't grow. They couldn't process payments, they couldn't do a lot of things. The moment you bring down unit costs, everything starts to become possible. And we are seeing some of the innovations that L&T Finance is driving are all based on this massive amount of data and financial inclusion. In healthcare as well, you can see the whole list of things in traditional healthcare, like the patient outcomes, the cost of scanning through an X-ray, the cost of scanning through a set of slides on histopathology, the use of historic data to find out best outcomes. All of that, when done in a traditional way, is very expensive, because you are relying on the cost per person of a highly trained doctor. But the moment you start using technology, some of these can be brought down. And I think on both education and healthcare, there is a significant opportunity for us, including in India and in large parts of the world, to bring down unit costs and therefore significantly drive productivity. So you can see on the right, these are just estimates from the National Library of Medicine, how the treatment time per hour can be brought down dramatically. And as you see more and more reduction in the treatment time itself and the accuracy, the cost of healthcare, the cost of education can actually be brought down. I'll spend, I know I'm over time, I'll take 2 more minutes. So there is a lot of pessimism on job losses. And you can see that even, Korinek and Sue, what you see on the right is that if you get AGI, so if you don't get AGI, you see a lot of product output growth, which is the left-hand side chart, and the wages keep growing. The moment you get artificial general intelligence, you see the parabolic curves down, right? So then the need for humans, especially people like me, who rely only on brain work to survive, there will be question marks. I'm not going to the extent of what apparently Kunal told you this morning, that you'll become credit risk. I'm hoping I won't be a credit risk, but the point is that this can be quite disruptive. But, every time in the past, you see we have given quotes. Leontiev said that computers will kill the economy, drive out labor. Didn't happen, right? So if you read about the history of the Morgans, Jack Morgan, who was the son of John Pierpont Morgan, he had a house in London where there was one person whose job was to tweak the clocks, right? So, or rather, sort of wind up the clocks. New types of jobs come, and what I must say is a 150-year trend. You see the left-hand side chart is the number of hours worked per month per week in the Western world. For 150 years, 170 years, this has been falling. And I think so what John Maynard Keynes had said in 1930, when he wrote about the economic prospects for our grandchildren, he said that in 2030, the number of work hours will fall to 15 hours. That you'll have to work 15 hours a week. There's no need for us to work 100 hours a week. And therefore, I think if we manage the distribution of the effort, the work, I think the concerns on labor loss and inequality will drop. Secondly, what you see on the right is that commercialized leisure goes up. So when most of us were growing up, we would spend our spare time in parks. Today, we pay money for that. Not going to parks, no one goes to parks these days. We watch movies, we play video games. So we travel, we see the world. And so commercialized leisure then starts to take off. So it is wrong to think that all of this automation, so on one thing I'm reasonably sure of is that the pessimism on job losses and the disruption, social disruption, is something that we should take with a pinch of salt. With that, I know I'm 3 minutes over time. I'll stop, and I believe there's a panel discussion where we can do questions. Thank you.
Thank you so much, Mr. Mishra, for sharing your expertise. Your presentation was both enlightening and impactful. But we are not letting you go yet. I request you to kindly remain on stage for the next session. Ladies and gentlemen, first of all, you need to give sir a very big round of applause. And as we continue our exploration of the transformative power of artificial intelligence, we are thrilled to bring you an engaging panel discussion on the AI revolution and the future of the economy. AI is not just reshaping industries, it's redefining the very fabric of economic systems, from enhancing productivity to creating entirely new markets. This discussion will delve into how AI is revolutionizing the global economy, the challenges it poses, and the opportunities it unlocks for the future. We are honored to have a stellar lineup of panelists who bring diverse and rich perspectives to this important conversation. Please welcome on stage Professor Anurag Banerjee, Professor of Financial Econometrics, Durham University. Mr. Banerjee, I request you to kindly make your way to the stage. Mr. Mishra, please take your seat. Our next panelist is Ms. Rajni Thakur, Chief Economist at L&T Finance. Ms. Thakur, can we have you on stage, please? Ladies and gentlemen, give it up for the wonderful lady. Following Ms. Thakur, moderating this session is Professor Paromita Goswami, Professor of Marketing and Social Innovation, Shiv Nadar University. Ladies and gentlemen, give it up for the stellar panelists and our moderator. Over to you, Professor.
Thank you so much for that introduction. I'm very excited to be a part of this panel discussion. Continuing with what Neil Khan said and made very important markers about how the economy might change, might not change, so we're going to hear more about that. I'm an academic, of course, and I'm not an economist. I'm a professor of marketing and social innovation. So I will predominantly take the discussion in the area of what happens to society, in addition to what happens to the economy. And there are different parts of the society, the different segments of the society. How is AI impacting that? That is what we will primarily move towards. So some of the things that are things that we need to think about right now is what will happen in terms of the society in general and the economy in particular, with the changes that are happening now. As a teacher, what I have found is as soon as ChatGPT came in, the way I had to design assignments had changed completely because I could not do what I was doing earlier anymore. So what does it mean for other people, other than teachers? So to Professor Banerjee, I will ask you, does AI really serve the underserved segments of the society, like those who do not have any credit history for that matter? And can it play a role in financial inclusion? I did hear your talk earlier in the day where you were talking about what it does to, when we have video kind of data and what it does to us and what AI can do. So I would like to hear your thoughts on that.
Yeah, thank you. I kind of did a bit of work on financial literacy, and so financial literacy's first problem is literacy. I think the way we see literacy is that we basically use symbols to express our thoughts. Whereas, I mean, AI might be helpful actually to improve that. We are, in the 75th year of our independence, we still have thousands of people who are still illiterate. So not only illiterate in terms of the language English we are using, presentations were in English, but even in local languages. But one of the things might happen, we might able to leapfrog you see, literacy itself is a technology. So, the illiterate people go and see movies and understand completely the stories. But give them a storybook, they'll not be able to enjoy it. Right? So what AI can do is to actually provide information through stories with visual and audio senses, right? You don't really need any technology. You can go to the time when cavemen were there. If you see the cavemen writing, they were not writing anything, they were drawing pictures. So you can go back to those days and you can still provide them services, and they require these services and you can leapfrog the idea of literacy, numeracy even. And that, I think, is the exciting development if it can be done for a country of 1 billion people. As you said, engineering might be hard because there are people who can't, there are chips is not easy to make and stuff like that. But I see them a more inclusive technology coming in. And we have seen that with smartphones. So that's my take on that.
In terms of data analysis, for example, like you were showing an example with the video thing, do you think it would be easier to actually analyze more data that way with AI coming in, especially the government data which we have, census data we have?
Of course, what is the real difference between the AI technology in the past? We are still using the same statistical models. So the real difference is that 40 years ago, you needed a lot of computation powers to change. I studied at ISI, so even before my time, there was a role in the department called computers. So these guys used to calculate stuff. And so somebody multiplied, somebody added, somebody did the matrix inverse and passed it to next guy. So it's like a computer passing information to each other. And it took, days to compute a 3x3 matrix. And now you can do it in a second, and people don't even know how to do a matrix inverse. So computation has evolved. So I think it will evolve even more. So computation has evolved, and it will evolve more, and that would help in more inclusive and accessible. We have already seen accessibility of data models. The thing has moved on from people like me who are in the universities to people who are actually using it.
Thank you for that. This brings me to what you were saying, Nilkant, that the healthcare industry and how you might not need doctors, or the amount of time it takes for a report to be generated, read that report, maybe diagnosis can be done faster. Makes me a little scared, like in any case when you go to doctors, you don't know what they're doing with you, and now machines will do it. So I'm like a little concerned about that, and I would ask you about it, like what are your thoughts on that, and also about education. Like what is the impact of AI on these sectors of the economy, healthcare and education?
Yeah, thanks. So I think that is where, at least for our economy, the challenges are the most severe. The problem with healthcare is that in order to make diagnostic tools, or starting with diagnosis, diagnostic tools to treatment, to even, say, performing basic surgeries, it is, the biggest cost is the cost of a doctor. And it is not just about the number of doctors available, it's about where they are available. So there is a surfeit of doctors in the cities, there is a dearth of doctors in the rural areas. What AI or technologies like that, robotics, can do is, one, make it available remotely. So today, remote surgeries are possible, but with one simple technician, can you manage a cataract surgery? You can. And all of this is based on, the pictures of the eye and using machine learning to figure out, where the needle should be inserted, how the lens should be taken out. And the moment you can bring down the unit costs to just capital, then things become very manageable. And then you can provide it at scale. So if a CT scan costs, say, 2,000 rupees, there is a certain number of people who can afford it. And because that number of people is mostly in the cities, there will be no CT scan available in the villages. Even in my hometown, it's very hard to get, and I grew up in Bokaro, it's very hard to get good quality diagnostics. The moment you can bring down the unit cost to 50 rupees or 200 rupees, suddenly it becomes available and accessible to everyone. It's like smartphones and how they penetrated. And I think a large part of product design or even the usage of that product by trained technicians and trained doctors is the cost of that CT scan or that diagnosis. And if you can bring down the unit cost by 1/10, I think the impact on morbidity, on mortality, I think on financial health, a lot of the financial distress in India is, the root cause is very expensive medical care. And similarly with education, it is a problem of getting high quality pedagogy, which is adaptive, to get it out to tens of millions of students. And I think the problem is you always have some good teachers, some good schools. I was reading this book called Invisible China, where they're struggling with the same thing. So in their vocational schools, maybe 5 or 10% of the schools are excellent, but 30% of the schools don't exist. Because they're on paper, they're taking money, but they don't exist. This is happening in China. And 40-50% are actually doing very bad quality teaching because you don't have good teachers. You don't have good teaching methods. And I think solving that at scale, remotely, and at low cost is something that AI can be hugely beneficial for.
That's, very hopeful. But I'm also wondering that when one thinks about, if one looks at the number of doctors available and the number of doctors required in our country, this would, of course, be very helpful. That is understandable. But also, are we going to take the teacher out of the system? Like, are the teachers not required? That human touch not required? Human beings not required?
Okay. Let's look at both of these two questions differently. So the number of doctors in India, when you compare it to what exists in the Western world, and let's ignore the US. US is also underpenetrated. Let's take a better healthcare system like Europe. I think the gap is 6 or 7x, right? So, and therefore, I mean, the point is not to take doctors out of the equation. It is to see how the same doctors can be used to provide more services, or in many cases, have less trained technicians provide many of the services which the doctors provide today. And giving them the tools and the robust controls. On the education side, I think the problem is absenteeism. See, you look at any data on school education in India, primary, secondary, the problem is the teachers take money but they don't appear. So to say that teachers is it like very harsh assessment, teachers should be taken out of the equation? I don't think that's the point. The point is that fewer teachers, more motivated teachers are given the tools so that they can reach out to and give better quality education to more kids. And very often it is also about fiscal constraints. So Bihar and UP, which are the poorest states of India, spend 6% of their total expenditure on education. But per capita, it is 1/5 of what Kerala spends on education. Because they don't have fiscal resources. So how do you bring down the pupil-teacher ratio? How do you make sure the teacher attendance is online? I mean, the UP chief minister very famously tried to take on the teacher unions. And even a strong chief minister like that had to pull back, because the teacher unions are so strong. So I think when you start to use technology more prudently, you don't just make it more adaptive, meaning, in any class, if there are 20 kids or 30 kids, the level of education is set by like the bottom 20%, or maybe the middle 30%. But if you can use technology, you can be adaptive, and actually your, the ability to train the good quality talents slightly better also improves. So there are significant gains to be achieved. I don't think teachers can be wished away or done away with.
Which also brings us to the question of other sections of the society. Like what about the gender issue? What are the caste issues? So I will ask you, Rajni, when loans are being disbursed, especially say microfinance, is the loan really going to the women, or is it going to the husband and who is doing business in the name of the wife? So is AI going to play any role in that, in really taking the money where you intend the money to go?
Let me step back a bit. The kind of revolution we wish were to happen in healthcare or education is something that we were wishing for financial sector maybe 10 years back. And thanks to all the data stack from the government, that whole jam trinity that we have now, that's a revolution that's at play right now in the financial sector. So the use case that you mentioned in terms of somebody muling for a female, or for in many examples of two-wheeler, female coming in for a two-wheeler without probably having a license or something. That's one of the easier use case for AI to handle, and it's built on simple theory that you can create. Credit is a behavioral thing, right? So you can create 10,000 micro signals and get a 360-degree view of the client or the customer. It could be on its geotagging, it could be on its other relationship with the banks, it could be on the expenditure pattern. So that's something that's probably easier use case, and there is definitely a use case for that. All the fraud detection models that we have, that's exactly the problem that it's trying to solve. In financial inclusion per se, gender is a smaller problem. There are credit data available that will tell you that around 50% of the credit eligible adult is still unserved. And another 16% is underserved. And underserved refers to the quality, the quantum, and at time when it needs. You have around 60% of MSMEs still talking about credit not available right when they need it, right? The gender gap is a smaller one. There are bigger gaps in terms of education. There's around 20% usage gap depending on how educated you are. So if you're better educated, you have better access to capital. And if you're less educated, you have less access. Now, that doesn't mean you need capital any less, right? Similarly, there is a use case around age. So if you are at 22 to 25 years, you probably, not really intentionally discriminated, but you have a less chance of credit being available to you, the right credit, transparent, affordable, and at the time you need, versus if you are a 35, 40 background, right? Now that's a problem that AI can very easily solve.
What about the elderly?
Now, AI is bringing to financial sector what was a concept in manufacturing and now in marketing as well, which is hyper-personalization or mass customization, right? So with the 10,000 data points that you have, it's easy to profile and miniaturize the information for each credit group that you are looking at. So this morning we had the gentleman from RBI kind of profiling each of the customer base that we have. It's possible for AI to do that customization of your customer base in a real-time basis. So by the time you have the data for somebody who's muling or for somebody who's elderly, to kind of get that data, by the time they fill in the form, it's possible to have the total credit behavior of that person profiled and be able to provide them with the financial requirements that they have.
Like the diffusion of innovation question that Neelkant was making, with the elderly population, it's difficult for them to adopt change. So in that context, like we know when internet banking happened, mobile banking happened, elderly population is not really,
So that is exactly what mass customization is about, right? So you know that there's a profile that's not very comfortable with an automated customer facing, and that's where as an organization it's easier to realign your workforce and
makes
work
sense.
on a human level with that person.
Yeah. We were talking about diffusion of innovation, which brings us to the next question of technology adoption. And technology adoption in Global South, how do we think that would happen in terms of the way the Global North has behaved Will the Global South behave in that way in terms of technology adoption? I was actually wondering, Nilkant, when we were showing that graph, what was the source of that graph? Was it based on the projections that were made? Was it based on a particular geography, worldwide? How does it go in terms of technology adoption?
So that chart of where Acemoglu and Carino, I mean, so all of that whole spectrum of, I think this is a global assessment or an impact on the global economy rather than just one single US economy.
So do we think the Global South is going to behave differently than the Global North in terms of the adoption of technology?
See, there is always a lag between, because see, like in any technology, the initial costs are very high. And therefore, naturally, a lot of the business solutions, the innovations that occur around it, occur in areas which can afford it. So if you see the total AI funding in India, today is still less than $10 billion. In the US, it is $150 billion. In China, it is $60, $70 billion. So as you can imagine, the countries that are ahead of the curve in terms of being able to invest, have the balance sheet to invest, will see solutions develop which are more appropriate to their environment and their economy. The Global South, because of its inability to invest at the cutting edge, is very likely going to be behind. But I think, like what we saw with, say, 4G adoption in India, we may be 7-8 years behind the rest of the world in adopting 4G. But because we are getting that cheap equipment, we are leveraging our own advantages, we still provide the cheapest 4G data in the world to the largest number of people. So there could be a time lag, but when we are talking about the impact on the economy, I think the Global South, with, say, a lag of 5-7 years, could actually perhaps be better off. The only thing we need to worry about is how concentrated the industry is. Because, see, if you look at the cost of compute, if today NVIDIA is very expensive, but I know of so many chip companies that are being funded that want to compete with NVIDIA, and by 2028, we'll be launching 2 nanometer, 3 nanometer products which will compete with NVIDIA. Similarly, everyone is funding large foundational models. The cost of compute and the cost of getting a query from that foundational model, if there is adequate competition, could be so cheap, could be so low, that maybe 10 years later, the Global South can also compete much better. So it's too early to say.
Okay. So this brings us to the next question of being an early mover in a market, right? So as an early mover, there is a question of diffusion of technology. There is also a question of you are making more investment, right? So I know that L&T Finance is doing a lot in the BFSI sector, and if you consider yourself to be an early mover, what are the challenges of an early mover?
Oh, there are plenty. First, there are these unknown unknowns, right? I mean, I think of a term analogy of Jhoom Kheti, where tribals move first and then they know the pinpricks and the hedgehogs that they have to face till they have finally cleared the land, and then it's ready for others to kind of get in. So there are plenty of unknown unknowns, and you don't know what you are navigating through till you have reached some distance. Then there are known unknowns. And, for example, when Kellogg's entered Brazil, it took them 23 years to break even, because they were essentially getting into a country which did not have the habit of having a breakfast. Or Star TV in India, where you kind of realize that women control the purses, and then you saw all the ad spends moving towards women and the shows moving towards women. So that's, you know that there will be some of these revelations that will come through as you navigate through the landscape of hitherto really not explored the region. But what will come up is something that's unknown yet, right?
Would
so
it
those
grow
are
the
big ones.
category then? Like, for example, by photocopier and Xerox became synonymous, but it also created a branding problem in some senses. So what would it mean for L&T Finance as an early mover?
I think early mover also comes with lots of advantages. I mean, Xerox remains Xerox for the longest time, and particularly in the data modeling perspective, you build in, you train your models, you bring in a market intelligence ahead of the rest of the competition. So by the time the others move in, you already have a captive model, customer base, and reach to niche areas that others will find it difficult to penetrate. But of course, in the process, you end up building what you would call public good in economic term.
Right.
So you do end up building, you do end up training your models in local languages, expressions, training them in nuances of how different languages, even within India, work. Or if you are working on, let's say, that whole lie detector that we were hearing about in the morning, what nuance really gives me a sense of, is the person's intent to pay, how strong is that intent? So those are the nuances. You do end up doing some good, you do end up having an early mover advantage, and it does come with its own challenges.
I love the idea of AI for good. It brings us to the question, Professor Banerjee, what would early movers of AI in general and in the financial sector in particular mean for Indian players and the Indian economy? I know that you definitely work on India and you also teach in a university in UK. So keeping that in mind, like how does it work?
Early movers, I mean, one of the things about technology is you might get stuck being an early mover, because if you remember Betamax versus the debate of, so you might get stuck into a bad equilibrium. Even now, if you look at historic technology, the fact that India or the developing world, I mean, going back to the question of whether we move first, is that the advantage of a developing world is that we don't have legacy technology, so we don't have sunk cost. So sunk cost is a big thing. And think about the trains. So 96% of Indian railways is electrified. 35% in UK, which was the origin of trains, is electrified. 0% in the US. So it is sometimes better to be late, but better to be not never, but at least better to be late, so that you are not having a large sunk cost. Of course, the other side of the story is that there is an early mover advantage. So it's not a zero-sum game, but it's a careful balance between whether you get stuck in a bad investment, or you can, but it's in the future, so you cannot figure out. I mean, that's that the English couldn't figure out there would be electric trains in 1800, but we started late, we could do it, and they couldn't. So it's the only time you can tell, because whether we are making bad investments or not.
And it's also, if I may add, the point of early mover is in what? In the sense that a lot of the basic science development that happened in Europe was actually converted into economic innovations or deployed as economic innovations in the US in the late 19th century, in the early 20th century. All the basic hard science work happened in Europe, but the commercialization more or less happened in the US. If you track the technology industry, most of the innovations on the chemical side, because remember that before the chip is ready, it is actually metallurgy, it is not semiconductors, or it is not electronics. Only after the transistor and the chip is made. So on material science, the Japanese are way ahead of the curve. But the countries that have benefited the most have been Taiwan, Korea, and China. So I think when we think about whether we are ahead of the curve or behind the curve, it is about which part of this chain from invention, innovation, and diffusion are we really talking about?
Yeah, got it. So, I'm also thinking that banking is something that I remember that when we were in school, and I'm from West Bengal, we used to have a piece by Jerome K. Jerome called 3 Men in a Boat. Yep. And it talks about how scary it is to go to a bank and open an account. The guy eventually got scared and walked away and did not open the bank account. So I'm wondering, this technology, which is new technology, so to say, My students, for example, did a project on the customer journey of Cyclops, which is their new two-wheeler segment product, and found some interesting insights on two-wheeler loans. Now, ATM or mobile banking or UPI did something for the consumers, right? So, however, effects were varied across different segments, whether it's elderly, time-poor consumers or resource-poor consumers. So will AI bring in a revolution in banking in true sense of the term, or will people still be, some sections of the society, especially the underserved, would still be scared?
Well, maybe, I think it kind of depends on the middle management of, because sometimes you do up innovation and then the middle management messes it up. I remember, 7 years ago, I was in Kazakhstan, which is not in the radar anymore. So I had to open a bank account. And I remember all I had to do is in front of a video camera, I showed my passport. The video captured everything. This is 7 years ago I'm talking about. The video captured everything and made me an account and gave me not a physical card, but an electronic card, and I could do all the transactions using that. Back here, I still have to go to the bank. They take my passport, take a photocopy. There is no scanner. Take my photocopy of that. I have to countersign each of the 6 signed passport copies, and then wait, at least 50 minutes to do anything. And even then people call me and say, your signature is not matching. So, so if this me, somebody who is probably more educated, I have a feeling that I hope this gets solved by the system much more better than.
So Neelkant, what is your view on that? Like Professor Banerjee obviously had.
You should come to Axis Bank. But no, we do it far better. So, no, I think see many of the frictional costs. I mean, the reason why banks insist on all of those countersigns and the photocopies is just that is a regulatory requirement, right? And so now in Aadhaar we have face authentication, and it is very robust. We have tested it out, it scales well, it's very fast. And, but face-based, KYC is still a challenge. Face auth-based KYC is still a challenge because of regulatory factors. But the reason why those regulatory checks and balances exist is that there tends to be a lot of fraud. There's a lot of money laundering. And I think what AI and tools like that do is enable runtime checks on fraud, runtime checks on money laundering, runtime checks on authentication. And in Aadhaar, we are starting to use a lot of AI and ML where people who try to fake IDs or generate fake Aadhaars, or, they get caught because we have those engines running in the back end. So I think some of the trust issues, some of the transaction cost issues can be significantly addressed by AI. Access issues, as Professor Banerjee again mentioned, that engaging with a computer using voice. What's wrong with that? And there can be voice recognition. So it's not that someone else can give the instruction to your bank account and get it done because the computer recognizes your voice. And I think those solutions, as they emerge, I think the penetration, diffusion of these banking services and the seamless nature in which you can transact in bank would become even better than it is today.
So, Rajiv, what do you think about what is AI really expected to bring to the consumer? So, if I'm a consumer, what are you offering to me with AI that you have in your kit now?
If I were to put it in one sentence, I bring in financial inclusion, which is a very transparent, affordable, and the exact financial service that you need in almost real time. That's where we are. There are some frictional costs at this point of time, but that's what it brings to the consumer, which means you could be an elderly and not comfortable with online transaction. It's easier for financial service players to kind of quickly work around their workforce and serve them in person. You could be a 20-year-old looking at a very quick credit on the go. It's easier for, again, financial service players to cater to that section almost real time. You could be looking at a lending for your SME, and you have probably not good enough prediction of your cash flow analysis, but there are these AI models that will help you get this served almost real time. So
And
that's
what would it mean
customer
for
goes.
you as a provider? Like, would it be more profitable for you? What would it mean for the economy in general?
So, all the productivity estimates that we saw right now, we're at a broader economy level, right? It varies across sectors, it varies across players. There are pockets where it's higher, there are pockets where it's lower. The rough estimates, at least as per what I have read, is around 35 to 40% reduction in costs. So that's flat out there. There is this whole gain around miniaturization of services. So you're able to kind of work around exactly as per the customer needs, so better customer satisfaction, larger customer growth, business growth. There is also the whole learning model that you develop, where you start getting that what I called as early mover advantage, because now you have you have a bigger model, you have larger customer base, you are able to train them better for what you are offering. So as a player, it kind of brings in an inherent strength in terms of, somebody mentioned revenue per employee, I think, as a matrix. I think it will start reflecting there very, very quickly.
That all sounds very hopeful. I'm not sure how much time we have for question answer, and if we do have questions, then if the panel would like to take a few questions. Yes, please. Maybe you can name the person for whom the question is directed.
Lata
Can I?
has a question, yeah.
Okay, well, very quickly an observation and then a question. I was thinking of this signature mismatch and stuff like that. Even as recently as early 90s, imagine where the share market was, because so many shares could not be transacted because of signature mismatch. And then with dematerialization, look at the amount of inclusion. So I'm very hopeful. Likewise, even KYC, DigiYatra has given as a formula. If that is introduced into banks, then, we solve KYC. I am hopeful on those accounts. My question is much more stock market and much more technology. Neelkant, if you please, since this is up your alley, immediately, how is AI likely to impact, say, tech stocks or GCCs? We are earning a lot because of services exports, both traditional IT, legacy IT, as well as GCCs and other services exports. Should we be worried? You give the impression that AI will hit much later in terms of labor. But immediately, any thoughts?
It is already hitting in the sense that if Google says that 25% of their code today is written by software, by AI, it is something that is already happening. So I know of tech startups, some of them listed, internet companies, where they have stopped hiring new developers. They have fired all their designers. So, so there are 3 designers running a whole portal. So even for our Indian IT companies, the tech companies, I think the first impact will be on productivity, meaning they'll be able to write, say, 25% more code than they would have written otherwise. But will they be able to bill more for that? Because remember, it's a time and material business. So you're generating more code with the same billing rate. So in a way, if the IT budget for the customer is fixed, they are getting more out of it, but there are no more jobs, additional jobs. Same for, say, CRM. So there are companies that promise that I can bring down the number of calls that get handled by AI. So 20% of the calls get handled by AI. There is a 20-25% boost that can happen to every call center operator because AI is prompting them into the right direction. And then over time, another 20-25% gain can come because they can change the product based on AI assessing which product features are getting the most customer calls. But the way I see it is that in the first phase, maybe this will mean that the number of operators you need is a lot fewer. But as the cost of customer service falls, more and more companies can start offering personalized customer service. And therefore, I don't see a massive disruption happening in terms of massive job losses. And even if that was to happen, I think it will be more counterfactual, meaning a lot of jobs that could have been created may not be created in this sector. But I don't see this as necessarily impacting, say, forecast earnings in FY25 and 26, if that helps.
Hi.
We have just 1 minute left,
Yeah,
so
I'll
one question.
finish it in half a minute.
Sorry?
I'll finish it with half a minute.
Sure.
This is for Professor Dr. Mishra as well as Dr. Banerjee. You referred about health sector as well as education. Today, we are sitting here in this Geo Hall for last almost 6 hours. In a day, 300 mother and the child dies because of lack of medical provision. That means we put 300 women in a plane every day, and from Bombay to Delhi, it goes and crashes every day. Can the government sit tight on this issue, and if it is, why? Number two, to Dr. Banerjee. Sir, you mentioned about the banking discrepancies which is happening even today. Can you tell us, in your experience, what is one thing which India should adopt to shorten these anomalies? Thank you.
You want to take?
I didn't understand the question very well, actually.
So if I can just kind of re-articulate, did you say that with the health problems, can we sit tight on it? Was that your first question?
That is for Mr. Mishra.
Yeah, you meant the IMR, MMR, is that the?
Yeah, I think he said with so many people dying, can we sit tight on that?
Women, especially
dying.
mother.
You mean MMR, right? Maternal mortality rate.
Every day.
Yeah,
It is
so
happening
MMR,
even today.
Yeah, so so this problem also highlights the limitations of what AI can actually solve. So a lot of MMR, the maternal mortality rate in India or in sub-Saharan Africa or in other areas where it is shockingly high, is because a lot of deliveries happen outside hospitals. Now, how do you solve that? And AI is not going to solve that problem. So frankly, from the purpose of this discussion, I think these are important challenges. Should the government be working on them? 100%. Is South Asia and India the place where over the last 15, 20 years, MMR in percentage terms has come off the most? Absolutely. So the number of maternal deaths, despite the population growth, is down by 67% in the last 15 years. Is it still too high? 100%. Can it be addressed using AI? I don't think so, because those are social, behavioral issues. And I'm not sure those issues are worthy discussing here.
I see. I kind of agree because, at the end it's knowledge, right, only, and it's not implementation. So knowledge and implementations are two things. Same with kind of the education sector. Though Professor Sugata Mitro, he kind of invented the idea of using computers to teach people, and is pretty successful. In that terms, the hole in the wall experiment, if you look it up, he does something similar to that.
You do not need teachers there.
Yeah,
Students could
so,
learn on their own, basically. Yeah, if you just give the machine. Yeah. Thank you so much.
Thank you very much.
Thank you.
Thank you.
To our panelists and Professor Goswami for the thought-provoking discussion. I would now request Mr. Santosh Para, General Counsel, L&T Finance, to come on stage and felicitate our brilliant panel members with their mementos. Ladies and gentlemen, give them a big round of applause, please. All right, everybody, give it up for the super engaging panel. You know, we can't really hear you clapping on the stage. You're a little far away. Louder, come on, one more time. Thank you so much. You may all now take your seats. Ladies and gentlemen, our next panel discussion addresses a topic of immense significance for the financial sector: collections and recovery, the power of AI to manage NPAs. As non-performing assets continue to challenge the industry, this session will focus on how AI-driven strategies can revolutionize collections and recovery processes. I would like to now call upon stage Mr. Manish Jain, Country Managing Director, India, Experian India, to share his thoughts on the same. Over to you, sir.
Good afternoon. It's still good afternoon. It's not evening. All right, so I had prepared the slide more as an answer to a question that Samir was supposed to ask me in the panel discussion, but I'll try and do a justice to the slide, trying to explain. The question that he was supposed to pose to me was, Experian as a global leader in the sector that we play, how is AI being used in our environment to enable the lending fraternity to do a better job? So what I've tried to capture here is that if you look at collections, there are 5 things that an organization does. A multitude of data that they need to get access to, which is the credit bureau data. In the past, there were only 2 sets of data, the bureau data and the internal bank data. But if you look at today's times, the amount of data that's available for us to play with is just not the bureau data, but the whole alternate data ecosystem, with open banking globally and our AA environment in India and multitude of alternate data that's there. Second is predictive modeling. Third is automated decisioning, personalized communication, compliance monitoring. Now, I'll give a little background. Our previous panel discussion and Mr. Nilkant's conversation about innovation and diffusion in AI. So Experian in our sector falls in the far right 10% of the companies who've taken AI as a lever to drive innovation and diffusion. Now, from innovation and diffusion perspective, we as a company, what we said is, if we were to solve this problem for our customers, we should first solve for ourselves. Because the challenges are similar. We have to build models. We have to deploy them faster. We have to make it useful. So what we're doing as a company globally to share the perspective, we built a platform which allows usage of data and get insights on the fly. I'll give you an example. You upload a file from bank's portfolio, and if you were to read that portfolio as an analyst and bring them up to speed on understanding the movement of, say, delinquency, the vintage, and things like that, it'll take a couple of days for that individual to prepare and come to you. Internally, within Experian, we have provided these tools to these analysts to actually read this in seconds and minutes. Number 2, building models. Our friends from the fraternity, we all know to build a model and to deploy a model can take anywhere between 6 months to 12 months. And the environment that we are living in today, the changes are so dynamic, we don't have the luxury of 6 months to 12 months. So the deployment of AI to be able to do that faster and then monitor that model in terms of performance, what's happening. 3, which is everyone talks about since morning, we've been talking about AI largely used for productivity. So automating some of the actions that doesn't need humans to intervene can be personalized communication to the consumers when they receive that you have a collectible due you haven't paid. Understanding that consumer, that it is circumstantial, a sloppy payer, or is a willful defaulter. The communication could be very different and should be different. Again, in a scenario where we can't do hard calls at the door of an individual, these tools are extremely important. And last but not least is the compliance monitoring. What it means by that, we as lending organizations are expected to monitor our models that we build are explainable, can be used. So in this area, what we've done is, from innovation and diffusion perspective, we've built tools to help provide guide rails to our analysts and the developers that they don't go creating kind of biases in the activity that do. So if I summarize in the entire collection process, we help act as a subject matter expert. No more the knowledge can be concentrated to fixed set of people, but it's available to the entire organization to understand the data sets better, and you put the guardrails on collection knowledge onto that. Second, enhanced decision making. There are more retail lending happening across the world. The collectibles are increasing. How do you automate the allocation, which is the biggest challenge in collection? And then the efficiency boost in terms of automated decisioning. So we'll talk about this more in the panel discussion. As I said, I prepared this more from panel discussion. I'll invite Sudipto for his piece.
Thank you, Mr. Jain, for your expertise. I would now like to welcome on stage Mr. Sudipto Nag, President and Head of Retail Portfolio Management Group, Axis Bank, to come and share his thoughts on the same.
Good afternoon. I'm audible? Yeah. Thank you, Sudipto, for having me here. So next 3-4 minutes, I'm going to talk about the entire debt servicing. Before that, few of the questions which generally comes to mind, whether indeed the AI is going to leapfrog the entire way we collect in the market. If the question is yes, we have an answer to it. Is the need for repricing the entire collection cost? We spoke about revenue per employee. How about cost per account resolved? It is more like in telecom, generally you hear ARPU, right? It's similar type of vectors. Is whether the customer experience is limited only to selling of customers, or it is also for the service part to it in terms of debt servicing. In each of these points, we have AI as a larger part to it. When we look at a human brain, the left and the right side of the brain, the left is largely the cognitive part of the brain, which talks about predictive analysis. So the point what Manish was mentioning, largely we have a huge data set when we talk about bank. We have a liability data, we have customer behavioral data. Also, when we look at various alternate data, it helps in sharpening the entire predictive analysis. Now, having all those data, it helps in terms of a very sharp risk modeling. Where to allocate, when to allocate, what should be the decisioning, which are the recommendation channels which are to be used for the right set of customer connect, where we can get the best of the outcome. But standalone predictive AI is not going to help. There is a need to have a marriage with the generative AI, which is the right side of the brain, which talks about the creative part to it. It is largely to do with what type of content to be prepared, what should be the SMS, what should be the text, how human attributes are getting replaced with technology. So those are the very, very important element when we see, and the convergence of that is going to help us. Now, we heard Gautam also mentioned about n is equal to 1. Now the risk is no more limited to the product. The risk is on the borrower. When the risk is on the borrower, your entire communication strategy, engagement strategy should be at a borrower level. Now the generative AI is in a position to identify the content as well as the entire communication, what should be pitched to the customer, which generally on a human side will not be possible. So we'll just see few of the things in terms of how it works. So when we talk about contactless collections, we have seen there are institutions who are having almost like initial bucket 60% contactless collections. What it helps? It helps in terms of repricing the entire cost of collection. Most of the banks today or the institutions are looking at how to reduce the cost to income ratio. These are important levers which are going to reprice the entire thing, helping in terms of strengthening the ROA, ROEs. Now the point is, when it started largely during the COVID period when the constraints were there. There was time when call centers were used to be the initial part of the entire customer engagement. But today, most of the call centers are getting decongested. because human bots are taking call on most of the risk cases, which are not limited only to the initial buckets, but also on the deeper buckets. So when you look at the curve there, it is cutting across, starting from the bounds till the write-off, there is an opportunity to use intelligent bots, which can do the similar type of outcomes what human can do it. Now, when we look at few of the other cases, how the entire predictive analysis work. So when we do the predictive analysis, there are multiple small cohorts are being made. Each of the cohorts are not only from the standpoint of allocations, but also in terms of what should be the cost structure to it. And when it comes into generative AI, it goes into very specific, like what type of demographic segments are there, whether the customer is a infant in digital, or a migrant in digital, or native in digital. The communication strategy needs to change. If the customer is largely tech savvy, what should be the mode of connect? If it is about field customer, the engagement should be more field, what time to call. All those nuances are being baked into the model so that the optimum outcome can be generated out of it. But if we look at, not only it is all story of urban, it is also story of rural. So when we look at satellite intelligence, now huge set of data are being consumed, multiple lakhs of data cubes, lakhs of data are being, images are being consumed, but in the contra, what it helps? It helps in terms of gauging in terms of what is the acreage which is getting sown, what is the status of harvest, whether there is a soil moisture, chlorophyll index, nitrogen content in the soils are being assessed or not, because all these are having bearing in terms of the productivity. But if you get to know each of these aspects, you can deploy the resource optimally, and as a result, you can save on the cost, and yet you can get best of the outcomes in terms of resolutions. And these are use cases which are now getting into underwriting also. Before it was onto the debt servicing. Consequentially, it should have been part of the first underwriting, that would have been part of the debt servicing. But when we see the use cases first started with debt servicing, now moving into the making of entire model of how the agri lending will be. Now, if I talk about another use case, which is about in lending, it is very, very important that the mobility piece is to be looked at. If thousands of people are to be deployed in the ground, whether they're indeed meeting the customer or not. And today, when we read on the data, we have seen how many times customer is being met, what is the face time spent per customers are also having a ramification in terms of outcome. But on the entire collection strategy, it is very, very important. Sometimes we hear how many visits are being done, what is the intensity is being rendered. The curve clearly shows every single customer. You can measure the face time spent per customer, and there is a clear-cut outcome which are visibly seen in terms of resolutions. So from the strategy standpoint, you can give a clear directive to the ground last person in the the value chain that indeed 3 intensities needed, you can render 3. There's no point of giving 4 intensity because that clearly shows diminishing of the efficiency. Then comes the entire overall story of the AI. Everybody feels that AI is going to solve all the problem. Consequentially, when you look at the AI part of the entire value chain is only 10%. The next biggest piece is the technology, the platform, which is going to carry the entire thing of the intelligence further getting disseminated to the execution team. The biggest piece of the entire delivery is this 70%, which is the people and the process, how the mindset is to be changed. We spoke in the morning, I heard skill building, how people are going to adopt, how organization structures are going to change. All these are going to play a very, very important role in terms of consuming the entire benefits of the AI, which finally going to build the outcome very, very strong and strengthening the P&L of the organization. So that's all from my side. So as we get into the discussion, we will be taking the set of questions which can help you in terms of building your models and strengthening the portfolio. Thank you so much.
Thank you so much, Mr. Na, for your insightful presentation. Ladies and gentlemen, let's give it up for him. And keep that applause going as we call upon stage Mr. Rishabh Goyal, co-founder and CEO of Credgenics, to share his thoughts. Give it up for Mr. Rishabh Goyal, everybody. Over to you, sir.
Hey, hi everyone. I'm audible? Great. Yeah, I think a lot has been spoken with respect to AI since the morning. And I think when it comes to specific collections, though a lot of things have been covered, but still, when you hear the word collections, I think the first image you pop up in your mind is of a collector who is calling you or is visiting you. And that is the most common notion across, right? A lot of penetration, a lot of AI actually has been there on the underwriting side of the business. On the initial sourcing side, a lot of innovation was happening, but when it came to collections, it was, at least now, a lot of focus has come in, but while we deep dive, and maybe 4 or 5 years back, we used to see everyone is actually focusing on the underwriting part. And there were many reasons, many reasons. First reason is everyone is trying to solve for the credit penetration problem. In India, I think financial inclusion is a big problem statement, and multiple speakers spoke about it. But just a simple anecdote in terms of the gap of the overall financial lending industry. In India, we have roughly 1.2, 1.5 billion people. And on a scale, maybe that's not a right indicator, but still, we take an example of credit cards, right? Credit cards, we have 66 million, which is 6.6 crore credit cards, on a population base of 150 crore people. Now you compare this with US. On a population base of 33 crore, which is 30 million, there is 1.2 billion credit cards, which essentially means that there is 4 credit cards per customer. And the whole thesis is that the credit is so deeply penetrated and the money is flowing, which eventually is helping in building the overall economy. And that is the reason all the developed economies, the leverage, if you see the GDP to the leverage ratio, it's on a higher side because the credit is deeply penetrated. In India, we're not able to solve. The first way to solve for it was deepening the credit, maybe by solving underwriting. I think now we have been trying to solve it for collections, which enhances the overall comfort of the lender to actually work on the lending side. Yeah, I think so. This is particularly some data points. So I think when we talk about AI, right, the first thing which is very important is, do we have enough data? By virtue of the country we live in, I think we have so much data. Now it's how to ingest it. That is a major problem. Now, in terms of the mobile internet users, I think we have been, so there are almost 1.1 billion mobile users. This data is as of last month. And all thanks to also Jio, right, where we are doing this. The number of internet subscribers is 954 million, which is 95.4 crores. So if you see, there is so much data available for all the consumers and for all the lenders also who are serving them to sit on and to figure out how to actually use it and maybe deep root the intelligence at the borrower end and also at our end. Right now, when it comes to sourcing, we have seen so many fintechs coming up with loans on WhatsApp, loans, 5-minute loans disbursed in 5 minutes. But when it comes to collections, the same set of people engage in actually on-ground collections, doing it via call centers. The same philosophy which has helped them source loans is not helping them on collection. Now the whole thesis is that if you're able to source the customer on a digital channel, and if the customer is engaged on a digital channel, what is the reason that you are not trying to even use those channels to collect? The major problem which we feel and also is the common notion that it is intrusive. Like you are trying to, collection is something people generally don't want to do it, right? So there's no reason it should be hyper-personalized or personalized. But it is also vice versa, as Manish was mentioning, right? They're not all customers are willful defaulters. In a lot of cases, we have to use multiple type of data sources to even figure out whether actually there is an intentional default or it is a sloppy customer or it's just circumstantial. So figuring that out and using the right channel at the right time is what makes the entire difference. And that makes me come to the point which Sudipto talked about, difference between predictive AI and conversational AI. Now, predictive AI is actually helping us figure out which customers to be targeted by what channel, and conversational AI is helping us remove humans from the picture and make it more through bots, through a lot of these channels, which also are even borrowers like us are easy and like they are finding it very easy to interact with. And the reason is that you don't have any emotional quotient attached there. So the risk of things getting escalated, etc., is also less, and you have to have a very meaningful conversation where you can actually be to the point and show your intent to pay or not pay. So here, if we divide it into predictive AI, conversational AI, predictive AI is something which we will also speak about a lot in the panel, and I think Sudipta also spoke about. Coming on to the conversational AI, which is also the thesis, Gen AI, which we have seen, right, is taking the grounds, and a lot of startups have started focus on particularly Gen AI as to how to make even the interactions more human-like and also make it difficult for the end customer to feel whether they're actually speaking to a human or a bot at the back end. So that is where we also feel there is a huge power in terms of reducing the manpower cost, scaling the collections big time. When I say reducing manpower cost, obviously in India, we still feel that there are some cost implications on the AI side, and things are being worked out. So it's, as of now, comparable to human cost, and hence, even that angle is not going away anytime soon. But still, with scale, we have seen that, at least on the conversational side, things will actually help in terms of overall reducing the burden on the manual intervention. I think another question which comes up again, big time, that whether AI will lead to loss in jobs, which is a big debate across the community, and I think multiple people have now spoken about it. But if you see, when it comes to conversational AI, we definitely know it is going to reduce humans, but there's another angle to look at it. The another angle is that if you're able to overall increase the pace of economy, if you're overall able to, in our context, right, if you're able to give out loans to many more people versus we are able to do now, so AI will only help us improve productivity and involve more manpower in the entire ecosystem versus cutting jobs. A call center which is running maybe with 10,000, 15,000 people, maybe that can cater to 10x the volumes if we are able to use some of this technology and actually leverage it to the best potential. So with the same set of manpower, the overall economy can grow, because at this point in time also, I think the dream of $10 trillion economy by 2028, it's only achievable if all these technologies are deep-rooted. I think these are some of the things which are specific to collections, which have been spoken in depth earlier also, how you can actually get collection insights and borrow risk forecasting, some early warning system, which is very important in the current context, that you are able to detect early defaulters or delinquent customers before they even enter the delinquency bucket. How you can make communication personalized. A lot of it has happened on the marketing side, where a lot of customers are given the type of content they want to consume to increase the engagement levels, but that is not the case, at least in the collection side. So that is on the personalized communication. Then there are multiple other pieces around allocation, automation, etc., which have been spoken about, and we'll also speak in detail. This is also on the customer engagement side, which is on the Gen AI side, how we can introduce a lot of bots. Recently, we have seen a lot of video bots have come in, where instead of a voice bot, even a customer video will play in front of you where you can engage. Actually, you can engage, and they try to understand of what you are trying to say, and the level of engagement on the video channel is much, much higher than a voice bot channel. So even videos have been started to use AI. Now, obviously, there's a misuse of it also, which has happened in multiple instances. But with the right set of compliances in place, this can be a real game changer, at least in the lending ecosystem. Multiple use cases, collections being one of them, underwriting becomes another. So maybe I think we'll talk about it more in detail. As a company, we also started 5 years back now, investing heavily on the collection side, doing pretty well now. We have also been able to, and with the increased focus on the AI and automation, so we have also been able to attract a lot of customers who are actually focusing big time on AI, doing decently well. We have raised close to $80 million in equity capital from some of the reputed names, and continuing to invest in this sector and see how we can scale this up. Thank you.
Thank you, Mr. Goel. Ladies and gentlemen, let's give it up for him. And keep that applause going as we invite on... Where is the applause? Oh, there it is. Let us now invite on stage our moderator for this panel discussion, Mr. Sameer Singh Jaini, founder and CEO of The Digital Fifth. Ladies and gentlemen, give it up for Mr. Jaini. Over to you, sir.
Good afternoon, everyone. Uh, I think a lot of points which we were supposed to discuss have already been picked up. And as I see the clock, it's actually ticking. So we'll keep it. I'll also keep it short. I'll just keep the context that we talk so much about AI reaching out to normal people like a chat GPT and structures like that. And then we talk about AI for collections. I think one of the biggest worry I have is this kind of framework will work very well for large organizations, but there are a lot of small NBFCs and mid-sized banks. They have to figure out how to adopt through these kind of technologies and journeys. So I see it as of now, the pattern is more towards very large entities. Mid-sized guys, I've not seen much deployment on collection side. I'm sure many of you are from those backgrounds. Also, if you look at generically in the market, the focus has been largely on sourcing the customer, also underwriting. So if sourcing and underwriting, you see a lot of focus has been there on sort of what do you say, digitizing it. So AI adoption will only happen if you are able to digitize it. And if I see today, and there's always a lag. So first you do digitization and then you do AI, you won't do reverse. And if I see it today, I think almost all our use cases, so we work in the country as a firm, as a consulting firm with so many assignments, and I'm being hand on my heart, almost none of the transactions have been on the collection side. It's always on the origination side because that's how the psyche is. We have to originate. Interesting part is the market is changing dramatically, right? If you look at today, the collection issues are very severe. We know that both on PL side and as well as microfinance. Maybe this is the time for us to accelerate the process. I think this event itself is a big boost to AI, and hopefully, as we pick up this case, many of you will go back and figure out how do you sort of use AI for underwriting cases, beyond that underwriting, maybe for collection as well. And that's a moment. I'll pause now. The intent, obviously, is to ensure that we have some engagement with the participants here. We are running short of time, so maybe my request, maybe we can start the panel itself as we go forward.
Thank you so much, Mr. Jenny, for your words. I request you to kindly remain on stage as I welcome back our panelists to their seats. I request Mr. Manish Jain, Mr. Sudeep Tanag, and Mr. Rishabh Goyal to join us on stage so that we can begin our panel discussion.
Okay, maybe this is not working. Is it? Okay, I think I'm audible. So I think with this much of depth of session we already had, I'll keep question very short, and maybe the answers can also be shorter given that I think clock is working. Maybe there's also a discussion about business outcomes on the collection side. So Manish, if you could share that, what are the business impact you can see in realistic case across the world on the business outcomes from AI?
I think as I was sharing in my presentation, or the coverage I was trying to do, is the biggest business outcome would be how do you quickly go through the quantum of data that we are faced with, one. Two, if you're building models, can it be built not just on a subset of data, but can it be done on the entire set of data? Three, personalization, hyper-personalization, you cannot underplay that. That had serious repercussions on collection efficiency.
Okay, perfect. Maybe a bit of a jump to the next question to Sudipta, to you. I think what are the kind of top technology investments banks should be, lenders should be making in the collection side on AI? And also from a deployment perspective, what kinds of skills are required, experiences are required? What should be the, because those who have, there are very few people who have done it. So how do they start their journeys?
Yeah. So largely, if I look at, I spoke about the micro segmentation and all. Large number of data sets are being looked at. Each of the datas, once the micro segmentation is done, the data is one part to it. The best thing is how we make the end use of the data very, very sharply as it is intended. So that system comes in. The most of the time we see the workflow systems in the general collection workflow system. What is needed right now is the intelligent collection workflow system. Now, how the intelligence comes in, when the risk scorecards are being built, when the AI models are being built, where it is hosting, that becomes very, very important. Because if the hosting system is indeed the nervous system of the entire workflow system, because if that hosting system is not able to host the scorecards properly, the entire strategy layer will not work, because the hosting system is going to send the signal how the data will get transmitted further to each of the channel, and the channel orchestration works there. What should go as as a campaign, what should go as a contactless, and what should go to the call center and employee. That the intelligent layer is very, very important part to it. Now, while I talk about it today, if we look at most of the systems are quite fragmented and people are trying to do AI use largely in the form of a very, very small fragmented trying to stitch together. Then the best outcome we will see when everything is stitched together, and then comes the layer of the customer engine, which is basically the CRM part to it. Because as we look at most of the sourcing are to the digital in nature, customer self-servicing going to be the future. It's not about nudges all the time. Customers should be able to see it in their time when they can click sitting at home, goes through a bureau simulator, Manish, that going to be a big game change, where they see that the behavior has to be shaped and customers should make the payment at their time. So UI, UX is going to be the next big change while we embrace on the AI part to it.
Okay, thank you.
One of the part in terms of the people in the process, while we go it in the format of AI, the governance also plays very, very important, because how many times the nudges are to be sent, when one should be called. Those are very, very important software aspect to it, because AI is not liberated all the time. It is like the full governance of the entire collection architecture, and the codes which are being shared by regulators are to be followed by the machine as well.
Okay. No, I think governance model for AI, I agree on that point. When you, I think, Rishabh, when you work with a lot of lenders and you pitch your product and services, one of the problem statement is to show ROI. There's always an implicit factor that Hogan AI will not work, and maybe collections is not the area we should focus on, underwriting and sourcing much more, even today. So how do you sort of convey this message, and you stand with the customer in maybe our post-implementation as well. So how do you show value post that, and what kind of KPIs as lenders here should sort of track?
I think in collections, the KPI is the easiest ones to track, right? It is the amount collected, your time you are taking to collect. So very clear, straightforward indicators in terms of cost of collection, time to collect, and the amount being collected, right? If you have to broadly break KPIs, these will be the three broader KPIs. Now, how can system bring in efficiency? It can be on either one of these KPIs, or it can be on a mix and match of these KPIs. So whenever there is any system implementation which happens, right, or at least maybe it is true for all the deployments, but at least when it comes to the collection side, we need to figure out what is the major problem statement of lender, and it will depend upon the journey they are in, right? Like Samir, you mentioned, right? Some mid-size NBFCs, the focus is more to grow the loan book and stabilize. In some big lenders, the focus is more to optimize on the P&L so that the cost to collect goes down, and overall that helps them improve the numbers on books, right? So the problem statement can be very different. But when it comes to actually the system implementation, we need to figure out firstly the KPI, and then also what to expect out of a system. As in collections, you cannot expect everything to happen through a digital channel, that is for sure. but how you can optimize the overall frequency. Maybe it's not even necessary that the customer who is paying on a call will not pay on a digital nudge. We have seen so counterintuitive studies that people were not replying over manual calls but are repaying over a digital nudge. So it essentially means that you can optimize both of them, but yeah, there has to be data for it. When it comes to data, Sudipta also mentioned there are broken and fragmented pieces of it. So how all the data can come together at a single place, and there you can build some models which always takes 3 to 6 months to train. And then when the output comes, that becomes very powerful because that is a scalable way to scale even collections, and you can reduce the overall manpower involved or even improve the productivity of people involved there. So very easy KPIs, but yeah, it has to be system driven and the data has to reside at a single place for AI models to learn, and also at least give them 3 to 6 months to showcase what you want out of them versus obviously there are a lot of impatience in the entire ecosystem when it comes to lending, right? Like if you deploy the system day 1, then day 5 it has to give out us a reduction in cost or improved results. So that is not going to happen, that's unrealistic expectations, but at least 3 to 6 months is a good enough time frame for you to see what's the output.
Oh, thank you. As we are about to run out of time, maybe we'll keep it very short. Maybe one question I'll shoot again to each one of you. I think we missed this point earlier on the how collection data can be used for decisioning from a credit perspective early, right? So the loop is missing. Generically, always one way. So you do underwriting and then you do collections and never go back and refit, at least on not on an immediate basis. Whereas in real world, you need to make an immediate impact. So how do you think that lenders should think about mixing collection data with underwriting or real time?
In my opinion, and I think the loop of collection activity, the signals that we are getting and bringing it back into sourcing and acquisition underwriting, if that doesn't happen, no matter what AI we may deploy, it's of no use. I think the biggest power that AI can provide is, earlier it couldn't be done because it's too much data to work with. Now with this tool set and technology that Sudipta was mentioning, I think the key lie in right technology platforms available for lenders to be able to read, digest the data, build models that can be monitored and that can be deployed to consume faster. I think that's the biggest key in terms of that loop. It's not that lenders didn't want to use that loop. It was hard to do it. I think now there is capability available in the ecosystem to be able to host, read, build models, deploy them at scale, and monitor them at scale from compliance perspective.
Perfect. Thank you. Sudipta, there's so much of talk on DPDPA and data privacy and others. And there are a lot of risks and issues which can happen as part of usage of AI. I mean, typically in the collection stage, people may be not intentionally doing it. They may be in a different situation. You may also a lot more worries. We have seen it earlier. How do you ensure that those issues are really well managed when you deploy AI? Last thing you want is you have suicides happening because AI went berserk and pushed the customers on the wrong side. So how would you control that?
So data privacy is going to be the complex thing which each of us will have to conquer. The point is what is to be allocated and how it is to be allocated is the larger part to it. Again, I will go back onto the technology part. The data, what is getting disseminated down in the ground for the engagement, it is a platform which we need to look at. The CRM layer should be the intelligence which stays at the bank premises only. What is being exposed to the partners, outsourcing partners and on, is only the information where each of the datas are all masked, right, are encrypted, so that only the the key customers are being engaged for the purpose. And once the dispositions are being updated and submitted, nothing stays in the outside the office, outside the bank. That's how we have to hold the data. While we do it, it is very, very important that even the callings which are done are properly masked. Each of the mobility apps which are there should only carry those information which are needed at the operating level. What is not needed, which is having no relevance to it, because all the scorecards are made back-end, right? We have to just think that if all intelligence is being fed, it is only the engagement part to it. There is no point of pushing any of the sensitive data which can be misused. And that's how we have to work on building those systems. So first is the technology will be the backbone, and the data part will be all in-house, inward looking. execution will be in the ground.
Thank you, Sudipta. I think Rishabh, since you make these kind of platforms, how do you ensure that as part of the build phase itself, you incorporate all the compliances and DPDPA structures and all of them upfront? Because the moment those changes will happen, it may have a serious impact. And then obviously the risk of data leakage and others there. So, and collections is very sensitive data, right? Nobody wants the data to go out. So how do you manage that?
So see, on the data part, as rightly being mentioned, a lot of serious scrutiny has happened. I think regulators have also been really serious about it. So though we feel that SaaS is the way forward and software as a service, right, which are mostly on public clouds, have been able to scale, and that is also the trend going forward. But now if you have to balance it out with the right risk measures in place, I feel, and what the lenders are, right, because any which ways there is a risk associated to it. So one part is now even the banks have started to adopt their own internal clouds, which are owned by them, maybe private cloud or public cloud. So as a technology platform, it is immaterial that whether you are hosted on your cloud or others' cloud. So we have made ourselves flexible enough that we actually get deployed on the bank's internal clouds in multiple places, and also sometimes it's a private server, so that the data doesn't go out of the bank ecosystem, which is very important. Now, one con to it is, right, you are not able to train the model on industry-specific data. Now, when I say industry-specific data, it essentially means that some lender who is on the personal loan side, right, if now across the states or across the pin codes, the pattern of collections will not be visible to them at an industry level, versus their data, own data would be modeled and will be giving out outputs in terms of the efficiency, in terms of what should be the next steps, etc. Whereas if the deployment happens on a public data source, maybe not the KYC details, but at least some features which are anonymous and also not linked with any specific individual, the power of AI increases and enhances because the data becomes more enriched. But considering limitations, I think at least this is good for big organizations and big banks. But as you rightly mentioned, on the small and mid-sized banks, they'll not be able to use or leverage AI to its fullest capability if we get restricted by the data thing. But yes, both have to go hand in hand. So we are figuring out the best way possible in terms of how to manage both. Yeah.
Thank you, Rishabh. I think as a summary, I would say that the need is there. I think clarity is there. Given the environment in the market, the kind of NPS we're seeing in the market in many segments, the need for deploying it right now is very high. I think the challenges we will see, I personally see, is that other than the top maybe 5 to 10 players, the rest will find it very difficult. I think it's time for make it more scalable and more democratic by nature. So I'm sure people like you will actually bring it, and your skill sets will take it to market as well. Thank you, and thanks for your patience, and thanks the L&T Finance team for inviting us. Thank you.
Ladies and gentlemen, let's give it up for this enigmatic panel. I would request the gentleman to stay on stage. Please stay on stage as I invite Mr. Ashish Goyal, Chief Executive, Farm Equipment Finance, to hand over your mementos. Let's give Mr. Goyal a big round of applause as he walks onto stage. Check. Check. All right, everybody, give it up for the wonderful gentleman on stage right now. Thank you for joining us. Ladies and gentlemen, I am excited now to announce our next session. Considerate experiences in the age of AI. To share his immensely valuable insights on this important topic, please join me in welcoming Professor Ted Sailker, CEO of Sailker Design and Research. Ladies and gentlemen, give it up for Professor.
It's working? No. I have to just go. I have to just go. It's time. It's working? It's okay. No. What do you want?
Can you play something?
Yes.
Anything audio?
This one. No, that's just here. This one. No? This one, I think. Can I just give my talk now? Okay. There I am. Well, welcome to my talk. It's great to see you all here in this beautiful room. So I'm Ted Sailker, and I've been working in industry and also in academia for my career. And I started off at IBM, where you probably know me for the ThinkPad, and I will talk a little bit about that. But I'm also really proud of the work I've been doing in generative AI, and I've been working in user interface and AI for my whole career. And so actually today there'll be a launch of a chatbot that I had something to do with, and we'll talk about that more later. Anyway, AI is in everything now. And what you're going to find is that, for example, this pointing device in the ThinkPad, it actually has AI in it. It has a model of how your eyes move and how you make decisions to change what context you're in on your graphical user interface. It has a model of how shaky your finger is. And all of that cognitive modeling, based on perceptual experiments, is built into this pointing device. We are building in more and more intelligence into everything we build. And so that is kind of the story. And here we have, actually, let's see if we can hear him, somebody in space telling us that it was nice not to have their mouse floating around. Do we have it? Well, maybe the sound doesn't work. But in any case, AI is really about reasoning, representation, and learning. And so now everybody thinks it's just about big models. Okay, big models are amazing. They've changed everything. And in fact, the fact is that AI has been productive and helping for a long time. In the 1980s, electronic trading was done with AI, and it transformed the industry, made some people very, very rich. And then in the 1990s, search was all about the linkages between knowledge, and the AI had changed everything so that Google exists. And now, in the 2000s, we have e-commerce. Went through the roof with keeping track of who is about what and what your preferences are, and a lot of other things too. And now, the fraud prevention, detection, and mitigation, it's a huge business. And thank God for AI for solving these problems. And so even when I'm talking, I've made systems that watch the technology, that watch the disruptions and frustrations that are happening in a Zoom interaction. And I've made systems that use AI to help a person recognize how they're talking and also what frustrations they're having to face. In car safety, we are using AI in lots of ways, even before self-driving cars. All of these things, such as ABS brakes, they have a representation of how things work. And also, in the ambient sound that we hear in the elevator going to our dentist, the advertisements are geared to us. They are using AI to decide what information to give in different places, maybe so many different ways to do it. Generative AI, now it is really the big change. And it's a big change not because it's a big improvement in AI. It's a big change in how we present the AI. What we've done is we've put a model of how to understand a person's description of what they want to talk about, how they want to talk about it, how they want it presented. And then it has a model of persuasion. It has a model of how a paragraph is formatted. It has a model of how to conclude. And then it uses LLMs we've been using for 10 years. But boom, everybody uses it. Within 2 months, I was talking to 87-year-old people that were using ChatGPT right when it came out. So it's very, very powerful, and it has the world's knowledge in it. So technology is inevitably used for social purposes. All we really care about is each other. And from the very beginning, at least half of what the computers were doing was communicating between people. We are always social actors. And the point that I make is that actually we have to understand the relationship between how the computers treat us and how we treat it, or we will not want to use it at all. And so I've made many demonstrations, maybe 100 demonstrations of using AI in physical devices, in kitchens, in bedrooms, and many things. And I'll talk about a few of them today. But the most important thing that I like to talk about is that I like to do my research, and a lot of my writing is about being considerate, trying to understand how do we interact so that people want to work with us. Marketing people always knew about this. And what is considerate social feedback? Well, we take a look at these people. They're looking at each other, and their height, and how close they are together, and their gesture, and their nonverbal cues. All of those things are helping us understand what's going on between them. And really, the most important thing here is that we understand that the appropriate social feedback is important. Because today, the cell phone is in such a bad place that, in fact, somebody is taking a picture at the Taj Mahal and they fall off because the telephone lets them focus completely on something that is not important. That is, what's important is their life. And in fact, in our country, now more people are crashing their car because of cell phone than because of drinking. This is new, but awful. So we really have to understand, how do we fit this technology into our lives? And the point is to talk about reducing how much we're thinking about anything and respond when things are pertinent and valuable, thoughtful and caring, receptive and reciprocal. Don't be distracting. Don't be condescending. Always computers are saying, you didn't do the right thing. That's not where we want to be. Hostile or manipulative. So often, in the name of being friendly, you've seen so many chatbots be pandering, just pretending that they're being friendly, and they are being worse than unfriendly at that point. So you can recognize people's needs and desires. Here we have Andrea Lockhart, one of my students, and she just has a microphone listening to her. User interface is not just graphical user interface. She's making movie. And what this microphone is doing is it's recognizing when she is giggling. She giggles when she's taking a movie of somebody taking a movie of her. She giggles when somebody's making this fantastic music right next to the subway in Boston. And anyway, you see these smiley faces. This is the 4 times that something important was happening in the video. We do automatic video editing with it. And that way we are using AI, but really we're just looking at her intentions. Intentions are what we want to understand. And so another example of something that I did, you look at this very complicated Windows setup over here. I had people, I'm always running experiments. So this experiment, we have people, they're filling out a spreadsheet, they're getting email about something, they're getting a text message about an order that's coming in, they're trying to do a calculation to fill an order. And then we said, okay, what we're going to do is for all the text messages, we are going to notice, is this text message something that you're writing about right now? If it is, okay, send it. If you're typing, we wait for you to pause in your typing so that it gives you the information when you're ready to read it. If it is not about this, we save it. And if there are other text messages, we maybe group the ones that are a similar topic. This is all AI. We are doing sentiment analysis, we're doing text analysis, we're understanding what the person's doing, and we're making people 25% faster at filling orders. And when we sell them, just stop, just see if you can get rid of errors in all of your orders, 30% fewer errors. So this is a big deal. We had people use it for 10 days. They want to keep using it. I should go into business. But the point is that there are many disruptions that the computer and even our friends are making that the AI can watch our intentions and understand what to do to reduce. Another example is some things with conference calling. So I thought, can AI help people communicate with each other? That would be even more important than communicating with a computer, right? And so I made this conference calling system, and it's based on some research I did. And over here what you see is somebody was talking, and they were dominant. And then we said, turn taking, they stopped being dominant. Went from 100% down to under 40. And the person that wasn't talking, we say, something to say? Up they go. We actually found that with an AI agent, reminding people that they were over-speaking or under-speaking, they would improve. And in fact, what we found also is that if the computer says noisy, instead of somebody saying, could you mute your microphone? When we say, can you mute your microphone? Then everybody's stress goes up, more communication errors. 1/2 the communication errors when the computer recognizes that there's noise in the communication and then uses that to tell a person to stop it. Even just telling a person to stop it with a computer was better. I have a few papers on this topic. So actually, another thing I did is I made a big AI system just to recognize what are people going to hear me like? Are they going to think I'm confident, or are they going to think I'm sexist? Are they going to think I'm saying something positive, or maybe I'm actually saying something profane, right? And so this thing, these smiley faces doing this, actually this is based on a paper that I wrote that actually started the field of sentiment analysis. So this is really kind of interesting that as soon as we turned on this thing and you have this reflection coming back at you, what would somebody maybe think of what you're saying? Is it confident? Is it apologizing? Is it deferent? Is it ageist? Or anyway, we got better results. In fact, so that was a lot of fun. So we can use AI in that way. And what we have to recognize is to keep the comments short, timely, simple, not distracting. And this idea of hearing oneself. You know, telephones, for a while in the 80s, cell phones, they didn't have anything coming out of the earpiece when you're talking. people cannot communicate as well. They start speaking louder and louder. This thing we call side tone, that is the feedback we get in an earpiece. That is what that reflect I was showing a moment ago is trying to do. It's trying to give you some way of knowing how would somebody else see this thing, what you're doing. And so for making that model, there are 106,000 cells in this, spreadsheet, and those are the training data. So we tried many ways of recognizing as somebody apologizing, and we start with direct matching. Just look for the word apology or I'm sorry. But the problem is you might say, I'm sorry that I hurt you, or you might say, I'm sorry for your loss. I'm sorry for your loss is not apology. And so the really, the direct matching words, you've seen it so many times, they just don't work. Then you can use existing models, like Hugging Face has these models of hate or whatever, and they're just really actually not very accurate, and they're not exactly what you want. So then you say, oh, I'll give it a few examples, one-shot learning, and maybe 60%. 60% correct is not good enough. And finally, you start saying, okay, I'll have, for every single thing I'm trying to recognize, I'll have an AI model. But then, what you find is it takes lots of computation, but also the interaction between them. The magic of the large language models is these tensors. And the tensors, what they do is they connect everything that you're asking about with anything anybody said about that topic, making these just-in-time clusters of all of the knowledge that's relevant for this purpose. So by training all 25 of these characteristics simultaneously, giving the data to the LLM, we got one-fifth as long latency, and we got 20-30% better performance in terms of accuracy. So we're now running, over 90% accuracy. So just realize you have so many ways you can. Oh, I have 47 seconds. That you can learn. And I just want to say the reason I'm telling you this is because we don't really think the alternatives of ways to use AI are really as important as just use the best one you can find. So the large language models are aggregated knowledge. And do I have 10 more minutes? This says only 20 seconds. How long do I have? Okay, I can't see. But the point is that curated knowledge, that is the knowledge in search. That is the knowledge that people put in. And let me just explain that, because I'm noticing that I'm a little late, I'm going to go and I'm going to tell you some experiments I did working for Google. So we tried an experiment where we tried having people search for a car. And then we chose people that said they don't like ChatGPT. And we told them, hey, try it anyway. What they found was that they were faster, they got more concrete, efficient knowledge, and interaction experience. And so it overcame their negative opinions because ChatGPT makes an explanation where search just makes a list. But when will search be better, and when will ChatGPT be better? Well, let's try some examples. I've tried about 14 different categories, but I'll just show you a couple. For professional scenarios, what are some current jobs for an accountant? Search, it gave over here on the right. Search gives recent job postings and available opportunities. Concrete, successful thing. ChatGPT gave job platforms and typical jobs, not as good. Okay? When you were just going to say, what is global warming temperature? Search gave the latest, most authoritative answers. ChatGPT gave typical databases you could look at. So actually, not as good. But for communication scenarios, if we asked, write an introduction about climate change, Search tells you to go learn about it somewhere. Chat tells you exactly what you need. It actually builds it for you. So here's a big list. But what you find is that for a scientist, the data is not all over the place, so that the LLM hasn't been trained well. For the fact checker, again, The specifics are not hard to get to in ChatGPT. Recreational intellectual, specific examples aren't good from ChatGPT. Hobbyist, they're somewhere off in the corner. It's the mainstream stuff that the LLMs are great for. Do-it-yourself, maker constructor, professional, specific things, it's not what it's great at. But as soon as you get to a student, wow, it's a tutor that'll never give up. When you get to a communicator, oh my gosh, writes beautifully. And if you have an analyst, it writes explanations. It turns out so much of what we do is communicating that these last three are super important. And so anyway, I've been writing a blog about how to use generative AI in positive, productive ways. And one of the most exciting things, instead of having it write your essay and turn it in and get thrown out of school for not writing your plagiarism, what we tell people to do, and we're working with, in England, this wheel is part of the curriculum, is we say, ask the question as though you were a mathematician. Ask it as though you were a theologian. Ask it as though you were a physicist or an engineer. And what we get is completely different answers. And by asking the same question, for example, in one of, to say, ask it as though you're optimistic, or maybe you're skeptical, you get completely different answers. What does this do? It broadens your view. And when you broaden your view and see different points of view, maybe we don't have as many of the problems that we're finding with these social media getting us all siloed and thinking only in one way. So anyway, the idea of building generative AI-based apps that have private databases is not so hard. I do it all the time. And one day, I was in my driveway showing a demonstration of a generative AI system to Debrag Banerjee, and he said, wow, let's go do that together. And so here we are, only a few months later, we've built this fantastic chat application that uses generative AI, takes into account how to be considerate, and is answering broad questions that are going to solve problems for everybody. So why don't you, Debrag, why don't you come up and say a little bit more about this?
So Ted is one of those continuously inventing and innovative guys that I have ever had the pleasure of knowing.
Well, thank you very much.
And when I came to L&T, and we were facing this problem of how can we increase the conversion of our HL chatbot pages. And one of the options we had was to take our static page and put a chatbot to it. But then I looked at the chatbots that are out there in the industry, right? They aren't really that conversational, right? They don't understand your actual questions. No, this is, you need to switch to the other one. Have you switched? So anyway, so there are a few different problems with the chatbots that are there today. So if you try to imagine the kind of conversation you would typically have if you go into the office of an actual mortgage advisor, you would not have the same kind of answers you get from a chatbot. A chatbot seems very stiff, very unable to make conversation, and instead it kind of, no, not this, it kind of cops out. Yeah, it kind of cops out, and it's not the same experience that would lead somebody to continue the conversation and give their number. It's also very ill-equipped to actually provide reasonable answers to questions, and it's pretty hardwired. Sometimes you ask it, what is the, what is the whatever EMI or whatever, and it just throws you an answer that says, okay, I'm still learning, or you need to give the date in this particular format, and so on and so forth. And it's also very menu-driven. So not exactly the kind that you want, right? So I turned to Ted and I said, hey, can we take all the latest technologies in LLM, in RAG, in agentic AI, and not just using LLMs, and can we take all these things that you are tinkering with, where you mix the text with interactive things and get us a chatbot that can hopefully fill up our pipeline with far better converting leads?
Yes.
So the result was, can we play the video? The AV video? So this was the result of a fantastic collaboration between my team, ably led by Gaurav Bansal, who is going to lead us through how all of these limitations of chatbots are overcome by the design that he made.
Thank you. Thank you. Ladies and gentlemen, we are proud to present you Kai. Kai is knowledgeable AI. It's AI-based virtual home loan advisor, which gives you a lot of tips on conversational AI, dynamicity, well-equipped to answer the customer queries, and it's interactive in nature. I'll take you some examples quickly and show you how it is conversational. We have seen when you chat with a chatbot, it just stops the conversation and say, click the link here or go to our web page. Let's see how does Kai answers a question. Taking an example of out-of-the-box question, if I promise to name my house with your company's name, would you give me a special discount? That's the question we asked to Kai, and the Kai handles that question beautifully, that I appreciate your enthusiasm, but man, our floating rates, our rates are dependent on something else. That's the ability, that it can converse. It does not stop the communication then and there. It can chat, it can take the conversation ahead with our prospective customers. It is well equipped to answer the customer queries within the bot itself. It does not redirect you to somewhere else. I gave the Kai that I'm salaried, this is my PIN code, this is my age. Can you tell me what can be my estimation of the loan amount that I can get from you? Kai calculates it, and it gives you the answer right there in the window immediately. That's your estimated eligible loan amount. Kai is dynamic in nature. It understands the language in which we talk. We don't talk in Hindi. We don't talk in English. We talk in English. So Kai understands English. क्या मुझे लोन लेने के लिए बहुत सारे पेपर्स लगेंगे? It says yes, कुछ तो लगेंगे. कुछ में तो आपको देने पड़ेंगे, right? It's interactive in nature. All the chatbots that we have seen needs a lot of chat, lots of text. It's interactive in nature. There are bars, there are slides which you can use.
It shows you red, amber, and green on the interest rates. You can even calculate the EMI that will come out of it right away. Mike. Devra. You want to try it again? Devrag? It's an important feature.
Okay, fine. I'll repeat. So this is one of my favorite features. So you see that interest rate bar, when you move it, if you move it too far to the left, meaning you are asking for too low an interest rate, it says red. You're not going to get that rate, right? If it is going too far to the right, it says, oh yeah, for the bank it's pretty easy, but do you really want to go that easy, or you want to actually come into this yellow area where you give me some more information and I can probably get you what would be just about possible for you without overpaying. So it's not just a calculator, it's a calculator with feedback.
Thank you. We have our home loan business heads, Harkesh here with us. Just want to ask Harkesh, what do you think this kind of experience to our customers will make a difference to the business?
Yeah, thanks, Gaurav. I think so. Mortgage as a industry flavor, it always feels that we always need a personal touch, a personal RM to attend us, because we are buying and we are investing our most of the money out here. So the chat bot is actually helping us out to give that feeling that we are actually interacting with an RM sitting out of whichever locations and actually getting the eligibility and the confidence of going and booking a home loan. So I think so this is what we want to give it to our customers while they are looking forward to a home loan. That's the biggest investment for our life. I would request each one of you to have this experience personally at our demo stall, which is stall number 1 at the right start at the beginning, and give us a valuable feedback. That's the idea. Thank you, Gaurav. Thanks a lot for your feedback.
Thank you. Thank you. Just to touch base on how does, what's the technology architecture behind Kai? It uses an LLM behind it, probably one of the earliest implementation of LLMs for BFSI bots. When a user query comes in, the LLM understands what's the intention of the query. Based on that, it decides whether I have to call a tool, whether I have to call an agent, whether I have to calculate EMI, or to have to search within the L&T Finance documents. We call that as L&T Finance Document Knowledge Repository. We call it as a treasury because Dr. Ted suggested that word, that it is not your document repository. It's a treasure that you have collated with so many years of experience. So with that, Kai makes an understanding what customer is asking about. It rephrases the query, again uses an LLM, and gives a response back to the user which is structured, which is well formatted, which is crisp, and carries the conversation ahead. So ladies and gentlemen, my dear friends, Kai, knowledgeable AI, it's a responsive, it's personalized, and honestly, it's an experience to have. We invite you, all of you, to visit the stall that we have for Kai, as well as it's live at our corporate website. Please go ahead, visit, and experience it, and share your feedback. Thank you.
Thank you. Thank you so much.
Thank you so much, gentlemen, for joining us. Well, as you say, sir, you're absolutely correct. Please make your way towards the center stage. Professor, Dr. Banerjee is going to felicitate you with a small memento. Please make your way towards the center of the stage so you can get a nicer picture. Can we have the memento on the stage, please? And there it comes, everybody. Give it up for Professor. Thank you so much, Dr. Banerjee. Thank you so much, Professor Silkar. You can now take your seats. Ladies and gentlemen, in a world where speed and efficiency are paramount, real-time payment processing has become a cornerstone of modern financial services. Our next panel will delve into how AI is revolutionizing payment systems by enhancing processing speeds, optimizing efficiency, and delivering a seamless customer experience. Let us now welcome our panelists. Put your hands together for Mr. Anirban Mukherjee, CEO of PayU, followed by Mr. Amrish Rao, CEO of Pine Labs. Come on. I now welcome on stage Mr. Mahendra Nerukar, Vice President Payments for Emerging Markets, Amazon. Followed by Mr. Gautam Agarwal, Division President, South Asia and Country Corporate Officer, MasterCard India. And last but not the least, guiding this discussion is Mr. Anurag Sinha, co-founder and CEO of OneCard. Ladies and gentlemen, give these gentlemen a huge round of applause. Mr. Sinha, over to you.
Thank you. Welcome, everyone. I arrived in the session around lunch and we have lots of session around lending. We are kind of odd one out session. We are around payments. But we strongly believe payments and credit worlds are linked and they are getting more and more linked. So I think we are at the right room. And we have the right panel to speak about, right from Anirban, Amrish, Mahendra, and Gautam, kind of cover the entire spectrum of payment world. And before I open up for conversation, I want to just give some insight. Some of this would be probably pretty obvious, but just want to start our conversation that, like all the discussion we have around AI, data is the core platform. And payment data has been one of the richest source of insights for consumers and businesses because this is largely real time. It is also available at scale, and especially if we talk about India as a market, there's one area where we have actually built population scale products like UPI and cards, which are being adopted at scale. So, we have the foundation set. On top of it, we also have, most of the payment data also carry lots of additional data about the underlying transactions, which essentially lead to commerce. So the payment ecosystem also are deeply connected to commerce. And commerce affects a large set of people in the society and economy. Last but not the least, I think payment was the one large application which have made Indian believe in technology more because we are using on a day-to-day basis. So I think with all that, the background, I think building AI use cases using payments data or use cases around payments is a very, very, I would say, viable use case for this technology called AI, which has been around. And incidentally, already AI is being used in payments. It's not a new use case. It's just that as the technology becomes cheaper, more and more compute capabilities are available, new use cases are emerging. So to begin with, I'll have an open questions and probably I'll go ahead with Anirban first. Especially AI has been used in payments for long, even though probably in not so many areas the way we are using now. But given your background in payments and running a large operations, where do you see, in terms of transaction efficiency or things like frauds, which we keep hearing, some of like use cases which you have seen are in action. You want to talk about it?
Sure. Great to be here. I'll talk about, at a high level, it is about prevention of fraud, making transactions more efficient. It's about far better service. But it's also about the new economy that Gen AI will itself create. And how do you manage payments in that world? I'll touch upon, just start with fraud, and then we can go around and talk. So look, if you think about commerce even 100 years ago, my grandmother would go buy something in a shop where she trusts the shopkeeper and would pay in hard cash. Trust is that foundation of that relationship. Now you're trying to replicate trust across millions of users and millions of merchants in a digital setting, right? The core to great digital commerce is just trust. When we have, and I see this in the data, when somebody has a bad experience with UPI, they go back they don't use digital again. They get off that digital bandwagon. And so engendering trust is one of the most fundamental things we always think about as payment companies. As more real-time payments happen in the world, and UPI is half of the world's real-time payments, but the whole world will get there, trust is the foundation. Trust is what has to be strengthened, right? You just read about how much frauds go up. And trust to me is where we've seen some amazing use cases using Gen AI. Look, payments and fraud risk management has always used AI. It's from 1980s that people have been using some version of machine learning. It gets much more powerful now. One of the things we have worked on, for example, is this use case of figuring out, is this merchant actually selling groceries or e-commerce, or are they doing something else that they shouldn't be doing? And LLMs are very useful, as good as the best fraud agent. They augment the best fraud agents, and as good as the average fraud agent in terms of figuring out what is the merchant's actual line of business. Are they doing something that is not kosher? And it's just amazing use cases coming out of that. Same on the customer side. You can help figure out whether this is a transaction that a customer, let's say Gautam here, will actually be doing, given all his transaction patterns. And you can use as much data as possible to make that signal stronger and stronger. And preventing merchants from, these bad use cases, preventing, risky transactions from going through. I think that's the cornerstone that we have really worked on. See a lot of use cases with Gen AI on that.
Awesome. Amrish, taking off from there, and probably because FineLab has done very large-scale deployment in point-of-sale market, digital merchants have an advantage because they start with data first, because it's digital platforms, so customer registrations, transaction monitoring is quite simple compared to physical merchants. But especially FineLabs have done deep integrations with merchants, both on billing and EMI and things like that. Do you see the same kind of use cases what Anirban spoke about, and probably expand a little bit more about, how do you drive personalization? Because that's one of the things which we hear a lot on the digital side. Do you see that technology like AI can help us do even personalization for physical merchants, or even things like, merchant EMI practically was innovated by you guys at scale. Do you see driving some of those things super personalized at the merchant level?
So Anurag, what I'll do is I'll first talk about the broad problem statement, and then I do want to take it to an example which is slightly different than classic merchant. So one of the things what we are getting to face every day with the merchant environment is, if we go back and communicate to the merchant that we'll help you run your business more efficiently, they don't have time for us. What they want to hear from us is, how do we make more money in our business? And similarly, the way I'm looking at it is, the bot environment moving to intelligent agents environment, I think that's the point when AI is going to become super interesting to all of us. Because what's really going to happen is, as you move into the intelligent agent world, you're effectively almost democratizing knowledge or intelligence in general. Let me give you one example on it, right? So when you have all of India which is doing satta on the stock market, on the options, they are losing every day. And what they are losing every day is, they are losing to the best trader on the other side, which could be, a Citadel or a Jane Street or somebody else, which are large houses there. The way I see this is using AI over the next few years, you're almost going to have an equal capability in your pocket to go compete in a very competitive manner in a very complex environment of F&O and F&O trading. And that intelligence will be available with you at all points of time because of AI. So there, the opportunity for the consumer is not really to try and cut cost or to become much more efficient, but effectively make more revenues. And honestly, what we are really trying to work on today in Pine Labs is, I think we've accepted the fact that intelligent bots are going to solve for certain situations and scenarios, but what are the ways in which we can help people make money? And that is exactly what you were referring to. Between, let's say, installment payments to something like an early trade-in to something like an assured buyback, we think the opportunity is a larger opportunity around affordability. And when a consumer comes in to make a purchase, if we can intelligently prompt the consumer what's the best option that the consumer can take, it'll allow us to become more relevant both to the merchant as well as the consumer, help them make more money. I think that's a good deployment of the AI framework as far as we are concerned.
Awesome, awesome. One of the biggest use cases we have seen, a rather early adoption, we've seen in many industries, Mahendra, is about using AI to drive automation. And the reason I wanted to ask this question because you are a commerce and payment play inbuilt, and you get to see both sides, on the consumer sides as well as on the seller side. And like when we'll talk about millions of orders being processed on a daily basis, refunds, reconciliations, cancellations, orders, do you see, are you guys deploying AI in these use cases to drive automation and operating costs down, which can actually bring down experience both for the sellers and the consumers from the traditional means?
Yeah, I'll get to the automation for driving costs down, not just in payments, but overall the fulfillment value chain and e-commerce. But just want to build on the earlier point that Amrish teed up. I think in the consumer journey in commerce, I mean, while we can think about it in e-commerce terms, I think it equally applies in the offline world. And if you ask yourself, how can AI agents really simplify the customer experience of purchasing anything? And if you just kind of break down the decision points that the consumer goes through, firstly, they're trying to figure out what product to buy. Then they're trying to figure out what product goes along with this product. Then they're trying to figure out which payment method should I use to pay for this product. Then they're trying to, in that decision, they're trying to figure out what is the best offer, installment offer, bank offer, etc., that I have on this product. All of that helps them buy the product, then it gets delivered. Now they want to return the product. They want to talk to a customer service agent. Each of these areas have certain degrees of inefficiencies. And I feel that artificial intelligence deployed well simplifies that in many ways. I think people are now familiar with frequently bought together. People are familiar with customers who bought this also bought. So these are all kind of ML and AI techniques, whether it's collaborative filtering, query intent deciphering, that allows you to do that. The same thing then applies in, hey, I have like 5 different credit cards saved in my wallet. Which credit card should I use for this purchase because it's giving me the best offer? Again, there is an AI agent working in the back recommending that. Then when you come on the back-end side of, to your point about automation and cost reduction, I mean, as you're familiar, when you're processing millions of transactions every hour, it is not just about processing the payment on behalf of the customer. You have in the back-end settling to merchants, working with banks, the refund files, remittance files, and even just the act of processing a payment. I mean, in this country, we still have success rates which are about 1 in every 5 or 6 payments fail. How do you get that intelligence back from the failure reason code that you're getting? Now, today I might have a operations team that is looking at all those reason codes and deciding which processor to route through, which issuer to suppress. But really with AI and ML, what we are able to do is really make more intelligent decisions based on the return reason codes we are getting from banks and processors to then decide what exact actions to take. Because today, manually when you are taking those actions, those are based on certain rules versus really understanding the root cause in real time and reacting to it. Same thing when you think about refunds. I mean, as much as we talk about frauds and abuse on the payment forward leg side, there's equal abuse happening on the reverse leg side. So how do you really decipher intent of a consumer who's asking for a refund and make smart choices? So I think overall, when you analyze the inefficiencies that exist both on the consumer side in terms of their decision making and how you can simplify it, as well as the business's operation and how you can simplify it, I think there's just tremendous opportunity. And not speaking about this purely in the e-commerce context alone, because even in the offline world, the same sort of problems exist. I think with some of the digitization of payments that we have seen over the last many years, I feel taking some of these concepts from the e-commerce world into the offline world and bridging that online to offline divide. So for example, I can walk into a physical store and navigate the selection in that store using my app, which can then tell, hey, if you buy this TV, then you can buy this, whatever, headphone along with it. So I think all those technologies now are available to even smaller merchants in physical stores and can be deployed.
Sorry, considering we are all friends out here, Mahendra, can I ask you a question out of syllabus? But so, you know, one of the things which I've been very intrigued by is you had the web world, you then had the consumer which is going much more into the app, and app is almost like an ecosystem of its own. And then you have, you know, everybody from a Google to a WhatsApp to others which have immense distribution, adding in AI layers for creating intelligence. Do you think consumer experience will go through another change between web world to an app world to something different? Any thoughts on that one? On the backs of AI?
I would say it's already happening without us realizing it in some ways, right? I think today, a lot of consumers in certain categories are not really going to an app or a shopping app to begin their purchase, right? Their decision is influenced through a social media influencer who doesn't really know them, but whose preferences, tastes are decoded through artificial intelligence. Suddenly, like, you start seeing a certain kind of influencer in your feed, not because you know them personally, not because you even had heard about them, but certain information that you are putting out there is helping personalize which influencers you're seeing. I mean, all of us are on probably the other side of 40s, and I'm sure we are getting targeted by various different lifestyle choices, midlife crisis brands that are out there. So I think it is already happening. Now, whether the form factor will change from a smartphone to something else, I think there is a lot of device evolution that is going on. You are bringing it about in the payments world, and we'll see some of those coming along. But I think it is already getting influenced by
Good. I'll come back to it because I have a follow-up question, but I want to bring in Gautam here. And, you know, like, one of the reasons why, you know, payments grow at scale because, you know, once they're standardized, you know, it's easier for people to adopt. And networks do a critical job of abstracting a lot of complexity in the back end. And, you know, you just heard from POS-based transactions to e-commerce transactions at a network level because you are driving, you know, like thousands of banks so that unified experience can be given to the end consumer and the merchants. What kind of AI innovation MasterCard is driving to do that? And especially because you are not, you know, just bound by India boundaries, because the MasterCard experience has to be seamless across the board because cross-border is one of the biggest use cases for network. So how do you see that, you know, evolve?
So, Anurag, that's a great question. So let me start off with maybe saying we have been in this space of AI 10 to 15 years. As a student of AI 25 years ago, I would say AI is now nothing but data analytics, large amounts of data, a lot of processing power, all coming together, making AI really, you know, happen and making it practically possible. So if I were to give you some numbers of how technology and AI have really impacted payments and how innovation has really impacted payments, about 20 odd years ago, if you were to look at auth rates on card payments, I'm going to talk about, an 85-86% auth rate was a pretty good number.
Yeah.
Right? I'm talking about card present, for those of you who understand what card present means. Today, in most advanced economies, well-operating banks do a 97-98% auth rate. Even in India, we see many banks, private sector banks, in that 97-98% auth rate. The worst class is still sitting in the 80s, some in the 70s also. Now, the moment you add cross-border, the moment you add contactless, the numbers start, dropping. But the fact is that we have come a long way from that 85% being a good benchmark to a 97, 98% being a benchmark. What has allowed that to happen is back in the day, there were very rudimentary patterns one would search for to be able to call something a potentially fraudulent transaction. As technology has progressed, as we've adopted AI, our ability to identify patterns, our ability to, in real time, change our opinion on patterns has really happened because of what we are calling AI today. And that has allowed us to come to these kind of staggering numbers, right? So therefore, the natural use case in payments has been fraud detection. And then, of course, we have evolved. We have innovated a lot. To give you a sense, think about it. 20 years ago, when you made a payment on a card, there was just a physical card you made a payment on. You went to a store, you made a payment. The only data I had was, okay, some guy XYZ with the card number XYZ went to a merchant has a merchant ID of ABC and did a transaction for a certain amount. But now, when Mahindra walks in, depending on what he's planning to use, if he's using his phone, there's actually the identifier of the phone being captured, the digital form factor of the payment being captured. His geolocation is being captured. The fact that he's making a payment somewhere is being captured. And there's a lot more information that is going along with that payment transaction. And so there's a lot more the ability to make more decisions. So to give you a sense, today at MasterCard, in real time, we are looking at about 1 trillion. When I say 1 trillion, I mean trillion, the T. Trillion data points in real time to determine whether a transaction is potentially fraudulent or not, right? And we're doing it for about 150 billion transactions on a yearly basis. We protected about $40 billion worth of fraud from happening in the last year alone globally. And that is only possible because we have access to global patterns. We're looking at global patterns. We're able to do this pattern recognition all in real time. And for those of you who use cards, it probably takes less than half a second for you to see an authorization to happen, an SMS alert to come to say, you made that payment. All of that happens at a global level because we've been able to do some technology. So that is what we have done in innovation. We're taking that forward from a consumer experience perspective. I think Anirban talked about it a little bit. So today, we are the only global network that processes real-time payments and card networks, right? And what we are doing now with our customers globally is we don't want a consumer, the world that we see, we don't want the consumer to make a choice, debit, credit, UPI, doesn't make a difference. At the end of the day, you want to make a payment. You want to make a payment for a certain transaction. We are saying we're going to use AI to actually determine what is the best payment system to be used, right? And therefore route the transaction either on a card rail or a real-time payment rail or something else that may come in the future. Don't know what that future looks like. But essentially allow consumers to say, I want to make a payment of $5, $10, 5 rupees, 100 rupees, 1,000 rupees, whatever that amount is. And depending on what kind of a transaction it is, what value of the transaction it is, smart routing will happen of how the transaction gets routed. So that's another thing that we are doing. We are doing it in multiple countries where we are able to operate in this multi-network model, if you will.
Awesome. Anirban, you spoke about trust, and trust is super critical for payments because ultimately this is about money, and people need to know if they make the payments, payment does reach on time, in secure, safe manner. I just want to double down on that, like just from a practitioner point of view. Would you like to say, give an example of a use case where AI is actually being deployed either by PayU or any other example which you are aware of, especially around fraud detections? And it'll be better if you can say how it was done before and now how it is being done, definitely, because that's one area we keep hearing a lot of work is happening by the ecosystem to drive, fraud detection down.
Yeah, look, one example I'll give is underwriting a merchant, right? One of the things payment companies have to ensure is the merchant actually is doing the business they are saying they are doing, right? Many people have lost money when the merchant site is fraudulent, right? Or they're not providing the right goods and services. We would do that underwriting using very well-trained fraud analysts who had rules, who had algorithms, who had those things, right? But now using LLMs, what we have built is you essentially profile the merchant's website and their app in its fullest details, look at all their customer reviews all over the internet, you go through all their pictures, and you feed all of that into the LLM. The LLM is pretty accurate in figuring out actually what line of business the merchant is in, and is there any conduct risk? Are they going to sell anything that is banned? Or are they going to do things that are not allowed per Indian laws, like crypto or gambling or something, right? All of that just enhances trust in the ecosystem. Think of it how it impacts and expands the economy as well. One side, there is more trust and more consumers therefore can trust merchants much more easily. But the other side of it, anybody can be a merchant, right? Over time, like if you can trust and verify anybody just based on conduct rather than a lot of documents, you can make anybody a merchant. And therefore, the micro merchant can go digital and can have the same set of tools that a very large merchant can have.
Okay. Good. So I think this is already live.
Yes.
Awesome. I know we all have faced false positive ratios in this area so high, where ultimately most of the fraud detection becomes case management system. So if we can solve this, is quite good use case. Amrish, you spoke about in your previous answer that how same shopper behavior can be used to drive personalized experience at the merchant. But do you see that when you deploy, I'm sure some of this was also being done for POS merchants because they're also equally fraud prone. We all have seen and experienced cases where fuel transactions or grocery transactions are being misused. Do you see that this will drive more frictions for customers? Especially because, when you're sitting in front of the merchant, consumer he has an option to just pay cash. Okay, and all of us are fighting cash at a very, very bare minimum level. So how do you deliver that, find the balance between a fraud detection in a POS place at the same time offering a frictionless experience for the consumer? Because in a lot of digital places, you have no choice but to use digital payments, but in POS, the situation is very, very different.
Yeah, look, I think when it comes to the POS transaction, I have to say that we are in a fairly easy world. As long as the consumer has identified herself and consumer has the right PIN available to them, our job is to take the transaction and complete the transaction. So honestly, one of the things which I keep saying that when somebody wants to complete the transaction, don't put any intelligence on it, complete the damn transaction, we don't need to interfere in it. However, what we are getting to see some very interesting use cases is, for example, what we are doing in the account aggregator space. So as you know, we own this company called Setu, and Setu is doing a lot of work on the account aggregator side. What we have been able to clearly demonstrate is at least a 15 to 20% improvement in a simple job like labeling. So what we are getting to see is that based on the data which comes through on the account aggregator side, which is being utilized by fintechs, just the labeling activity was, did you actually do that for a food transaction? Was that a transportation transaction? Was that a gift transaction? And so on and so forth. Just labeling of that transaction using AI, we've been actually able to demonstrate almost a 15% improvement. And that 15% improvement is then adding value to the end user in terms of their underwriting activities or their decision-making activities. And it is actually in force being used today in the field. I'm at an event where I shouldn't be talking about other financial institutions, but it is currently being used by financial institutions, and they're almost getting to see a 15 to 20% improvement on their labeling activity today.
Awesome. But I just want to double down on the previous question which Amrish asked. So I think just want to elaborate. We saw like somewhere in late 90s when the internet started and we all had portal business coming in, and then mobile came in. But for a very long period, there was an overlapping world. And somewhere on, if I talk about Indian context, post 2017, 2018, we start seeing mobile first businesses. Like when we started our company, we had absolutely no website. It was only app business. And I'm sure what example you just gave, that already AI is being infused in commerce and payments to drive shopping performance. Do you see a world, how far we are from an AI first kind of commerce and stroke payment. Because payment has to inbuild along with commerce. The first commerce has to be completely digital, completely AI driven. Probably just a board where people talk and it happens like that. How far are we from there, or are you guys working? I know Amazon spoke about those experiments in US where the fridge will inform how many eggs need to be ordered and things like that. How far are we from the reality from that?
See, I think if I just summarize the paradigm of our interaction that we are most familiar with today when we shop online, is you're used to navigation and you're used to punching in fairly specific search terms of what you want to buy. Like if I want to buy this bottle, I'll say bottle of water, right? Like so you walk with a very clear intent of what you want to buy. And if you have that in mind, then you can either navigate, you can say, hey, men's apparel, shirts, and go there, or you can type in men's polo shirts and go there. I think where the world is moving to, and I think it is launched in India as well. So we have a chatbot assistant called Rufus inside the Amazon app that you can actually have a conversation with, right? And I was just showing this to Amrish on the side there, is I was just looking for a travel gift for my wife. I didn't have a very specific gift in mind. I was just like, hey, what travel gift can I give? And incidentally, it pulled out a Make My Trip gift card powered by Quicksilver, so which is what I showed it to him. I said, hey, look, this is already happening, right? And it was not like, I think the assistant was smart enough to recommend a set of categories. It was like, hey, here's a luggage bag, and here's a book on backpacking through Kerala, and here's like a travel gift card. So I don't think I would have had that even thought in my mind that if I'm looking for a travel, like I think it suddenly made it possible to ask a language question, like, can you recommend me a travel gift for my wife? Wow. Like that was the question, and these were the set of recommendations that I got, right? Like, so I feel it's already moving into that space. And so the more we almost like deprogram ourselves of doing these spearfishy searches and just actually learning to have a conversation, which is a dying art these days, right? I think AIs can do a phenomenal job. I think today what has happened is we are just so fine-tuned saying, hey, deliver me a chicken biryani from this restaurant, or deliver me this by whatever, right? So we've been programmed to become very quantitative, objective in terms of how we converse with some of these search boxes that have programmed us over the last 15, 20 years. I think it's time to deprogram ourselves and just have a regular conversation, and it'll bring some interesting results.
You want to say?
No, I was actually looking up the same thing right now. So if you actually looked at the recent announcement by Perplexity around shopping, and they had a very interesting one where you could actually say that, hey, I'm doing a birthday party and I have no clue how to do it. What all do I need? And there are actually responses out there which says, you need to buy balloons. Balloons can be bought from so-and-so. You need a clown. These are the 3 clowns which are most used in your locality. And these are the return gifts that you need to buy, and these are the options. And you can go and buy purchases. The interesting thing is, as soon as Perplexity came out with it, Stripe actually came out with commerce-related solutions on top of that instantly. And they said, we've already partnered with them, so you can actually go and complete the payment transaction right then and there. So the question that you're asking is arrived. It's there
Probably
today.
next time you're planning with Shweta's birthday, but it'll also tell you that don't buy balloons. She doesn't like balloons. Okay. Anyway, coming to Gautam, all this is good. We've heard tons of use cases. Life looks good. We all know payment is a deeply regulated area, and data across the country, across the world, how we run model governance, the back end of it, how we use the data, what data we can use. Because even if we do use LLM, we have to be very careful that how much data we are actually feeding in, what portion of the LLM we are using it, has the data been consented by the consumers? How do you see the backend emerging for AI? Because all these use cases essentially ride on, like how we run the backend. It has to be explainable, it has to be traceable. How do you see that? Especially, I'm pointing this question to you because you are running multi-country network, and every jurisdiction will have its own evolving laws around it. So how do you see that happening?
So before I answer that question, I do want to ask Mahindra one thing. Not a question. I was just wondering if I were to ask a system and what travel gift I give my wife, and if I came up with a travel gift card, she's going to shoot me because she's going to say, you were going to pay for my travel anyway. What is this gift card of value to me? So don't buy that gift, man. But to answer your question, there was, I think many moons ago when I was running technology for MasterCard, I had written a bit of a paper on this exact topic, which is we should not be creating data islands, right? So what is happening today, unfortunately, globalization and nationalism is happening at the same time, right? And the regulatory action, I'm not talking about India, I'm talking about globally, regulators are becoming quite concerned about, data sovereignty, and data resides in my country, it's happening in India, China, Indonesia, parts of Europe, wherever. The one beauty of our global network was always the fact that we had access to global data, global patterns, and based on which we were able to build decision modeling systems that allowed us to provide the experience, to provide the fraud management and everything that was there. Now, the more and more we start getting into these data islands where, your data has to be protected, you can't really bring one country's data out to the other. If more countries start doing that than what we already have, we could potentially be in this problem of, are we creating, friction in the system? So I think, firstly, what needs to happen is the world needs to come together in that sense to define what does good look like. We need technology companies, we need regulators to come together. Then the second thing that needs to happen is we have to move away from a non-trusting environment in the sense that, people compete on technology, people compete on innovation, we cooperate. There is a term that we've been using called co-opting, right? Which is essentially, there are things that Pine Labs does better than MasterCard, there are things that MasterCard does better than somebody else. We need to start working together. Amrish used the example that, Perplexity came up with this idea, and then Stripe is already building, that's exactly what a cooperation model looks like, right? So I think we need to start working well, within the ecosystem, and therefore the data boundaries that you're talking about, I don't think data boundaries in that sense should exist, but data governance, rules should be there. PII is important. I think the one thing that we should all be thinking about is how do we provide all of this, keeping, PII in mind. To me, that needs to remain sacrosanct.
Understood. Anyone you want to add, just from a India point of view, that because you've already deployed use cases, any tips around what are the basic stuff one has to look after when you're deploying an AI model to solve an actual use case?
From a security perspective?
Yeah, security, safety, privacy, all these topics, like, how you have taken the data. And because, a lot of time we actually merge proprietary data with data which is available publicly. How do you just create firewalls and, to actually deploy the use case?
Yes. Look, keep PII out. I think the most important thing is to be very, very careful with PII. Be very clear that everything you do follows the spirit of the regulatory compliance, that is laid out. But avoiding, you don't need PII for anything. You can just anonymize and tokenize that. And then I think most use cases you can solve for within reason.
Awesome.
I have to say, for a fintech panel, it took almost 35 minutes before the regulator word came out.
I know. That is true.
No, I kept it for the last because I want to make sure that everybody remains in the mind. But I just want to add one point and probably open up for questions. We have around 3-4 minutes. Is that as the compute becomes cheaper and at scale, even the traditional AI models can become much better, which we all have been using it for many years in solving actual use cases. So we are also seeing some of those use cases also being deployed by payment companies, where you can improve the efficiency of your, predictive AI models, which we have been using for that. So anyway, we have got 3 minutes. Happy to take any questions. Yeah. Can we get a mic for the gentleman? Yeah.
I have a question for Setu in particular. When you bought Setu, it was a fixed deposit aggregator. Just as soon as you bought it, the API pricing went offline. And now I see any information of FD aggregation out. But companies like Airtel Money are getting into that space. So what is your thought? I mean, is it the regulator, the R word, right? Creating too much heat that you got out of that space?
Geez, this wasn't part of the syllabus, but I'm still going to answer that one. And slightly long answer, but you asked me a very specific answer, right? Question. The reality is, when it comes to fixed deposit, it is a single transaction, and there are no repeat transactions, and your abilities to make money is extremely limited. And hence, I felt that this is not a business which is a scalable business. It had nothing to do with the regulator. At the end of the day, we are API providers. We create APIs which meet up to business requirements. You deprioritize those APIs which you don't believe are going to be very, very scalable. So we did that. But we went ahead and invested into many new other APIs, which seem to have done extremely well for us over the last 12 years. Over the last 12 months. In the last 24 months, this business has grown 100% for the last 2 years. So, yeah, some good decisions have also happened.
Anyone else? Yeah, please.
My question is more of to Gautam and rest of the panel members, is that everybody is trying and talking about fraud prevention, and at the same time, transaction processing, the time of processing is also important, right? So when a payment processor like PayU or Pine Labs or any other payment aggregator processes the transactions, it is always dependent on, like, to prevent the fraud, there is a front level fraud detection can happen. But at the back end, you all are working with the banks, right? So this kind of syncing between the bank and the aggregator, how AI can solve this problem, right? Because we are sitting at a time when a lot of payment aggregators are bringing a lot of different solutions to process transactions, but at the same time, speed of transaction is very important.
So as I mentioned, a MasterCard transaction is approved generally within 500 milliseconds, and that is after going through almost 1 trillion data points for fraud and other detection. So we do this with our own system and the partner systems in place with the banks. The way we do it is we actually recommend for every transaction, we give a score to the bank partners saying that based on MasterCard's assessment, this transaction has a score anywhere from 0 to 100. That's our range. 100 being not fraudulent, 0 being extremely likely to be fraudulent. And we give them ideas of what the right threshold is where they should decline the transaction. And at the end of the day, we let the banks decide, what they would want to decline versus us making that choice. But I think, I don't think speed is of concern given how things are happening today, at least not in the network world.
I just wanted to add one thing to it. Look, we have to evolve as an ecosystem on the issuing side where we use much more risk-based authentication. That is where I think this whole system will come together, and multiple, like, if you think this is not a usual pattern of transaction for a customer, the OTP could have been phished, right? So you ask for an additional form of authentication, but both that risk-based signaling and then asking for additional authentication, that whole framework has to come in place. I think it's time for that as digital commerce expands.
Okay, probably just one last question and we are done.
Good evening, gentlemen. I'm from TCS. My name is Ashish. The question is, recently the governor of RBI has announced the introduction of ULI, Unified Lending Interface. And, obviously all of us know that lending is a much more involved activity in terms of underwriting and other activities. So how far is this system ready to introduce something like ULI? And the second question is, will there be UII, Unified Insurance Interface, after ULI? Thank you.
Yeah, so I think, hello, yeah. So I think ULI, RBI has announced ULI primarily to drive lending ecosystem on the lines of UPI, where multiple players can participate in that. The good news is a lot of hard work about ULI has been done already by aggregating APIs like account aggregators, authentication of KYC, validations around, like things like PAN, your income verifications and all that. So some of the new stuff like device identification and all that will get added. What we see that the way when UPI, even before UPI, mobile payments were there, but UPI brought standardization payment which allowed multiple players to participate. This is how ULI is being is being thought. We are already using ULI in some form. Many of us are already using. I think from an ecosystem to probably stabilize, I would give 12 to 18 months. RBIH is the nodal body, which is already doing lots of workshops with fintechs and banks so that the adoption can be faster. Coming to UI, by the way, IRDA has set up a separate company called Bima Sugam, which is supposed to be building these API structure for UPI kind of structure, but they still, we haven't rolled out anything substantial to the consumers, to best of my knowledge. But they are actually staffing the company, they're hiring people, and we're hopefully that this will drive, portability, transfer of insurance seamlessly from one insurer to other insurer and things like that pretty soon. Yeah. Thank you. We are already up on the, by almost 4 minutes. So thank you everyone, and thank you for listening us.
Thank you so much, gentlemen. Ladies and gentlemen, give it up for our outstanding panelists. I would now request Mr. Ramesh Aithal, Chief Digital Officer, L&T Finance, to kindly come on stage and felicitate these outstanding people for their panel discussion. Ladies and gentlemen, give it up for these outstanding panelists and Mr. Aithal. Thank you for joining us, sir. And now it's time for our next session. It will explore the potential risks of deepfakes and how advanced deepfake technology ensures secure and compliant onboarding for financial institutions. I would like to call upon stage Mr. Kedar Kulkarni, co-founder and CEO of Hyperverge, to share his insights on the same. Sir, can we please have you on stage?
Hi everyone, are you able to hear me? Okay. So I think we have had a lot of panels, we have had a lot of conversation about AI, but I think it's good to see some interesting pieces of AI, right? Both good and bad. So all of you know about deepfakes. How many of you here have not heard about deepfakes? Okay, so everyone knows about deepfakes. How many of you love watching movies? How many of you have seen Kabhi Khushi Kabhi Gham? So all of you know that scene where Shah Rukh Khan enters, right? He comes in a helicopter and he's running and there is Jaya Bachchan right there. So let's have a look at it.
मेरे आने से पहले तुम्हें हमेशा कैसे पता चलता था?
Yeah, so I think deep fakes are a lot of fun. The moment I saw that, I was very happy I became an entrepreneur. I would have looked terrible on the big screen, right? It saved all of us a lot of misery. So yeah, they are a lot of fun. So that brings us to, that one was easy to spot. All of us know Shah Rukh Khan, all of us know how he looks, and I think he's a lot more handsome than the guy that you saw there. But when we look at these three images, if I have to ask you, which one of this is a deep fake? Look at them carefully. How many of you think A? Just raise your hands. How many of you think B is a deep fake? How many of you think C is a deep fake? I think the good news is all of you are right. All these images are actually deep fakes. This is the original guy, and everything else, just look at it carefully, everything else is a deep fake. Now the surprising thing is, how real is this deep fake? Right? The scary part is that it's not very difficult to generate this. My colleague Karthik is with me. He'll just show us how fast it is possible. So he's right there, and I just want all of you to see how fast can we generate this. So this is a deep fake generator. Hyperverge works on protecting all of you. So I think the first step of that is, if you have to be a good police, you have to be a good chore also. So we started making our own deep fakes to train our own AI engines. Karthik, do you want to show how easy it is to detect or to create a deep fake? So this is an image I took today morning, in fact. Karthik is selecting an image of him. Fingers crossed, all tech demos. Live, never easy. Okay, look at it carefully. That's a deep fake that we generated right here in front of you. Right? No post-processing, no Photoshop, nothing. It just happened right in front of you. We have Ramesh sir here. I think with the advent of AI, he's the person who has maximum number of opportunities and problems. So we'll generate a deep fake of Ramesh sir and me. All of you at LTFS know him well. So this is how fast and how easy it is to generate a deep fake, right? Now, fun on one side. I think the scary part is going to be that it's estimated, there's a report by Deloitte that there is going to be about $27 billion that will be lost in US alone because of deep fakes and related problems that arise because of deep fakes for financial services. So I think some time back, Nitin Kamath put up a video where he actually spoke about dangers of deepfake, and I think a whole lot of these videos end up with telling us that, hey, this video itself is a deepfake, right? So if we have to think about from a BFSI perspective, identity is at the heart of it, right? If we are creating, if we are giving a loan to someone, if we are opening an account for someone, we are doing any kind of transaction, identity is what we all depend upon. Now, if that identity itself gets compromised, it's a big problem. So we'll look at this as a live demo. Everything happening here is live. I actually have a device with me that is getting mirrored for all of you. Are you all able to see this? Yeah. So we all know the standard KYC process. This is the easiest version of it for demo purposes. We are not doing CKYC or DigiLocker or something. We are doing a very easy version of it. So I'll start with a simple photo of myself. It always starts with a selfie. So I'm taking a selfie of myself. All good, sorry. It starts with a selfie. All these checks ensure that there are no multiple faces, all these kind of things. Okay. Thank God. The next thing is to take a photo of the ID card. So here is my Aadhaar, important information blocked out. And usually most systems do a lot of checks, right? We would check the Aadhaar data if it's genuine. We would match the face with the Aadhaar. We would see if it's a genuine ID card or someone is showing a photocopy or someone is showing a e-copy of it. We would also check if the person is real. But here the check that we are doing is, do these two faces match? And they too match, right? Now, what's the protection that is available in the system today? So if I catch hold of someone else's ID card, say this is my friend's ID card, Karthik, who is helping us with the demo. If I try this with Karthik's ID card, I take a photo of myself. And instead of my ID, if I use Karthik's ID. So it doesn't match. It would say of many things that did not work out. Definitely the face of the person who is doing the verification versus the face of the ID doesn't match, right? So that's the protection today. Now, with deepfakes, with AI, the way it is available today, the new problem that we have is that this is something that we can surpass. So I again start the same process. Instead of my photo here, we are selecting this fake camera, and I'm inserting this deep fake I have with Karthik. I take a photo of myself. It appears like I'm taking my photo, but it has actually inserted another photo. It's called image injection, and we actually inserted another photo. Now, when I go to capture the ID, we don't need the fake camera anymore. We can get back to the real camera. And I take photo of the PAN card here. Yeah, wow, it went through. The faces match. So this is a KYC process where we opened a fake camera instead of the real camera, and we put a deep fake image that was generated into the system, and it went through. And does it happen with this rudimentary application? It can happen with every mode of KYC that we have in the country today, right? Okay, scary enough. So we have Sir here. I would invite him to come. We can try it out with his ID as well. Same process. So again, I request you for your ID. Yes. And we'll again, we'll do the process again. You can be here, sir, just one sec. I'll return your ID in a minute. We'll start the fake camera again. The deep fake. Again, instead of taking my photo, we'll try to insert the deep fake, pretty real looking deep fake. Go to ID capture. We don't need the fake camera. We can switch it off, capture the actual ID. Yeah. Went through again. Do these two people look similar? Quite similar. On a scale of 10, how scary do you feel it is?
I think it is 10 out of 10.
10 out of 10? Okay. So, thanks, sir. Thanks for joining in. Yes. But I think that's not the end of story. I think there are a lot of teams in a very committed way that are working on solving for this. So if we enable something called deepfake protection or deepfake safe in this case, and if I try to do the same, I try to insert any of the images that we tried, right, into the system, it immediately detects it as a deepfake. If I try one more time, the image of Ramesh sir that I tried, it's deepfake detected. So, yes. So, how do you feel right now? How many of you feel this is quite creepy? Okay. So, thank you. The job of the session was to make all of you aware. I think the AI is a big leap, and all of us don't have a choice, right? The leap is happening with or without us. And as with any leap of technology, be it internet, be it smartphones, I think it's going to be hugely enabling. There are a lot of benefits that are going to come out of it, which we need to embrace. And there are going to be some elements that are harmful. There are going to be ways that it is going to be used which are not useful, and we need to guard against it. And I think that's what we can do about it. There are a lot of teams which are working in a very committed way to ensure that this transition is a very positive transition for all of us, right? That it's not the creepy, scary transition that all of you felt. Hey, anyone can get my ID, anyone can get my photo, and they can go through a system. But it won't be as scary. There are enough people working towards it. So you can go home, relax, sleep well. If you still feel creeped out tomorrow morning, you can reach out to Hyperverge. We are one call away. Thank you. That's my time. Thank you.
Thank you so much, Mr. Kulkarni. I request you to please stay on stage as I catch my breath and calm down after what I just saw. I would now request Mr. Raju Dorti, Chief Operating Officer, L&T Finance, to please come on stage and felicitate Mr. Kulkarni. Ladies and gentlemen, let's give this gentleman a big round of applause. Thank you, Mr. Kulkarni. Thank you, Mr. Dorti. And now for our upcoming panel. We turn our attention to a topic that is both critical and timely: AI, data privacy, and the ethics of AI. As the first speaker, I would like to call upon Mr. Sabyasachi Goswami, CEO of Perfio Software Solutions, to kindly come on stage. Give it up for him, ladies and gentlemen, followed by Dr. Parul Naib, Head of Data Science and Machine Learning at the Reserve Bank Innovation Hub. You know, we're almost towards the end of our event, and you guys have forgotten how to clap. How does that happen? How does one forget how to give an applause? Following Dr. Naib, we have Ms. Zia Modi, co-founder and managing partner at AZB and Partners. And I would now like to invite Mr. Ramesh Aithal, Chief Digital Officer at L&T Finance, to the stage to lead the discussion. Ladies and gentlemen, give it up for this brilliant set of minds.
All right. Thank you. All right. Looks like we are running late. We have around 30 minutes, so we'll try to squeeze in a fairly important topic, and unfortunately it gets a little, let's say, a lot of visibility these days. I mean, I want to continue on what Kedar mentioned with the deepfake scare that he showed, right? The same Deloitte report there recently came out, which said that 70% of users who use ChatGPT and the other models that we talk about publicly, that's 70% of them are very worried about their privacy. 70% doesn't scare me. What scares me is that the 30% who don't feel worried. In fact, our CEO out here, Mr. Raju Dorti, is an avid user of ChatGPT, and I'm sure this question posed to him, he would be on the 70% side. I hope so, sir. Coming back, I think we have an eminent panel here. The topic is fairly in the public domain now. just a few weeks ago, even the Prime Minister of the country alluded to this about privacy and ethics in AI. And I think it was the Indian Mobile Congress a few weeks ago where he actually mentioned that the government will be taking steps, at least to introduce some guidelines for self-regulation. I'm not sure when that will come out, but I'm sure it's very soon. So, excuse me. So we'll start off with the panelists. And want to call upon Ms. Modi here to perhaps take the first question, which is around the Data Privacy Act. Ma'am, first question obviously is, as a banking and fintech player, what risks do you foresee with the new act that's coming there?
Many. This is a, call it iconic or startling piece of legislation which has not come into effect, where the rules have not yet been framed. But industry is rightly thinking about where it's going to go. So before we had a fairly loose system. One consent covered everything. We didn't have to really worry too much, provided the consent form was ticked and signed. But the simplistic regime has been completely replaced by the DPA. And now for usage, storage, collection, sharing, for everything concerning personal data in a digitized form, you need affirmative consent, which is not your kitchen sink omnibus consent clauses. You cannot have someone sign a call saying Zia Modi says, I agree that all my personal information will be shared by anybody, everybody, for anything, anytime, forever. Doesn't work anymore. And right now, you guys have to obviously figure out that you're probably data fiduciaries. So sorry. Savya's been saying very strongly, I'm a data processor. Good for him. As a law firm, I don't know what we are, frankly. But suffice it to say that you now have to be very clear from what you have to get from the data principle, which is the ultimate customer. He has to know for what he's giving his consent, why he's giving his consent, and he has full freedom to withdraw his consent or to change his consent. And the problem is that you're kind of stuck as a data fiduciary because you're the last one on the hook. If you make a mistake, Raju has to pay 250 crores each time, okay? So the legalese has to be well documented and each step has to be thought out. So you could have more than one data fiduciary in a particular product. You could have separate and standalone consents that you require. You could have cybersecurity issues that you need to address. And what happens if I give you my consent, you use it, and then after 6 months I withdraw it? I'm entitled to withdraw it. You've used the data. So things are in a flux. And I think it's still an evolving space, but it's an important space which could have consequences.
Got it. I mean, obviously, that worries us a lot. And Sabya here represents the industry in a way. So maybe I'm going to turn the question to him. Sabya, I mean, what role do you see for industry participants like yourself in how we can regulate ourselves here?
So I think I can simply say in 5 words, pretty much, but I will go a little beyond. The 5 words first, let me explain, and which I believe at Perfios also has been our DNA, which is basically never store any data is what I would say is the first principle. Pretty much they are saying without a specific consent for a specific purpose. That is more applicable to fiduciary, but as a processor, as soon as the process gets over, it is supposed to be purged. As far as this principle is followed, I think we are on the right side of the law. The rules are yet to be seen. Now coming to the point which we are discussing, and I see many industry players coming together to raise this with the necessary authorities and policymakers. My point of view there is that minimize the data footprint. That's the first point that we should follow. If we do that, you're pretty much getting closer to adhering to the rules. The next is what kind of data privacy practices that you follow. You should only get the data and process the data for that specific purpose that you have taken the consent for. I think today, the question that is coming is, do we have even the right data structure to measure that? We need to do a lot of work on that as an industry from a financial institution's perspective, but I think everybody is aware and getting there. That's number one. Number two is the product design mechanisms. So when you're designing the product, that itself should be able to prove in question whenever there is a question. So there has to be enough audit trail to kind of produce the records as required whenever required. Are you following that? That's the second part. And third is AI-specific practices, which generally all of us know, but two important points that I would like to make there is, one is any such technology, and specific to AI and LLM, there are a lot of biases. So that means, and there is apparent bias, there is hidden bias. And you have to address both. If you're doing that, then good. If you're not, you need to train the model to do it. I think industry is working on that. And the second bit is typical leakage happens, which we have seen, is while you are training, building the model in large LLM cases. So you need to, and that's called jailbreaking in technology terms, which happens. You need to protect and build boundaries around that. I think industry is working towards that. We as a company follow most of this. Some things that we need to improve, we are working on that, but I think this is what the industry needs to do and is getting done.
Got it. I mean, that's very pertinent, I suppose, right? As a player, you have to kind of, put certain guardrails there. Within RBI Innovation Hub, is this a problem you guys are actively looking at and addressing for us as an industry participant? That's when I say us, that's what I mean.
Yeah, of course. I think this is one of the very crucial areas that we are focused on. How do we ensure that we can keep the privacy? How can we address anything around the data confidentiality? Right. And I think that's our main goal right now, because as we are working towards frictionless credit, we want people's trust in the system. Right. They should be able to understand and know that their data is safe. And only then we can be going further.
Got it. Got it. But when you talk about trust, right, I mean, with all these, news coming out in the industry quite regularly about, people like deepfake or people identity fraud and all of that, right? How difficult do you think this task is going to get? Technology is advancing, and, while threats are emerging, newer and newer threats, I know you don't represent the regulator per se, but being the entity that's spurring this innovation, how do you kind of balance this innovation with responsibility?
I think already we are seeing that it's getting bigger and bigger in scale. We saw this movie Jamtara, if you've seen it, where you are just seeing that now villagers have access to this technology. They're able to fool people, and just with all this open source AI, Gen AI that we are talking about. So earlier the technology was limited to a select few who could afford this technology. But now it's almost in the hands of everyone.
Right.
And these incidents, as they're coming to light, it's giving more and more ideas.
Right.
So that's why this whole dynamic business is there, where, it's always, we have to constantly try to think like the fraudster so that we can beat the fraudster.
Got it. Got it. I mean, while we're talking about fraud and all of that, right? I mean, obviously companies are also generating a lot of data. And they're hoarding a lot of data of individuals and all of that, right? Now, the key question that emerges, and perhaps it's a question for you, ma'am, is about the property. Who owns this data? And whose intellectual property is it? Like, do I own the data? Like, I think there was recently a case of Scarlett Johansson in the US, whose voice was actually used, or a replica of her voice was used by OpenAI, none other than OpenAI. Now, what do you do?
Yeah, what do you do? So what is copyright? Copyright is ownership of some work product, right? And that belongs to the copyright owner. Even today, under Indian law, you don't have to actually register your copyright. You own it. Now, if that proprietary copyrighted data, which belongs to me, is used in an AI world where, without my consent, because they've just used it, and they make another product which is morphed using my copyright data, technically that's an infringement. Again, under Indian law, copyright can belong only to a human being. So AI is not a human being. Then is it joint ownership of copyright? Is that possible? Can I sue as Zia Modi because it was mine? I can. Who do I sue? The person who's used it. Will I ever know? Because it's floating out there, right, in the big bad world. And then copyright leads to trade secrets. There are things which are just trade secrets. If that is again floating, how do you protect that? If you have registered trademarks which belong to L&T, and it is used in some shape or form by someone else, it's a trademark of which you are the owner. So then how will you sue how many people? And how are the rules going to give some fair dealing exception or some safe harbor? Which goes back to what he was saying, Sabya, that if your process from start to finish is documented, that is your safe harbor.
Got it, got it. I mean, two questions emerge from that, ma'am. I mean, one is on the regulation itself. Are the current regulations enough, like you mentioned, Copyright Act? Is that good enough, or you think that has to evolve? And maybe I have another question, but for Sabya, but I'll come to that later.
It was good enough.
Okay.
Right? It's lasted for about 200 years. But now you have this new animal, which can take what belongs to you, unknown that it is committing a breach. It's in all this world out there with data, which is dumped to be processed. So I think that there will have to be rules which, if your consent is not taken, maybe they go back to you for your consent, and then you are in a very strong negotiating position, which doesn't help the data fiduciary or the data processor.
Correct.
I think there'll have to be some fair dealing exception, or now you may have to register your copyright, which earlier you didn't have to do.
Right, right. I mean, the same question to you, Sabya, again, from a participant. I mean, are you guys taking this seriously enough already, or is that something that you're waiting for the rules to emerge?
I think we are taking it very seriously from the day we conceptualized the idea of creating Perfios, which is 16 years back. Three things which is very important, as I said in my initial thoughts, which is whatever you are processing, you should have the consent from the consumer, because I think a lot of companies get it wrong. Who is the owner of the data?
Right.
It's you and me. Who is the end
Right.
consumer?
Correct.
What is financial institution? They are the custodian of that data.
Correct.
So the consent has to be taken not from the custodian, but the owner of the data, which
Correct.
is you and me.
Yes.
Right? What is the purpose for which you will be processing? For the specific purpose.
Yes.
And the third is, how do you ensure, which is not in our control, which is pretty much the fiduciary's control, what is it getting used for, and after that, and monitoring that.
Right.
So first two, we are pretty much taking care as an industry participant, and I mean, we, as I said, we never store any active users data. So that's the first point. But I think, I mean, if I can extend, unless you have a specific point there, I mean, there are a lot of innovations that is happening on this space, which is AI, to help demonstrate eventually. I mean, I'll say this is work in progress, everybody has not achieved there, which will take care of some of this. The first thing is, when we are using any AI, it should be explainable. So explainability. Are you able to explain? And that's the first question that everybody is trying to answer within their own ambit.
Right.
Likewise, we are. The next is, I feel, which is important, is the human AI collaboration.
Yes.
If that happens, the relevant feedback comes at the right time, you'll build the right model. You cannot say autonomous, I will just do the automation and let the model run on its own.
Right.
Doesn't happen.
Right.
There are enough biases which I touched in the previous point. And the third one which I see is the multimodal models. That is, there are different type of data that you will see, data structures that you will see. How do you address all of those? I think all of us are working through these three. Now, then there are different technologies which are there, which is evolving
Got it.
to answer some of those. Now, the first being, which some of us in the room would have heard, which is privacy preserving federated. Now, all of us in the room, if we come together and share our learnings and data, it is much better controlled. Today doesn't happen. Eventually, my belief is it will start happening.
Do you, I mean, maybe some of us in the audience might think that it's neither the financial, let's say the fiduciary responsibility entity or the individual that owns the data today, it's big tech that owns the data. Is that true to an extent? Because I don't know if all the folks here actually believe we own our data now anymore. I know this is perhaps controversial, but happy to hear your views.
No, I would say big tech is trying to do a lot of stuff, but ultimately the data belongs to all of us.
Yes.
We need to protect our data. We need to know our rights,
Yes.
which consumers in today's scenario are aware. So whether it is big tech or the financial institution, they need to figure it out.
Right.
We are in the journey to figure it out.
Okay.
And there are technologies today available which is very expensive. It is moving a little slow. I don't know if all of you have heard, but that's called homomorphic encryption, where without decrypting also the sensitive data can cross over.
Okay.
Now that's a fantastic technology, but it's expensive because it is in a very initial phase.
Right.
I think that will do a lot of work.
Got it, yeah. Because the obvious concern that emerges from this is exploitation, right? You know, we have seen enough cases in the news about exploitation. I mean, what do you suggest? Maybe Parul, you should perhaps take this question of how do you think we as consumers can prevent exploitation of what we do?
I think that's a very important point because usually when we think of fraud, like a lot of people talk about controls and how we will be stopping the fraud later on after
Right.
the transaction is coming in. But a lot of it is actually preventable. And that's where the consumer awareness comes in. So like right now we are seeing a lot more awareness happening about, the different kind of scams. You're constantly hearing about it in the media. And now that's why, at least people in the urban cities are aware of, that job scams are there. There's a scam around FedEx. But if you think about tier 2, tier 3 cities, they're still a bit far off. They still don't have as much access to information. So it's a big joint responsibility that, how we as financial institutions, how do we ensure that the consumers are aware?
Right.
And the prevention is actually the first step that we can take in terms of control.
Right, right. I mean, this again is a good pivot into the other auxiliary topic that we have, which is on the ethical use of the data, right? So the one part is about actually like preventing exploitation. The other part is how do we ensure that it's ethically used, right? And so, I mean, for a financial entity like ours, I mean, we want to use the data for financial purposes and all of that, right? And how, I guess the question here is that if we were to kind of look at participants in the ecosystem, which is the common people, how can we ensure that it's used fairly and also used in a way that it's inclusive, right? That's the other question. I mean, any thoughts on that, Parul?
Yeah, so I think ethical utilization, like we all talk about it, that AI has biases and we need to correct. But the important thing, especially when it comes to finance, is to understand about is the data. That the data that we are looking at, especially for these underprivileged communities, it doesn't exist. They've not been banking in the past. And you're trying to make decisions on giving them a loan or giving them credit based on no data at all. So if there is no data, what is it that the AI is going to learn? So how do we use the AI to actually create synthetic data probably, which can help in sorting out this problem? And then who is taking the accountability for these decisions? So on the counter side, if you look at false positives, everything that we are doing right now is also impacting the good people, right? If you're trying to stop a transaction which is happening, saying that it is a highly suspected transaction, it could be done by someone who's 80 years old and is really in dire needs. So how do you keep counterbalancing these needs? And who would be really responsible? Like the accountability, who's responsible if you're stopping them?
Got it.
So I think those two aspects we need to really look at more closely when we are looking at this.
Are there any emerging solutions from an RBI hat that you're wearing that you could enlighten us, perhaps?
Yes, of course. So from our side, our CEO was here this morning, Mr. Rajesh Bansal. He also spoke about this.
Right.
So there is one big problem that we are addressing right now, that of money mules.
Right.
So the way fraud is presently happening, if you're not able to detect it in real time, the money just flows through the system all at once and it's scattered and dispersed before you can even locate where it really went to. So the model, the MuleHunter.ai model that we have developed right now, that is exactly focused on this. How do you ensure that you, in real time, we are able to stop transactions, detect them, and at the same time ensure that all the good transactions which are happening, they can continue seamlessly.
So this is something that's going to be available commonly very soon for all of us?
It's already in the works. Yeah,
Okay.
already a few banks have partnered with us, and it's going to be very shortly. It's in production.
I'm sure we're going to sign up very soon as well.
Definitely, we look forward to that. Yeah.
The other piece, and ma'am, this is for you, perhaps, is the one part which you talked about is the how we can use it in an unbiased way. The other part is how can we ensure that biases don't creep in, right? Because we're going to use these data anyway. But how do we ensure there are no biases there?
It's really a function of how you enter the data, right? There could be legacy biases which creep in unexpectedly or unintentionally.
Right.
You could have a gender bias, you could have a caste bias, you could have a rural bias, as Parul said, because there's less data available. And so I think there will have to be some element of human intervention. Because if you just leave it to the machine and the model, you will get probably wrong results because the data sets are not complete. The data sets have gaps. Who will fill those gaps? And will there not be human intervention, at least in the beginning, until the data builds itself up correctly? So what goes in has to be very careful.
Right. I mean, that's obviously a simple solution, human intervention, but some of the scale that we operate in, sometimes it's not humanly possible. And I think there are technologies that are emerging, I suppose, and maybe Sabya, you can talk about it, that can help with this. Do you foresee anything that's coming?
I mean, I already spoke about the technology, so I would not repeat that. But what I would say is the human in the loop would continue for definite longer time.
Okay.
The reason is because while we are saying ethical use of AI, there are 3 or 4 things. Who takes the accountability? Ma'am said that. Human ensures that. The next is what happens to the edge cases which machine cannot understand but human can.
Yes.
There are edge cases which is, we call it the disadvantaged part of the society. You don't want to rule them out, right? Machine can. So you need again human. The third being, how do you explain the AI? Again, you may need human for that. And then, I mean, if you marry all these 3, I don't know whether strategically you should take human out or keep human. So I feel human should be kept to make it for a greater purpose. And while you're doing this, there are a couple of things I believe should be done. Many organizations have started doing that. You should form an ethics committee, which should have people from data science, compliance, legal. It's not just a product that you make and you start using it. There are pros and cons, and I think these 3 should be doing that.
Also, if there are too many rejections, then that should have some red alert within your system. And there should be a review as to whether there's a pattern of rejections for the same cause.
Got it.
And then again, you fix it. But I think just to automate it and leave it on its own Vilas Parul says leave a lot of people out of the system, which is exactly the opposite of what we want.
So we need to avoid demographic bias.
Right, right.
Pretty
I mean,
much. So
demographic bias, gender bias, I mean, there are plenty of biases that
Yeah,
are creeping
absolutely.
into it, yes.
And you need to also keep the red button mechanism. That means if it fails, the human should be able to process,
Set it
it
right,
shouldn't
yes.
fail completely.
Correct.
There should also be kind of adversary models where you stress test the models.
Right. Yes.
Very few have started doing it. We are feeling that everything is hunky-dory. That's not the case.
Correct.
There are many
But how
false
do you
positives.
deal with his question that if it is such big scale, how many humans will you employ?
No, I would not say today also it has been there, right? I mean, the ecosystem is already using human. It's only going to reduce. So we can definitely keep some part still engaged in the process.
You doubt it, ma'am? You don't think that's humanly possible?
You're asking
Yeah.
that human intervention will not
Would it be possible at the scale that we're talking about here? Because we're talking about 1 billion Indians.
But Ramesh,
Yeah.
it'll have to be if you want the right result. At least in the beginning,
Right.
till your machine gets smarter and you've weeded out the biases.
I guess the question is what is smarter, right? Because, for example, I'll take an example, right? If a system has been approving certain demographic for loans and it's excluding someone else, right? In historical sense, it might be true, but you might want to bring in, newer participants into the ecosystem, which the system might not approve because it's obviously trained. So the question is, human beings, yes, but
then
at
you have
what
to
scale?
retrain the system, no?
That's-
you have
that's
to
fair.
make the system get smarter.
Right,
and
right.
accept the new data
Right,
and
right.
not repel it.
Yeah. No, I agree. It is a problem that we as an industry have to solve. There's no easy solution in sight, but seems like we'll have to live for some time in this gray period where there's not enough, let's call it our own oversight perhaps, and you bring in humans and manage that for some time and then
Yeah, but
hopefully
as
machines can take
L&T
over.
Finance, what choice do you have? You want to pay 250 crores every time? No. Raju will come at you. So you have to have a system which allows for sufficient review.
Right.
And you have to have reg flags where if there's a pattern which is seemingly unnatural, you have to look at it in the beginning. It may go on for a couple of years or more.
Yeah.
Ultimately, it will be for your benefit.
Yes. No, I agree. I think you're spot on. It's just that I think as one of the early innovators and adopters of technology, you want to kind of, perhaps postpone it as much as possible in some ways, I feel, right? So I think this is great. I mean, perhaps a final question, Parul, on this topic, right? You talked about a certain innovations that's happening out there. What else can we look forward to from the innovation hub itself that can enlighten us on this space? Yeah.
Sure. So I think one important fact which we should all acknowledge is that AI is a very big term. It's not that AI can be accommodating automations also to this day. We're talking about machine learning models which have been there since decades now. And then we're also talking about this Gen AI, image analytics, unstructured data. So definitely I think in the coming time, that's what's getting everybody's attention, that with all these new technologies coming forth, how do we use AI better from a credit underwriting perspective? So that's one area definitely, that how do we make AI work for the unbanked, like street vendors, gig workers, what kind of models would work there where there is little data? The other part is how do we use it for better grievance redressal? And grievance redressal, again, chatbots have been around for ages, but nobody uses them. They're not multilingual. They're not addressing people's needs who can't write, who can't talk in English.
You've not just seen a demo that we had.
Sorry?
We have a pretty cool chatbot that's coming up, that's launched today. You haven't seen the demo yet.
I did actually. I saw the demo. So I'm just saying that this is, again, something that we as RBIH are also focused on.
Correct.
And it's not that what we are developing is, a counter to what the industry is doing.
Right.
What we want is to bring all the industry players together.
Right.
We are not in competition. We
Right.
want that whatever the industry is developing, we do not need to go back and continuously reinvent the wheel institution by institution. So if there's something available, we try to bridge that gap. We try to ensure that the entire ecosystem can benefit. And that's why even with the fraud solution I was talking about, the idea is that fraud is right now not operating in silos. It's a network out there. It's not one fraudster. So if you'll stop the fraud in one bank, they'll just go and open it up in another bank. So unless all the controls are there across the ecosystem, it's not going to work. So that's the whole focus, that, how do we use this Gen AI the way they are using it to target us? How do we use all this technology, all this knowledge, all this information from social media coming in, and how do we counter and make it work for the benefit of the people?
Got it. Point taken.
Ramesh, if I can add on this, on the fraud, I mean, we see it day in, day out. I mean, I'm very sure they are doing a similar conference somewhere else, like we are doing.
Yes.
So you can pretty much be ready. It can only be done away or minimized if all the industry participants collaborate and come together. It is not possible for a single institute, whether it's a financial institute or a technology player or a regulator, to solve it single-handedly. It is all of them coming together is when we can stop that conference happening somewhere. Otherwise,
but you can't have things like ethical hackers in your industry.
There are.
Yeah.
There are.
So then use them.
These are very different.
No, don't go to the bad guys, but the ethical hackers will at least work with you to say, okay, if somebody does this, this is how you put up some walls to prevent it, no?
I mean, there are ways and means, like Kedar just showed a while back to all of us. There are technological advancements that's happening to stop. But we still see every day something new. So, I mean, they are also smarter guys. So it is not that if we are doing to counter technology, they are also using the technology to counter.
Yeah, just one more point, that it's not that the fraud that we are seeing today is going to be static. We stop this type of fraud, they think of something else. So this conference which they might be having somewhere is about this, that what's the next way we can use, because there's just too many people aware about this type of fraud. So what's the next thing we can target?
No, I think definitely those are very valid points. So maybe the final question, I'll give this to you, Sabya, in some ways. In what are you most excited about in terms of what you're doing today that will kind of help shape some of this constant, let's say, cat chasing its tail or dog chasing its tail kind of situation that we are in?
I mean, I always say, I mean, as a data processor, and we deal with so much of data, the one thing that worries me or takes my sleep away is that how do we protect the data? And I think that's the biggest point we need to try to solve overall as an industry, and us definitely, because you keep hearing a data breach somewhere happening. So while you have multiple technologies, frameworks, firewalls that you have built around, but somebody is still hacking, breaching those. So one thing that worries me is always that, I mean, at scale, and huge scale that India has seen, I mean, while Parul was saying that we see on the payment side so many million transactions happening in an hour. Imagine at that scale, at real time, to stop a breach, to stop a fraud is not easy. So we can't compare with some other country because they are not real time, first of all. We are the only country who is doing a lot of real time. So I think that is something that worries me. And we should be aware how to protect.
What is the amount of transactions that happen every day in UPI and stuff like that? Millions, right? So that's your point. Billions. I mean, you can't compare it to any other country.
Yeah. On that note, I think I'm going to pause there because we've already gone over our time, and maybe open it up to the audience if you have one or two questions. Obviously, this is a fairly complex topic. There are no easy answers. I think we're all trying to work towards a solution, but would love to hear some questions. I think I see a hand up there. Yeah.
Just don't ask for solutions.
Hello. Yeah, thank you. I think
good
it's
one.
an amazing session. I would like to first of all congratulate all the panel members for wonderful brainstorming and some of the questions which doesn't have even the answers. So first, thank you and congratulations. I have a question for Dr. Parul because she is with Reserve Bank Innovation Hub. Recently, one of a very big Indian bank came up with a new version of their app, and it was complete revamp of the app, and it didn't work for me. The reason we tried, it didn't work, it keeps on giving error. So I communicated with the bank, and then the IT department came up that you have not given access for this app to your photographs and to your camera, which is the mandatory now. So I have to give access, otherwise my app won't work, I won't be able to do banking. Where is the regulatory authority saying, why would you need that? And they said, oh, if we need to do a new product KYC, okay, like gentleman said, Sabyasachi, data should be taken, used for the purpose, and purge it out. Why would an unlimited access required? Where is the regulatory authority asking this shouldn't be asked for? Or my app won't work, I won't be able to do my banking. And this is one of the very top bank in India. So my question is, what role regulatory plays in going into such deeper aspect of how the programming of the banking IT department? Because once this kind of things integrate with an AI, I have given up a complete control of my mobile with access to cameras, access to photographs. Why would they need my personal photographs? So this is my question. What is the role of regulatory in such things?
Yeah. So just to clarify, the RBIH is not a regulator. Like, we are the innovation hub. I'm just sharing this.
Sorry. I apologize.
Do not take my response to be exactly what the regulator might respond here, but what you are raising is a very valid point. And the regulator has not stipulated this, first of all. So it's not coming from the regulator that, yes, you need to allow access to your own personal data necessarily. It could be something which the bank might have said. And the regulator allows some flexibility to banks to mandate certain things if required. I don't think this is something which the regulator has said that the banks should require. Having said that, of course, that is a very valid concern. I think if that is, that you have faced this issue in the new app, you should definitely bring this to the notice of the regulator. Because this is not something that, if it's you who's facing this problem, this will be something that others would also face. Typically, what we've seen is that banks say that, okay, it's a one-time thing, that, okay, I will allow access to my camera or whatever for this particular session, and it usually ends just like Sabya was talking about. So this is something that, has just been brought to my attention, and, I think we'll definitely raise this.
Yeah. The point is, can you go to the next field when opening your bank account or doing what you can with your bank if you say no? Or there's no option of saying no?
There is no option.
So that's her point.
So you are going to get a lot of business very shortly. This is the crux of the matter, that a lot of people are going to come and say that
you don't have proper answers. What do you say?
They're going to come to you. They're going to say that my data is being forcefully asked from me.
Maybe we'll take one last question. There's a gentleman there, and then we'll have to stop. We're almost out of time here.
So first of all, thank you, panelists. This was a very interesting conversation. Zia ma'am, loved your wit in that in your conversations. Thank you for that. I actually, more than asking question, I had a comment to share. I am from a company named Novamind Tech. We provide, implementation of AI, ethical AI implementation through AI advisory. So we just wanted to add that there are standards, like you mentioned earlier, that there are rules that should be implemented. There are actually already certain rule sets that are available through the EU Ethical AI Act, as well as the ISO 42001 standards that could be implemented to ensure that your AI models are ethical and well structured. So just wanted to share a comment there, to be honest.
This is for you.
No, for the ma'am, it was just a comment that loved your wit.
I think, I have been told by my lawyers that the consultation paper and the statute to read is the Singapore one. They have really thought through a lot. There's a lot to learn from that. The only question is, it's 20 million people.
Yeah.
And we are 1.4.
Yeah. On that note, I know we don't have answers. Hopefully this has spurred some thought in anyone's mind, and hopefully the next time a survey is sent out, 100% of the people are worried indeed on the privacy. Sorry, Aparna, I don't think we have time. We've already been out of time, so we'll have to cancel there. All right? Thank you. Thank you, participants.
All right, ladies and gentlemen, keep that applause going for our brilliant panelists and Mr. Raithal over here. I would request Ms. Apurva Rathore, Company Secretary and Chief Sustainable Officer, L&T Finance, to kindly join us on the stage to felicitate our panel. Come on, ladies and gentlemen, give Ms. Rathore a big round of applause as she walks on stage. Thank you so much, ladies and gentlemen. You can now take your seats. And now, ladies and gentlemen, we have arrived at one of the most anticipated discussions of the evening. The business case for AI, maximizing returns through customer engagement, cost optimization, and automation. We are privileged to welcome a stellar lineup of industry leaders. Coming up first on stage is Mr. Anup Bagchi, Managing Director and CEO of ICICI Prudential Life Insurance, discussing AI for customer engagement and operational excellence. You need to keep that applause going because there are some big names coming up. Now I welcome on stage Mr. Vijay Shekhar Sharma, founder and CEO of Paytm, a pioneer in digital payments. Following Mr. Sharma is Mr. Kushal Roy, Managing Director and CEO of Geo Finance, offering perspectives on AI-driven automation. Followed by Mr. Sudeepta Roy, Managing Director and CEO of L&T Finance, sharing expertise in cost optimization. And ladies and gentlemen, moderating this session and this discussion is Ms. Latha Venkatesh, Consulting Editor at CNBC TV 18, who will steer the conversation. Let's give Ms. Latha a big round of applause, everybody. Ms. Venkatesh, over to you.
Madam MC, I think you should call for a big round of applause for the audience. I mean, it's almost 7. And, I mean, you're at it. I'll give you 2 good reasons why you have to stay till the end of this panel. One reason is you try to get out of BKC at this hour. You are anyway going to spend 45 minutes on the road. Might as well spend it enriching ourselves. And the second good reason is that you will be enriched at the end of this panel, because I think we have an extremely experienced and stellar panel over here. Anup has run a bank as well, so it's a 2-in-1. Vijay Shekhar Sharma has actually brought digital to Indian finance in such a big fashion. Can we even live without Paytm? Have any of us been able to manage taxi rides or anything without Paytm? So, you know, he's brought so much, and the big challenger on the scene is GeoFinance, a combination of a telecom giant and a finance giant. So that's, makes him the most appropriate person. And of course, Sudipto has put together such a wonderful function, so many learnings, and I'm sure all this is already integrated into L&T Finance. So, Sudipto, first of all, thank you very much. I was here for a better part, and I can tell you it's been a very, very fruitful day of learning. This session kind of tries to put it together as a business case. Ultimately, you can get a lot of intelligence, a lot of learnings from all the sessions, but you have to make a business case for it, right? Cost and benefit have to balance. AI is a huge giant requiring a lot of money. So at every point in time, these gentlemen here have to make the business case. Is it worth the cost, both in terms of effort, in terms of the legal ecosystem that you have to negotiate, and of course in terms of the returns. So straight away, why don't you all make that case? Where have you used AI fruitfully? Give me something very concrete, because not all of us are technically literate. Financially, we claim we are somewhat literate, but I have my doubts with respect to myself. So in simple terms, Anup, if you can start by saying, give me concrete example where in insurance and banking, you have used it.
So in insurance, for example, we have two large sort of problem statements. One is the whole issue about risk, which is the risk of dying early or risk of living long. These are the two mortality risks. And we have been able to develop good models around it to be able to assess that. And particularly in insurance, there are, again, when you break it up into two things, there is an intent and there is an incidence. Intent is all about fraud, is all about intent. And incidence is the general mortality that if you live, some people will die, some people will live longer, and all of it. So on the intent bit, where there is fraud, we have been able to bring it, use AI models very, very effectively, and it is showing up in the claims, early claims that comes in within first year. The early claims is defined within 3 years, but within the first year, 80% of the claims come, which largely is about intent and fraud. So that has come down quite sharply for us. The second one is about persistency, which is where it's getting talked about. And if you look at our numbers, outcome numbers, because outcome is what matters, baki English hai sab. So on that, if you see, there is a consistent improvement, and we are able to work on the models of persistency, and we have been able to bring up the persistency. The third, which is very interesting, is propensity to complain. So there are a set of customers who have high propensity to complain, slash a little bit more agitated set of customers. We have been able to bring that also. So which are the customers which are propensity to complain, so that you escalate it initially upfront so that we are able to handle them. Very, very concrete examples with clear-cut outcome. So you wanted 3 examples, I gave you 3 examples.
Most useful, but the last one is intriguing. Do you see the persons who have a proclivity to complain as a problem area, or do you see the problem in yourself and correct yourself?
No, it is not a problem area. It is the issue that, see, there are certain people who have propensity to complain. What you need to do, ultimately, you have to escalate it faster. Okay, so that you resolve their issues, number one. Number two, we also take it as an input that you proactively. See, every incoming call, every complaint is a defect in the system. That's how one has to see. It's a defect in the system. Either you have not been able to explain, so they're coming back. Either there is a service issue, so they are able to coming back. If you see it as a defect, it is a great feedback loop for us to come. But having said that, if an incident has happened, it is better to escalate quickly and resolve it.
Well, that's clearly, profitable both for the bank and for the customer. Vijay Shekhar, a similar question to you. I guess you would be using it much more than others, since you have, you are a digital native, so to speak. So give us some examples.
The first and foremost, I'll include the customer care, which is a very simple logic. Every human task can be replaced by machine. This is the philosophy that we're carrying with. And I'm sorry to say, I've not been able to find out one task that cannot be replaced. So customer care was the lowest hanging fruit. We've reduced to 1/3 of people with 4 times more traffic and nearly, surprisingly, customer satisfaction ratios doubling. So it was totally counterintuitive. But in financial system where there is a complexity of agent to understand, the machine agent understands better than replies. You can talk to it in your local language, slang it out, multilingual, da 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 da. I mean, it's actually it is shocking for somebody when I give a demo that let's keep talking to it and swinging the discussions, and the guy continuously captures you and takes you through. So that was very amazing. This is a very practical case, and in my opinion, the customer care agent, call center agents have a finite life left. And when I say finite life, there will be a reason for them to exist, just like newspapers are, but that necessarily does not mean that you need news by newspaper, that kind of slang. So that's very, very clear. Call center agents will be dramatically reduced as a requirement in the industry. What we are experiencing, everybody will inevitably get it. Second is a fraud. I mean, I'm very proud of our fraud management system. We have, in a financial industry, 1 paisa is called, on 100 rupees, called 1 BIP. Our fraud to sales, meaning when you do $100 of sales, how much of fraud is reported or analyzed or anything else, is less than 1 BIP, 0.32 BIP. So we're talking about 1/3 of a BIP level of fraud level on a scale which is a couple of $100 billion of payment processing to the merchants.
And what is the legacy ratio?
This is better than what Visa is, that much I know. So Visa and Masters, Visa was doing a research with us and they were like, why the heck you get so much of data? And you just heard somebody said that I needed devices knowledge, the previous panel. So we literally capture, I do agree that it is very awkward for customer to believe that why are you taking so much of data? But with so much of data, you can capture the fraud in a very dramatic way. I'm sure many of these events...
You mean you are asking access to the camera? Is that...
Yeah, no, there was a question that there was an app that was not working because there was a photo album access they were needing, camera access is needing. While I'm not going to say that that was needed or not in the app context, but I'm trying to say with the app capturing the device context, lot fraud can be taken care of. Very simple, I mean, considering you want a sample. Let's say I'm a user sitting in Bombay right now. Let's say if Rampur से कोई phone को capture करता है और एक different operating system पे करता है, तो machine will understand very easily कि ये कैसे हो सकता है कि आप iPhone 16 यूज़ कर रहे थे और अभी जाके आप Android random और रामपुर से यूज़ कर रहे होगे पिछले 2 घंटे में, तो वो बहुत ही आराम से block कर देगा. ऐसे बहुत suave cut to we are able to capture like bips, fraction of bips level. So that is I think fraud is a problem of consumer gullibility, but consumer gullibility is also not a problem for our machine. We took it to next level that even if customer says, yeah, you give the OTP, so what? OTP is not the world secret. I mean, I understand as a machine that this is not a transaction. So we are able to block the OTP fraud also. Like there is no, you can share the OTP, but we'll not let the transaction happen. I'm just saying it. Machines can do that easily because you can logically understand. If as a human you can say, why did you process this transaction? You understood the OTP was being shared. So the short answer is, yeah, I understand OTP was being shared, so we'll not reject it. But I'm not going to technology structure it, but fraud is a very legit case, and fraud fight will go next level. Like we just saw a demo where the live face, live voice, all sorts of things will come. So I predict in this room another biometric, which will be palm, because thumb and iris are your ID biometrics. Right now we are working on payments with palm, all because we believe that these are your PII, personal identified information, and iris, etc. So we'll not touch them, and few more biometrics. Voice, visual, etc. can be faked. Can't this be fake? Obviously it will be. So it is going through next level of resolutions and so on. So fraud is second, which is very legit. I'm very proud to say we operate Japan's largest payment platform, and our fraud management for FSA in Japan is like a benchmark. I just want to say that. So now the third use case, which is we just heard, is underwriting. Underwriting is a credit collection underwriting. And we've been able to disperse tens of billions of loans for our partners by helping them underwrite much better collectability, meaning can you collect it or not based on a lot of insights and information. So,
Okay.
use case.
Okay, thanks for that. That was extremely informative. And fraud, anyway, both of you have referred to that as something that has come down. But anyway, what is the industry standard if it is less than 1 bip for $100? Is there any industry?
Yeah, 2 or 3 bips, by the way.
Okay, so that's much better. Yes, go ahead, Kushal. I would expect that Geofinance is, as the aggressor, has done a lot of new cases of use of technology.
Well, yes, we are certainly working on it. The obvious one, as Anup and VSS said, is the customer service area. So we have already launched a couple of bots, a voice bot and a chat bot. It's called Dia, incidentally, in line with our logo, the Geo logo, which does some of the things that we discussed earlier, all kinds of customer queries on statement of accounts, interest rates, loan statements, and the like for customers. The interesting part is that if there's any query which is not answered, the bot has the ability to allocate a reference number to the customer so that he or she can come back and code that.
To a human
reference. Yes.
Okay, yes.
The most exciting part where we're really employing AI is the classic question of Philip Kotler, right? Right product at the right time. So in a world where loans are rapidly getting commoditized, and unlike the situation where when we grew up or when our parents grew up, the number of service providers or issuers of loans is huge. And the customer has many, many options. I think the key to success is to offer the loan at the time, real time, when the customer really needs it. It's also called hyper-personalization. So that's what we're really working on, and the work is progressing very well.
Sorry, what is it called?
Hyper-personalization. So that's what we are really aiming for, and we are progressing quite well.
So basically able to sell the right product to the right person, and the rate of success is very high.
At the right time, that's key.
Okay, all right, fair enough, fair enough. Please go ahead. Sudipto, any one or more cases?
Yeah, actually, we have multiple cases because I believe that we are one of the very first organizations which created a position called Chief AI and Data Officer. Normally, a Chief Data Officer or Chief Data Scientist, we said we want to create Chief AI and Data Officer. And what we have told our teams is that any problem, first look at whether there is an applicability of AI to this problem. It can be a small problem, it can be a difficult problem. I'll talk about a very easy problem. On face of it sounds very difficult, but an easy solution. For example, we are one of the largest microfinance financiers in the country. Now, these women come for group meetings. How do you record attendance, foolproof? Right? Now, the fact is that the sales wala, he can just tick, 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 tick. Even if you give him a mobile point radio button, he will put the radio button. 6 women have not come, 2 women have not come among 6, but we will get 6. Now, what we said was it's simple. Take a photograph. We took the photograph, the field level officer takes a photograph. We upload the photograph. It goes back to their KYCs, picks up their KYC photographs of the women, comes and matches with the photograph and marks auto attendance. Very simple application of image processing based AI. We have just launched a Gen AI based tool for a home loan chatbot, which we call Kai, Knowledgeable AI. We demoed it earlier. Another simple use case for which we have filed the first patent, which we call the Human Lifestyle Index. Again, for microloan against property customers, when we go and say, for example, microloan means you lend against a property in small ticket sizes. Now, how do you know the condition of the property? So again, what we tell our sales guys to go and take a photograph, one outside, one inside. Then what the system does is that, and we use Google's Gemini algorithm to do it, it analyzes the photograph, tells it whether it's a kacha house, pakka house, exposed wiring, non-exposed wiring, whether there's a TV inside the house, refrigerator inside the house, fan inside the house, whether the house has exposed brickwork, non-exposed brickwork. It tells us a complete matrices of analysis of the house, computes a standard of living and a standard of dwelling index, and it goes into the business rules engine. So, and the major use of AI we have done is Cyclops, which is our 3-dimensional risk engine, which AI, we believe, analyzes alternate data much better than anything else. Bureau data is a lot of static, models can analyze it. Alternate data, you really require computing power to analyze. So Cyclops, which was built in 4 months flat by our teams, uses AI at its core. So these are the ways, we use AI. But I will have to tell you one anecdote. Personally, in my personal life, I also use AI quite a bit, right? For example, I'll tell you a simple use case and how powerful AI has become. My daughter sends, I was getting down from a plane. I was coming from Delhi. My daughter sends me a problem, maths problem, 3 maths problem on my WhatsApp, saying that, Papa, iska answer kya hai? So while I was on the jet bridge, I took a photograph of that, put it in ChatGPT 4.0. I put the photograph on ChatGPT 4.0. Before I was out of the jet bridge, the entire solution was there. I clicked it and sent it to my daughter. My daughter is thinking that dad is a genius, but
Thank you very much for that tip.
but frankly, so see, this is what it does, right? This is how powerful the technology is. And that's why, the germ of the idea is to do this to ignite a million thoughts.
Okay. Well, this is most impressive. Now let me come to the doubts that I have about the problems that you may encounter. First, of course, is what the previous panel discussed. Privacy. To what extent, Anup, you are able to erase data leakage? Do you come across, and now the DPDP Act is not yet, it's not yet become that applicable. We are waiting for the date on which it will be signed off. Do you think that will mean a lot of cost and a lot of trouble? Privacy, how do you tackle this problem?
No, I think first let us think of this whole issue. There are 2 large applications. One relating to compute, where you are computing things like maths problem, etc. They are computation problems. And the second one are judgmental problems, cognitive problems. If you see, machines are very, 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 very good at computation. And they are not so good at cognitive problems. Human mind is much better in the
AI
computing.
is supposed to be, isn't it?
So now the moment it starts to transcends into the cognitive thing, then it starts to make patterns, it starts to make sense of the sequencing.
Make judgments.
And it starts to make judgment, and that is where hallucination, all these issues, basically data training and all of it, comes under the cognition part. And thus, the part of the data in it, if it is a closed loop data which is internal, which is small language models, generally the accuracy will be very good. So the other thing I would want to just put the framework is, what is the inference that you want, multiplied by what is the degree of confidence on the inference. So quality of inference, degree of confidence on the inference. And if you put that, then you will see that if it is a small language problem like bots, for example, where it is working on a particular set of data, you will see that the accuracy levels are very good. You don't have to go outside, there is no issue of privacy, etc. The moment you start to get into the cognitive area where lots of judgments and lots of data points and which is on the generative AI bit, more on generative AI bit, you will start to see that you require data from all over the place. And that is where sometimes you cross the LOC. That is where maximum amount of crossing of LOCs are happening. There you have to really ring-fence the data. If you don't ring-fence the data, the tendency is to crawl all over and then get into the risk of your internal data also getting exposed to external world. If you don't mask the data, that is where it is very, very important that when you build models and when you are training the thing on your data set, you have to make sure that the model doesn't crawl over and then you ring-fence it. And but it is happening. I don't think it is such a big issue at this point of time. I think the issues are quite basic on the data privacy as to what kind of data you are taking, how are you using, what are you training. And now the DPDP Act will come, so that will put very onerous conditions on all of us. And in a way it is good because ultimately who owns the data is a real question. And I think it is our data we own. And then if somebody shares, they have to just
You
take
don't
it.
own, right? It is the
We
consumer who
no, as a
owns,
person,
and you are
I
the
own my
fiduciary.
data. No, as a person, I own my data.
Okay.
If I give my data to you, then what part of my data you own, or you can use it to my benefit, or you take out the PIA and you can use it, certain data fields for larger inferences and making models is a question that is evolving already. It will evolve further.
But it is a journey, but I think it's not an unsolvable problem. It's not an unsolvable problem. It is beyond the realms of AI. Actually, this data privacy, it has got linked with AI, but it is all over the place. I mean, you can leak data.
No, certainly, but it just becomes a little more.
It is because of the nature of this beast, because it can crawl all over, and if you are not careful and if you have not built walls around it, because it requires lots of data, particularly on the generative AI bit. If you are putting cognition there, it just requires lots of data for pattern recognition, and it can go all over the place to get your data. And so if you are not careful, it will cross over and lead to loss of privacy. That is really the crux of the matter.
Yeah. No, I very much fear, because as a society, we have not put barriers or even educated our customers. I mean, it started off during COVID, but it continues. There were so many restaurants who asked you to give your cell phone number to enter. I mean, I would panic. Should you not go into the restaurant itself? You're giving it to some lay person. So many buildings.
That has nothing to do with AI, by the
way. No. What I'm
mean,
saying is, all these can be areas where it can leak. So, literacy is another question. Anyway, let me first stick to this DPDP Act. Vijay Shekhar, what about a company like yours? Do you fear that at that time the cost benefit will go down when DPDP Act comes in? Will you still be able to use all the digital footprint you gather and sell appropriate products, or will costs increase for the company?
First of all, I just want to say this in this room. We shouldn't bother about as much of privacy issue as much the job issue.
My job issue was my third question.
I mean it in this room. The machines have got trained. Let me say this. You put any rules and regulation now, thank you, but everything is done. To a level that it is so sophisticated that a PhD student's answers are available. Literally in 1 year time period, 2026 is the shortest time period that we are trying to gauge when a compounding knowledge will be in the machine. Now, what training are we talking? And what kind of data privacy are we talking in EU or India, the US data? So internet generated enough data for us to get trained and so on. So first of all, this data privacy intersection AI is not the problem. Usage of DPDT, etc. data for a transaction is a separate topic, that I face scanned, my attendance came, is this system purging? There is nothing AI about it as a data usage. The machine which is predicting this is trained. It's like chip has got made. Now you don't need, now the usage is a topic. So DPDP will be useful for the usage context, but the machine is ready. So I'm trying to say that the debate on data and privacy is overrated in the AI context grossly. It's not even a problem or issue. Why? Because as a teacher, if you're teaching a student in a classroom, what have those guys learned? Is this whose proprietary data it is? That kind of thing has happened now. Actually, this has happened. The compounding knowledge of the AI machines is bigger than compounding knowledge in this room already. So I'm sorry to say this, that you block the data access, there also nothing, world is falling apart of the AI. It is, the rocket is out, it has got launched. So that's number one point. And number 2 point.
You're making me really scared.
No, the problem is that once the computer came, a lot of bankers thought my job will go. You remember the ATM on job? The world didn't fall apart like that. Oh, the aircraft have come, the lift theory, I'm sure you've learned, autonomous cars, all these things are overrated. You have to understand the society has to move on with this tsunami that has got inherited inside. You can't say, I will stop usage of computers. You will not Europe. You will rather ride the wave. Why were you talking about, I mean, I'm not saying that data privacy is an obligation for an individual. As far as the AI context, data privacy is concerned, that wave are two different routes.
No, that may be, but as an organization, do you think that privacy will increase your costs?
Privacy is an inherent individual obligation which should be protected.
It is an institutional obligation. It is an individual right.
All compliances increase the cost. Every compliance increases the cost of the service to a customer by a few points, and that is the global rule. You can put as many rules, regulations. That is why DOGE, you know what I'm trying to say? So that's not a question whether it will increase the cost or not. Will it increase the cost to a dramatic high level? No. Will it increase the compliance to? Yes. You know, the EU had this data privacy rule under which it fined the gatekeepers, including Meta, including, I think Google also got fined. Does it mean the EU services are broken? To an extent, compliance cost, the system has got used to, over the period, you will say, I accept, I accept, I accept, I accept, buzz off, I accept all. तो फिर वो consent दिखा देंगे, सर ये expect consent दिया था. तो वो ऐसा कुछ भी नहीं है दुनिया में जो कि, मतलब, my point is, these are controls that are needed, but it will increase the cost of compliance, which is good. It should be there. I'm not trying to even say that there will be dramatic, but AI context, we are done. This is not a more discussion. Okay. There was a question that we don't have answer. The panel was not ready to accept the answer. There was an answer in the room. The answer was that the answer is there is no bias question. How does your kid get studied? The Californian kid and New York kid.
There is no bias, sorry?
No. Classroom is a bias room. Why are we not talking about classroom bias right now? The teaching in a different class of classes is a bias. So machine is got trained. Machine is a trained human mind with a capability that it can bounce back the answer. If you train it in a particular model, it will be like that. What kind of trick question is that? What kind of bias are we talking? Are you not biased in a particular way? Am I not biased in a particular way? So it is a machine. It's got bias. You can literally call the machine to say, I want you to answer like Mr. dash dash dash. So it'll start sounding like that. You've seen that. So all these questions of data, bias,
No, bias is another question altogether. We will come to bias in a minute.
I'm trying to say these are the questions which are not the questions. I'm rather saying, what kind of question are we talking?
No, Vijay.
You have to
Vijay,
we have to change the orbit of question. We have to change the orbit of the question. And I mean it, guys. I genuinely mean it. If programming can be done by a machine, I'm not kidding this. Every one of us thought different tiers of things, okay?
I'm not quite convinced that bias is not a question. My question was not on bias.
Left media,
My
right
question was
media
on
bias.
something
यार
else.
आपसे तो नहीं पूछेंगे ना. मतलब आप तो मीडिया वाले हो. You know what I'm trying to say.
I think
Come on, a TV channel is a bias. What kind of machine will not be biased?
But
जिससे सीखेगा वैसे ही बोलेगा ना वो.
There is no question that the TV channels don't have a bias. They
Very
do.
good.
That is not the point. But the day you are hit by a court case on bias.
I'm just going to be telling you. A neutral person, there is nothing called neutral. pH 7 कुछ होता नहीं है. You know what I'm saying. There is alkaline, there is a base, there is acid. तो ये question ही inherently मेरी नज़र में wrong है. ये क्या मतलब है bias होता है? हवा आती है, आएगी, कभी ज़्यादा आएगी, कभी कम आएगी, कभी इधर आएगी, उधर आएगी. इसका भी system ऐसा जवाब देगा, कभी ऐसा देगा. Hallucination is a bigger problem. AI has a hallucination problem, not a bias problem.
मेरा question तो था about privacy. ये bias बीच में कहाँ से आ गया?
No, but it's a good
My
segue.
question was,
This is a classic problem a TV anchor faces.
No. Privacy.
You ask a question, the panelist gives himself another question and answers that question. Excellent, Vijay.
So, with your permission.
Standard television panelist.
Machines, I tell you, machines, uncontrolled machines. This is the future.
You have won the day, like any
But
TV
maybe
panelist. Okay.
Kushal can.
No,
Lata, with your
my
permission.
point is that if the DPDP Act comes, is there a problem in terms of the ability to service, or does it make technology much more expensive?
Much more नहीं होएगा. थोड़ा सा compliance cost.
Okay, your take?
Yeah, Lata, the point is that as society evolves, customer expectations go up. And some things become hygiene. I would say that data privacy has today become hygiene, and it's part of customer expectation. It's built into the proposition that the customer expects. So it has to be built into your offering if you want to compete. And therefore, cost cannot be looked at on a standalone basis. Cost will lead to revenue. And as long as you can gain adequate market share by meeting the customer expectation, it is worth it. So the summary of the answer is, yes, there will be some increase in cost, but I would like to believe that it's very much worth it. And in a scenario where customer expects data privacy, if you can provide that, and also help in educating customers about safeguarding their data, I think your proposition becomes more valuable. And what do I mean by educating customers? And just the example that you gave a while back, right? I mean, most people would hesitate to give their phone numbers at a restaurant, but would happily put their date of birth on Facebook so that their 2,500 friends can wish them happy birthday, right? Is it a good idea? Probably not. So those are things that need to be driven, and customers can be educated, and customers would see the value in that overall proposition.
No, for me, yeah, rather more than giving your personal data on any of the social media platforms, what I dread most is this I accept. Sometimes you're in such a hurry to get something, you keep on clicking I accept, and it's racing through my head. My God, I'm writing I accept.
हमें ये
God
question
knows
मैम से
what I
पूछना
have
चाहिए.
accepted.
मैम, how many I accept pop-up आप reject करते हो? क्योंकि as a legal expert, are you bothered about opening a I accept panel and not say no to it? Because I think practically, very
I want
rare.
the law against this
I'm
I
a
accept.
customer here.
So,
I will request the RBI Innovation Hub to work on reducing this I accept boxes that prop up. It really scares me. But anyway, you know, Sudipto, since you raised that issue, let me ask another question. You said that you're able to do a lot of better due diligence because, you know, the AI
lot of
tool
better,
is
sorry?
due diligence
Better due diligence.
while giving a loan. Now, the strange part is that just in the last 2 quarters, we have had a record rise in unsecured loan defaults. I mean, if AI has come of age, why is it that unsecured loans, I can understand MFI, probably at that level, you are still, there is more human handling. But I don't want to name names. I know of one bank which had 17% higher unsecured loans and another one which had 30% higher unsecured loans. Their overall NPA was not high, but within that, the unsecured portion showed a higher NPA, which means AI has not arrived of age in terms of identifying, in terms
Lata,
of due diligence.
Yeah, let me take that. I think no Indian lender is using AI to underwrite in a meaningful way. First, I think reality. The second thing is that the current underwriting practices, and yesterday we had our investor day where I went on stage and told that current underwriting is dead. The current underwriting practices is go and take the income of a customer, static underwriting. This I call static underwriting. Go to the bureau, look at its behavior for the last 6 to 8 months, 9 months, 12 months, whatever you want to, and then underwrite. But that is all post-facto data. The customer is exhibiting continuous behavior, which again comes to that data question again. The data is available. Customers, you see, this Diwali month we have up close to 800 million UPI transactions, right? Look at the amount of the customer information and the customer data is flowing through the system. Similarly, there are lots of, for example, again, you might talk about whether, you know, privacy, etc. But if you use a Zomato app or a Swiggy app, Zomato और Swiggy को पता है कि आप क्या खाते हो, क्या order करते हो, कहाँ रहते हो, right? So the fact is that to get the digital dividend, you have to give a bit of your privacy. Otherwise, your digital dividend won't come. Now, if you are very close digitally, you will not be able to use those apps. Gen Z has no problem with any data privacy issues. It is only in the mind of Gen X and Gen Yers. आप नीचे जाओगे, किसी को कोई problem नहीं है. उसको सब कुछ खोल के दे देता है, क्योंकि because they want the experience. They don't want anything else. They want the experience. उसके लिए थोड़ा data देना है तो they are willing to compromise with it. So coming to the fact that no sort of bank or financial institution is using AI in a meaningful way still now. But this will change. This will change in the next 24 to 36 months. This will change. Because one of the things that we realized, and I realized it over the last 3 years, that the power of alternate data, which we call traditional, the new age data vis-a-vis the traditional data or the bureau data. And our chief AI and data officer coined a term called RODI, return on data investment. We figured out that RODI on alternate data is order of magnitude different in finding out defaults than your traditional underwriting algorithms, right? And so that is why we built this engine which now uses AI to consume this alternate data and then come up with meaningful insights. So the reason personal loans delinquencies are higher is because we have been following the traditional method. We have been not following AI, or we have not been using AI as a supplement to traditional methods. I'm not saying traditional methods are bad. Traditional methods is the base of the pizza. The topping is the new methods powered by AI.
You know, I've heard a lot of this on television and on ground events about this great alternative data available digital footprint. But then the reality is unsecured loans went up, defaults went up. If it was so damn good, and we have the best over here, then explain to me why did unsecured loans
No
defaults
no
go
one
up?
used it, Lata. No one used it. Just scratching the surface on it.
Without using anything, you are singing praise of something.
Yeah.
Sorry, I'll just come in there.
So, no, see the
I'm
fact...
not convinced. When
No
I
one-
saw
no,
when I see the
I'm-
default
okay,
data,
let me
I'm not convinced
Let
that
me
something
give you,
great,
let me give
great
you a
is coming out.
statistic. Let me give you a statistic which we have put together in our investor presentation yesterday. We operationalized our three-dimensional AI-based underwriting engine in the month of July, beta. Right now, 55% of our two-wheeler loans go through it. And we are using alternate data almost from 8 sources. Our through-the-door net bounce is 60% lower than our traditional algorithms. So it works.
No, I'm very happy if it works, but credit card companies in the latest results season announced higher defaults. So I am not convinced till I see that falling in the Q4, in the Q2 results.
नहीं
I'm not
मैम
making it up.
आपको
Numbers are there.
आपको next 24 से 36 महीने में दिखेगा, immediately दिखेगा नहीं.
Sorry?
Because आपको you will see it in the next 24 to 36 months, the impact of all this, because this is a process. It is not a switch you turn on. It's a portfolio building exercise.
No, I will be very delighted if that happens.
I'll just come back to your point.
I'm an investor more than anything else.
Lata, I'll
I
just
would
come
be
back to the
delighted.
point.
Yeah.
I'll come back to the previous point. So there are two things, as I said.
No, can you, I mean, are you convinced that, the amount of data plumbing that's now available can reduce defaults, can improve diligence to that level? I mean, it's still a dream, right? It is something, as you say, after 24 months.
No, two
right
things.
now, we have
I'll
not
just
reached
respond to that only. There are two parts to it. One is a pure compute part. One is a judgment part. When there is judgment part, no amount of data will exactly make it n equal to 1.
Okay.
That all defaults will go away. We'll be able to pick up, because finally it is a judgment issue. And whenever there is a judgment issue, there will be an element of error and fragility in the data because it is forward-looking. If it is compute, you can be n equal to 1. The first is that I don't think we should all assume that it will go away. What will happen is creation of alpha over people who are using it and people who are not using it. And so you will see that in general, it's not that defaults will go away, but people who are using it, they will have a better experience than people not using it. And what I have seen over last many decades, people who use this over a period of time, every year if you have 1.5–2% benefit over 20 years, it translates into 60–70% benefit. That is what is going to happen. And if the things are faster, this gap may widen to 2x, 3x. So you will see, and you have seen, even without AI, without this, there are banks who run at a very low delinquency for similar types of businesses than other banks who have not.
Yes.
Without AI. Now with AI, with more compute power, with more pattern recognition, you will make it better. So overall it will come down, is my sense. And within that, the user and non-user, have and have-nots will also develop. And that is a more practical way of thinking about it, a more pragmatic way of thinking about it. As far as compute is concerned, you will have n equal to 1. Computation, it will be fast. Actual computations will be faster. You can online fraud monitoring, online stuff, you can do it. But can you eliminate? You can't eliminate, but it will be much faster because if you compute fast, generally you can bring down the intensity and the incidences. No, that is a way to think about it, not as an average, but as a distribution. I think things will become better.
I am almost a devotee of technology to that extent. I am absolutely enthralled by Digiyatra. I mean, look at the amount of time we had when that guy was looking at your bloody Aadhaar card, looking at your face, looking at your ticket, and literally spending 3, 4, 5 minutes per passenger. Now you just walk through. So, I mean, I'm absolutely enthralled by the kind of advantages and smooth experience it offers for the customer. But now I'm talking about another angle altogether. In terms of due diligence, we don't seem to have arrived just yet. It does look like,
it is much, 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 much better. Digiyatra is also due diligence.
Exactly.
That's
why I brought it into the...
So Digiyatra is due diligence. Your upload of documents and using OCR to do it is due diligence. Certainly it is faster. To give concrete example, Life insurance policies, normally you will never assume that on same-day issuances will happen. 60% same-day issuance is happening. You think without diligence, without KYC, one could have done 60%. It's not possible. It was not possible 15 years back. It is possible now because all the elements of KYC are digitized. And if you organize it well, you can do it.
No, I accept speed, I accept customer satisfaction, efficiency. All these are gains that all
Only
of us
judgment you are not
experience.
accepting.
I'm only worried whether due diligence, have you all, an
Judgment
NPA
or due
creation,
diligence?
have you all reached that stage? Or have we as a community?
Due diligence are of two kinds. One is KYC due diligence, which is a compute issue, largely. And credit, which is a forward-looking judgment issue.
Okay.
On the compute issue, I think we are there. That is why you have all
Point
kinds
taken.
of online KYC happening. On the judgment issue, obviously it's a journey. It is becoming better, certainly. Pre-Sybil, post-Sybil. Usage of data, you see how it has happened. Okay, so judgment, so I would say in my mind, we should think what are compute areas, what are cognitive areas. Compute areas have moved very, very fast. Cognitive areas, it has to build. Also, the variables are also non-stationary, by the way. They are not stationary variables.
No,
So
they are
in a
dynamic.
non-stationary variables, creating judgment models is also not that easy, but it is improving.
Kushal, you wanted to add something on improvement of diligence?
Yeah, so I was just
Of
talking
asset
about the
quality
point.
in general?
I was just talking about the point that Sudipta was responding to. Your earlier question on unsecured loans. See, as Anup said, AI can generate an alpha, right? It can make your horse run faster. But at no point will your horse turn into a cheetah because you're employing AI. What do I mean by that? See, the unsecured loans industry is about 35 years old, and some of us here have spent the last 30 years in this industry, right? Some basics don't change. If you lend low-ticket loans, for example, loans of, say, 50,000 rupees, and on top of that, you lend at high interest rates, 20% plus, your defaults will happen. Very simple. It's basic underwriting, right? Who takes a low-ticket loan? Somebody who doesn't have cash.
Who's desperate.
Why would anybody borrow at 20% plus? Because nobody else is giving it to him at normal prime rates, 14, 15, 12, 13, 14%, right? So you're lending to a borrower who's strapped for cash and who's inherently risky. AI won't turn that around.
Definitionally default.
At best, you can have a slightly better selection of good-bad odds ratio, which is the alpha that Anup is talking about. But if your base is wrong, you won't get away with it. And that has remained true over the last 30 years. That is what is happening today in some pockets of the unsecured loans industry.
Yeah, I guess some of it would be explained because there the business case itself is that the few who pay or the few EMIs I get, I'm already recovering my principal. Maybe that's the logic on which it works. Vijay, you want to add to the fact that we will see improved asset quality, or are you already seeing improved asset quality?
It's a given theory. I mean, all of us are convinced, and something is already happening in L&T Finance. There is no doubt about it that the companies will lead with a mission that, let's say, this is an ulterior statement, this is not what will happen, that there will CRO, Chief Risk Officer, could be a machine. I'm not saying that it is an inevitability, but I'm trying to say that this is the direction it is headed for. Obviously, it's like an autopilot. You will have a pilot still. You will still have a CRO as a human, but the machine will be able to do significant better job, and beyond the human intentions of making a decision, the machine will do a pretty decent job. It is how the rest of the work works. I mean, the aircrafts land because machines are continuously working.
It's a bit scary, you know, there
By
is
the
that
way,
other conference which people
Vijay,
are having to hack
this is
it.
the second time someone said this on stage today. In morning when Kunal made his 10 predictions for post-AI world, one of his slides was your CRO will be a machine.
Because compute and pattern recognition, etc., is so much so better.
Yeah, compounding knowledge of
so much so better. Yeah,
will be a better knowledge than an individual.
And it doesn't get tired. It can do 24/7.
Okay, so now let us come to the point that you raised, Vijay, from the start, that we are going to see much fewer people. Is it going to become a human issue that financial sector as a whole will employ fewer people?
Any sector, including financial sector, will employ fraction of people that are there. I account for 2/3 people won't be required, like less than 1/3.
Okay, that's a little scary in terms of the societal problems it might generate. Anup, you agree to this, that we are going to see a drastic fall in the employment rates? Or is it that you will continue to employ, but just service a lot more
No,
people?
I think it will morph. I think it will morph. In banking, if you see in the last 32 years, what has happened is the people who are sitting in tellers, they are doing other jobs. So I think it will morph. I think the skilling that will be required will be different. I think the monotonous, redundant, similar kind of jobs, they will get replaced by machines. And other kinds of jobs will certainly come up. And there is a lot of human judgment, human relationship type of jobs which are slightly harder to replace. So my sense is it will not go away, it will morph. And world has seen that every time a wave has come, and every time they have seen that there is an extinction happening, extinction doesn't happen. It morphs into something else. So it will morph.
Okay.
I could just give you a hint here. Index fund or actively managed fund is an intent to tell you that even the people like us will start buying machine-generated outcomes and will be happy with that. And we will not seek a delta or alpha on that, which effectively means for the amount of wealth that we are managing today versus amount of wealth that was being managed, number of people did not proportionately grow, while you needed a lot more analysts and a lot more this. I can even say this, that further, double of asset managed, you will need half of the analysts.
Okay. No, certainly, that's true, but it's a little scary as a societal outcome. Neelkant was saying just a few hours ago when he was speaking that even IT companies are not going to get as much business because more can be generated by the same number of people, so they employ less. These were the two largest employing sectors, BFSI and IT. So if it's going to employ less, I'm a little worried about
But Lata, can
generations
I have my
coming out.
See, I grew up in West Bengal, where in my growing up years, we used to have frequent months saying that bank computerization ho raha hai. But the fact is that, look at the amount of jobs that finally computers have created.
Exactly.
And I read a quote somewhere, I forgot who did the quote, saying that, probably we are too scared of change, but every time change has come, when, steam came in, people say that all horsemen will go out of, or carts will go out of business. But steam created more jobs than we could imagine. Similarly, computers created more jobs than we can imagine, right? Similarly, I do believe that the same will play out here. Just we do not have the imagination to think about the jobs it will create.
Yeah.
I agree with that. I think it's too early to paint a rise of the machines and Skynet kind of scenario. Society evolves, and as society evolves, the kind of jobs that we see in future cannot be imagined today. For example, all 4 or 5 of us sitting here, the jobs that we do were probably not really happening in, say, 30 or 40 years ago. So society will evolve, economy will take a different shape, and new jobs will come up.
Well, we do hope so for the sake of all our children and succeeding generations. Just a final thought on, what do you think is the problem of hallucination? After all, AI hallucination seems to be, a big issue. Do you think that we have to wait for these results to come? It's not as if it's round the corner. Maybe it is not even 24 months away. The chart that Neelkant drew, he saw the best benefits coming probably 10 years from now. What's your sense?
So hallucination is a very sort of simply put, if my mind is trained on something and you force me to give inference on something else on my mind is not trained and I am a confident person, I will just make it up and hallucinate. Same thing happens on the machine. You train it on a particular thing and you force them to give inference on something else and they are confident. And they just do it, it will look logically right, but they will be patently hallucinating.
No,
So in the human mind, it is delusion, it is hallucination. See, finally, if we say AI, machine learning, Gen AI, they're just trying to mimic human mind.
Yes.
At this point of time and becoming better because the compute power is more, processing power is more, it's becoming better. So hallucination has happened by human minds for long. Machines, it is much more prone to hallucination because of the very high compute power, and they will just hallucinate if they are not trained on that data.
Okay, Vijay, I just wanted to ask you, this fascinating world that all of you all are drawing up, where, due diligence will be much better, where customers, satisfaction is going to be much higher. How far are we away from it?
This is let's say, smartphone revolution in 2010-11, that kind of time. So we are like at least 5-7 years away when the practicality will come. That is why somebody can say material benefit will show up after 10 years. So if you are in 3G launch days of 2011 and you've seen the smartphone device and you're like, whoa, this is going to be in every pocket. The computer in every pocket will revolutionize the world. You saw what happened, but we are at a 2011 and 12.
Okay, that's not very far. We are 1 minute above time. Just one more question. Are we into a complete branchless financial system, or do you think branches will be needed?
No, we are not in a branchless financial system.
Okay, all right. You would want to agree or disagree?
No, completely agree. I think the requirement today is that of a phygital system. You have to have a physical infrastructure as well as digital infrastructure. That's what customers want. And the engagement that we see in bank branches today is very significant, in addition to the digital engagement that we see, not in lieu of.
So we are still in the phygital world. Okay, thank you very much, gentlemen. You'll have drawn up a fascinating world. And let's meet after 24 months, 36 months, and probably 10 years to see whether we are living in a very different world. I think 10 years, I take your point. We'll be in a very different world.
Thank you.
Can we have some questions?
We have 2 minutes up.
Yeah.
At your own risk, you all can ask questions. The more questions you ask, the faster you'll get home because traffic will be less in BKC.
Thank you very much for the amazing panel discussion that we had. It was about customer engagement, but we touched upon a lot of topics, including data privacy. And yes, there was quite a lengthy discussion on it, but I do want to touch upon one point, and as industry leaders, right, this is a question for all 4 of you. Yes, data privacy is necessary for an individual. Yes, you guys need the data to take the decisions that you do. Without the data that you capture through apps, a lot of your decisioning models will collapse. But at the same time, right, are you willing to ensure that the data that you take is used only for those specific decision making and not used to create biases against your customers and to make more profit for you guys at the cost of the customer? That's a question for all 4 of you. Thank you.
I mean, can you do it? Answer is yes. Will companies do it? Maybe. Will some companies not do it? For sure.
I think the test for that will be when one of them is taken to court, and then we will know how things pan out.
I don't have to tell you. And many of you know, you switch off the phone when you don't want the location to be tracked. Any of you? I just want to tell you that offline it keeps the data and it syncs up online. So maybe you did not even use the GPS, but Android carries that. So now, why are we talking this kind of trick question? Is that a trick question?
Hi.
We'll take one more, and then in the interest of the others, we will have to let go. So
Hi, good evening. My name is Prithvish. Very interesting session. Just one question. What do you all think when the guardrails of an AI model is going to be monitored, set up and monitored rather, by AI itself? I mean, what challenges do you foresee and mitigants, please?
Guardrail to avoid what?
Guardrails of any AI model. I mean, you need to have boundaries.
Guardrail to avoid what? Like trains don't get in the town is a guardrail. Like accidents don't happen is a guardrail. What is the AI guardrail going to be used for?
I mean, I would say...
He's talking about an AI regulatory authority.
Huh?
AI regulatory authority or something like that.
For the anticipated and the unanticipated challenges or misuse of AI, we need guardrails. Now, will those guardrails be AI generated and managed?
No. The computers can be utilized to do many things, and none of the guardrails to misuse the guns were used. Guns can protect, guns can kill. The guardrails are licenses. The AI machines will be the powerhouse that people own. They will use them for benefit or for against. That will happen. I mean, nuclear fusion and fission, you know, the process that I'm quoting,
right,
are like, what kind of guardrails are we putting? So, I mean, these guardrails are placebo, make yourself feel good kind of things that are done to give world comfort. But what kind of guardrail are we talking about?
Thanks for the frank answer. Thanks.
Yeah. Okay.
There is just one question here. Do you make any machine to fail? Any AI machine? Yes or no?
Say again?
would you make a machine, AI machine, to fail or no?
Fail?
Yeah.
Why would
So nobody makes a machine to fail.
Human fail.
That is the same answer for your question about why so many bank customers are defaulting. It is not that the AI is not giving you a right result. AI is always giving you a good result. But why are you taking the risks and giving out so much to so many customers which
Well,
are
that's what
defaulting?
he answered. That,
It is not. I'll tell you why
the design.
it was not answered. The answer is because when you take a business decision, a businessman can even give out a loan on a loss.
Yeah, that's fine.
Loss-making
Oh,
loan.
yeah,
So
obviously.
there may be, when he's making a decision on any kind of default, he's not intently going on default.
Bang
to some
on,
extent-
everybody agrees.
But he's not making intention, he's not financing intentionally.
The cars don't accident,
He's
the driver
still
accident.
financing.
Look,
Any,
cars,
any financer still finances because he still has the due diligence.
I think we should take this.
He has the due diligence.
Yeah. Can we take this off
Yes.
stage? Thank
Okay,
you very
fine,
much.
fine.
Thank you very
gentlemen.
much.
Most
Thank you.
fascinating.
Oh my God, ladies and gentlemen, this esteemed panel deserves a very big round of applause, including Ms. Venkatesh. Thank you for sharing your perspectives on leveraging AI to drive business outcomes. I would now request Ms. Kavita Jagtiani, Chief Marketing Officer, L&T Finance, to kindly make her way towards the stage to felicitate these brilliant minds with us. Come on, I think this one you have to keep clapping for. Keep the applause going, ladies and gentlemen. Once again, I would like to thank all the brilliant minds that were just up on stage for a brilliant discussion. And now, ladies and gentlemen, yet another big surprise awaits all of you. To make this announcement, I would like to ask Mr. Sudipta Roy, Managing Director and CEO of L&T Finance, to kindly remain on stage. And I would like to invite Dr. Debarag Banerjee, Chief AI and Data Officer of L&T Finance. Over to you, gentlemen.
No, I thought we will keep the best for the last. So there is a, can we have the presentation on stage? Yeah. So Debarag, so we are completing 30 years. L&T Finance just completed 30 years. As part of our 30 years celebration, obviously of which RAISE is a part, we thought that we will also create an open problem for the industry to solve. A very hard problem, but an open problem for the industry to solve. And if you're able to solve this problem, this will be transformational not only for our business, but for many businesses in the country as well. So Devrag, can you quickly take us through this?
Okay. No, I think I have a mic. Here, hold on. Otherwise, there will be echo.
Oh, okay.
Okay. So while we have some of the best AI brands in the country, we definitely don't have all of them. So that's why we are opening up a challenge. And the challenge is about predicting farmers' income at an individual level for the year ahead. The way it works, the motivation behind this is that a big part of the Indian economy rides on the back of farmers. Farm income, however, is inconsistent for several reasons. And things like global warming and rising population are only increasing the stress on the farmers having to produce the best outcome possible. Farms in rural areas also traditionally have been data deficient. And the result of all this is that farmers have a traditionally low access to finance. Now, this produces a gap that just the knowledge of what a farmer is going to earn the next season, the next year, next several years, this makes it difficult for not only us to plan our portfolio, but also at a much broader level. Think at a country level, it is very difficult for the right policies for the country to be set up. So now, like Sudipta said, we are completing our 30-year-old journey, and this is our way of giving back, where we are collating the data of 50,000 farmers. And we are, now of course, the data is completely anonymized. You can't actually identify the farmers. We are not only presenting their historical income for the last 3 years, but we're also providing several explanatory variables, things related to their demography, their location, what kind of characteristics are there in their village, the road density, what kind of soil are they sowing their crops on, what kind of locality and other indicators of their personal property, prosperity levels are there, and also past weather data for the past 3 years of rainfall, access to irrigation, and so on and so forth, as well as alternative indicators of prosperity like the nightlight index. And the other part of farm income is also access to mandis. So we are also giving you the distance from the farm to the market and the past cropping intensities. Now, it is our belief that with all of these data points out there, it should be possible to fit a model to predict next year's farming income. So that is a challenge that we are opening up. If you go to the Pearl Challenge website, it will walk you through the steps of how to participate there. Fairly simple. You register yourself, download the data, and then you can enrich the data and clean it in whatever way you see fit. And then you build your model. And then you predict what would be the farm income of another 10,000 farmers for whom we are giving you the input variables, but not the output. And the way we are going to score the submissions is extremely objective. So we are holding back this unseen data of these 10,000 farmers, and we are going to measure the absolute estimation errors from all of those points, and whoever has the least error would top, and so on and so forth. One little point I want to make here is this is not a very traditional Kaggle type of challenge in the sense that we have a BYOD policy. Bring your own data if you want. Meaning, don't just confine yourself to these 104 variables. If you want to bring in other sources of data that will help your prediction, by all means do so. Just declare it. The logistics of the challenge is 14th April is the Baisakhi festival. By that time, we are going to close the submissions, and then we're going to declare the winners by the 1st of July. And the top 3 teams are going to win these prizes. Gold, silver, and bronze, 50, 20, and 10 lakhs. It's not just the money. It's also, we are going to make a large announcement about them. And of course, we are a company and a team that are always looking for fantastic AI ML talent. So there is that.
Thank you, Debarag, for that.
And that's the QR code for registry.
Yeah, I don't need that. Okay. So thank you so much. That brings us to the end of the inaugural edition of RAISE. We'll be back next year, and hopefully bigger and better. I would like to... And hopefully in the next 1 year, the AI world will have moved much further. And hopefully in the next 1 year, we will have far more interesting examples to share. I'll take this opportunity to thank all the people who have made this possible. First, I'd like to thank all our speakers who have taken valuable time off from their very busy schedules to come and grace this occasion and share their thoughts. And, oh boy, I think it was quite good. I think, I was sitting here almost throughout the day, and I didn't feel bored for a single moment. And we had 2 tracks, actually. We had one main track, and then we had a technical track. And, we had both the tracks well attended. I'd like to thank the Group Executive Council of L&T Finance for their participation, guidance, and encouragement. At many times, we felt slightly despondent and hopeless as to whether we'll be able to pull this off. But the fact is that, their participation and encouragement always kept us going on. Specifically, Chief Marketing Officer Kavita Jagtiani and her team for their amazing contribution in marketing. See, I had to write everything down because I don't know whether I forget the names. So, Nileshri and the corporate communications team as well for a very good industry corporate communications connect. Dr. Debarag Banerjee, Chief AI and Data Officer, and his team for generating ideas for discussion, curating the content, preparing the demos, and last but not the least, our Chief Digital Officer, Ramesh Aithal, our Head of Application Engineering, Mr. Dhananjay Singh and his team, and also Sam, for making sure that most of the demos that you see there actually see the light of the day before the event, so that we are able to show things that have already gone into production. Our facilities head, Colonel Vijay Bhabe, and his amazing team. Frankly, this is the team that was the entire sort of muscle, bone, skeleton of this entire event, right? Without them, which would not have been possible. They really did the maximum heavy lifting. And coming on back of a very well-attended Investor Day yesterday, to pull that off in 2 successive days in succession, hats off to you, Colonel Bhave and your team. Our investor relations team, Karthik, Charmi, Pratik, under the able guidance of Sachin Joshi. Thank you so much. Yesterday's investor relation event was very well attended, and today also many of our investors came. So thank you so much for the heavy lifting that went on for the last 5 or 6 months. Specifically, I would like to mention Charmi, for example. I think she was a one-woman Superman, right? So, and apart from a couple of people in my office. Qazi Zaman, our investor relations advisor, always thank you for your sagacious advice. There you go, Qazi. the Digital Fifth team, Samir and Shrikant, and for all your guidance and all your support and all your knowledge. The entire Geo World Center team and the Showbiz team for helping us execute this. I would say now that we are on the end relatively flawlessly. We extended a bit of time, but as long as the content is good, time is tolerable, right? And last but not the least, my office, Radhika, Siddharth, Ayushi, Ninant, Shubhanshu, thank you for bearing with me for the last 4 or 5 months and continuous meetings even on Saturdays and Sundays. And thank you so much. Inadvertently, if I forget, okay, one team obviously I need to mention, which is the entire Amazon and the partnership team, Priya and team. Again, thank you for pulling that off exactly on dot, on time, and the entire partnership with Amazon. Apart from this, if I've inadvertently missed anyone, I hope, I am able to thank you, whoever has been involved in every small bit of way in this particular event. I'd also like to thank the business teams, because the business teams toiled a lot for our investor relations meetings, as well as for many of their partners who came in for RAISE today as well, and trying to facilitate their attendance for RAISE as well. Overall, I think I would like to thank the entire L&T Finance family. Each and every one of you have participated in your own way and given us this extremely sort of well-attended event that we are genuinely proud of. And I'm hopeful that next year, with all your help again, we'll make it bigger and better. Thank you so much. Have a good night. Last but not the least, thank you to you also. Sorry, I would have been very rude of me not to mention you, but very, very well executed. Thank you so much.
Thank you so much, Mr. Roy. Your words mean a lot. Ladies and gentlemen, on behalf of L&T Finance, I would once again like to thank each and every one of you for being here today, all of our speakers, the panelists, and the participants. Let us continue to build on today's momentum and work towards a brighter and more innovative future. Before we step out of this room, I want you all to give a big round of applause because you have been an amazing audience. Once again, I'm Swasti Kapoor signing off, wishing you all a wonderful evening ahead. Thank you.